cheap energy, but we could have cheaper energy too if we were willing to buy sanctioned Russian oil.
What about Canada? We've got a bit of a rift there lately, and there's different accounts between you and Prime Minister Mark Carney about that call this week post Davos with President Trump. He says that he dug in and reinforced the message. You said that he walked it back.
I was on the call. Prime Minister Carney, in my investment career, I've seen what happens when a technocrat tries to pivot and become a politician. Never really works out well. So I would just encourage Prime Minister Carney to do what he thinks is best for the Canadian people, not his own virtue signaling, because we do have a USMCA negotiation coming up. And he rose to power on an anti-American, anti-Trump message. And that's not a great place to be when you're...
These are threats straight to Carney from Besant here. So Besant's been talking to Sarah Eisen. Some headlines we're getting here. Up to the Fed on what they'll do on rates. Hopes that they'll have an open mind. No comment, but we have a strong dollar policy when it comes to the yen. And Besant does tell us that we will not intervene in the yen. So that is a little bit of news coming out of this. No yen intervention. So we'll write that down. Another thing, well, let's see what else we have here. Not intervening in the currency markets. Then we have always have a strong dollar policy, which is exactly the opposite that Trump said yesterday. So he's trying to walk back some of this Trump weakening of the dollar talk.
Become like they were last time, and they don't care. Like they think this is a way to stop President Trump.
They're popping into something in the mood of the country when it comes to the funding of ICE.
Again, President Trump has brought down the temperature on the situation. He's in constant contact, and he is urging them not to shut down the government. And again, that much of what happened during the shutdown, or some of what happened during the shutdown, that gets pushed into this quarter. But especially on the service side, when the government shut down, that never comes back. So there's a big permanent loss. I hope the Democrats won't do that again.
Are you hearing from business leaders on Minnesota and what's going on there? They've been a little reluctant to speak out, but we are seeing them communicate with their employees about the situations. What do you hear?
I haven't heard from any business leaders on it.
Do you see any potential economic fallout around this if we see pockets of workers, immigrants, reluctant to go to work, that sort of thing?
Well, what I can tell you is that we've seen about 2.5 million illegal aliens, either through voluntary deportation or ICE deportations, leave the workforce. And
right.
One of the things that no one believed would happen was we're seeing the low-end housing or low-end rents go down. So affordability, part of the affordability crisis was letting in 10, 20 million new people who all needed a place to live. So what we are seeing is better affordability.
Yeah, on the affordability.
Well, rents have been falling really since COVID. And it's been a while for CPI to actually recognize that. So I think in fairness, they're trying to take credit for rents falling very quickly, potentially even prematurely.
Trying to get Wall Street out of the housing market, capping credit card rates.
Right.
As more populist, less pro-business measures.
Well, again, the business leaders always want everything all the time. This administration, if we take the big banks or all banks, at Treasury, at the three regulators, controller of the currency, the Fed, FDIC, we've been very pro safe, sound, and smart deregulation. They got record profits. The stocks are at a record high. And then they get upset when we want to examine the credit card business. The President Trump has said that Obamacare is really just a subsidy for the insurance companies. All we did was saying, we're not raising the amounts that we're paying to these healthcare providers who have gouged the government and not provided great service to the American people.
So you're gonna stick with these policies. A lot of people think that the credit card one can't ultimately pass.
Again, sir, what we've seen is in the old days, you used to compete on APR, the annual financing rate. Now you compete on benefits on rewards, and the benefits and the rewards go mostly to upper end clients. So why not pull down the benefits and the rewards a little and have a look at the rates? Because before the GFC, the average spread over Fed funds for credit cards was about 1,000 basis points, and now we've just blown that out.
Okay, well, we'll see what happens and where that one goes. But we certainly appreciate the time here at the Trump Account Summit, Secretary Bessent. Thank you.
Yeah, that's Trump Account Summit. That's interesting. All right, anyway, welcome on in, everybody. Happy January 28th. Yes, it is my birthday. Yes, it is coupon code expiration day at meetkevin.com and househack.com for the ReInvestAI or the Alpha membership. Yes, it is Jerome Powell Day. We are expecting a big old pause from the Federal Reserve. And it is Tesla earnings day. And it is potentially going to be the day that we get Rick get announced by Donald Trump to the good old FOMC. Now, we'll see. But it wouldn't surprise me. So here's sort of my outline of this. My outline is the Trump put Rick of BlackRock to the Fed chair. We open private credit to 401ks. BlackRock launches 401k funds. Private credit collapse gets delayed. Fed ultimately bails out 401ks because they don't want to hurt Americans. Debt skyrockets, and BlackRock wins. Interesting. That's my thesis, so I'm going to tweet it. Send it. So anyway, obviously, watching Powell today is going to be really entertaining. We're going to have a lot of juice with Powell's commentary, macro commentary. We'll go through some of the good old news as well. Let's see what we got out there. So what we've got today in the way of news, we've got Amazon layoffs at 16,000. This is a continuation of what we had previously. And we also have the ADP report yesterday. ADP weekly yesterday coming in at 7,750, which is roughly in line with where we have been. The week before that, we were about 8K. And we've kind of been stable around this 8-ish thousand level for probably the last 30 to 45 days, which is good. It's not, the level of boom that we saw a year ago, but it's certainly stabilizing, which is good because we don't want to see that cliff continue to fall. And we're not seeing that right now, which is great. So thanks for the birthday wishes. Yeah, we'll be doing Powell bingo later. We always love the Powell bingo. And let's see what some of your other comments are here. We've got, so how do you make money off of this? Well, I think this Rick thing is actually broadly bullish the market. I think you could raise the bull-bear scale as a result of a Rick appointment or assignment to the Fed, mostly because it's in alignment with Donald Trump's sort of Trump put, like, do anything you can to keep the bubble going. It would probably be healthy to let some of the zombie companies in private credit die. That would be a healthy economy. That would lead to less of a big shock. This really just pumps up the bubble a little bit longer, but it's good in the short term for markets broadly. So let's see what we got here. So we've got shutdown threatens to hit IRS as Trump touts massive tax refunds. Yeah, all this government shutdown talk again. It's sort of exhausting. Like, you think you get it once a year. Now you get it multiple times a year. It's wild. This morning we did some fundamentals on Starbucks in the Alpha report. We'll watch that one closely. A little bit of a barometer for what else is going on over there. Oh, wait, hold on. What is this? I didn't see this one. Starbucks removes limits for private jet use over security concerns. Starbucks is mandating that its CEO use a private jet for all travel, including personal trips, removing the previous restriction that would have required him to reimburse some some travel expenses. Nicole no longer has to pay Starbucks back for professional use. I think they mean personal use of the jet. Previously, he was responsible for charges from personal travel after an annual cap of $250,000. It's a fringe benefit, I guess. Following a security review of risk, Starbucks board of directors made the decision to enhance security. Are people trying to come after the Starbucks CEO? What am I missing here? The company's filing, released late Monday, cites enhanced media attention and the current threat landscape. I gotta close this door. There's so much yapping going on out there. There we go. Can't even hear myself think. The existence of credible threat actors. Wow. So, we know this was after the shooting of the United Health guy. A lot of companies started stepping up security, but why for this guy? I don't know, maybe I'm missing something. Maybe people are, really mad about the Starbucks CEO or something like that. I don't know. I mean, the guy used to work at Chipotle. So he goes, another Schumer shutdown. Yeah, I mean, the last one was, we know, we like to joke Schumer shutdown, but we know that was Trump driven. But let's go. And Starbucks gave up a lot of its humph this morning. You had a nice little 8-9% rally here. And not a surprise to me that it settled back down. Some of that meme movement doesn't really last. But yeah, a little bit surprised about threats to the Starbucks CEO. And then a little weird. Slow trend down on the Qs. Not unusual leading into a Powell event. It'll probably continue to trend down until we get that Rick announcement. We'll see. Do I have any thoughts on charts like SPY to gold ratio? It's concerning to me. Despite the SPY climbing, it has broken below 1.5 to 1.33. Levels coincide with bad market corrections. Yeah, right. So it is concerning. Let's go pull it up. Let's see here. So I'll go to, I can do pairs on TradingView. So let's just get the S&P 500. And then we'll throw in gold. All right, S&P 500. Come on, buddy. Buy gold. I'm going to do like... I want to do spot gold. What's the ticker for spot gold at... Oh, there it is. They have one here. Okay, perfect. So this is what you're talking about. Oh, they actually... Fortunately, this chart just doesn't go back that far, but this is what you're referring to. This is the ratio, just so people can see this. I don't know that what we're seeing in gold right now is such a risk barometer. I think there's more momentum than anything right now. I do think gold will correct. I think 5,000 for gold, 100 for silver. Those are close to the top. I think there'll be a pretty rapid and ugly correction for these. I don't know when. We still have geopolitical threats like the Iran threats that Trump is stepping up. But I think there has been a lot of momentum that has really driven this, gold and silver trade up to levels that are somewhat unusual. Let's pull it over here. 52 and 112 right now. Now, those are remarkable numbers. And the Iran talk really exacerbates that. Plus de-dollarization, the carry trade, right? And then honestly, Rick probably makes it worse too. Because if you look at Rick getting appointed to the Fed, he's just basically a sign of more money printing. I think this country will, like the debt that we have today is going to be a joke compared to how much debt we're going to keep getting into. I don't think politicians are capable of actually paying off the debt. I mean, Clinton pulled it off in the 90s, but that was in part because of the bond vigilantes. But today, they want to fight the bond vigilantes with a Rick assignment to the Fed. Sure, Rick's going to try to manipulate these 10 years down, but it could be some real short-termism. And I think that's why you're seeing the spread between the 10 and the 2 widen a little bit today. You're back at 67. I think if you really want to watch a chart that's concerning, it's you look at the 10-2. And the 10-2 says you still have time. This can move very quickly. The 10-2 getting to about 1.25, that's typically when you're in the recession. So not great, but we'll keep an eye on that. So let me see if my wire cleared yet. I sent my $1 million wire to HouseHack today. I did it during the course member live stream. We put it up on screen. So I want to see if it cleared out yet. I think it's still pending with SoFi because I opened a SoFi account just to mess around over there. Yeah, it's still pending. Come on, folks. Send it, people. Anyway, whenever that goes through, it'll be exciting. I just hope it goes through today because I thought it would be really cool to like invest in HouseHack on my birthday. Anyway, cool. So what else do we have here? So shutdown, taxpayers could face long waits for IRS responses to questions on a slew of complicated tax filings. As odds of a partial government shutdown rose this week after the ICE killing. Annual funding runs out on Friday. Yeah. No, somebody's saying the only way to reverse gold going up is the dollar strengthening. No, that's wrong. Other asset classes, risk assets, real estate. Excuse me. Other asset classes eventually look cheap relative to gold, whether or not the dollar is weakening or there's a de-dollarization trend. And gold will correct back down. Whether or not, we know the dollar is going to get papered away. You don't want to hold the dollar very long. You want to hold assets, shares of corporate ownership, real estate. So that could be stocks or real estate, right? Real assets, real productive assets. The latest move in gold has been fantastic for a lot of people, and I'm not here to dump on it. I think 5K was an easy bag. How much higher I think is trailing stop worthy. At 5K, I'm a big trailing stop fan. Big trailing stop fan. Anybody should have a trailing stop. Probably 15% or something like that, right? And maybe even not that high, probably with gold. Maybe gold or silver, you probably need to be 15%, not personalized advice. Gold, maybe like 8 to 10%. But the dollar will continue to get worthless and gold will have its correction. That's just a matter of time. All right. Yeah, a correction isn't going from 7,000 to 6,400. That's what is that? That's like 8%. No, corrections like what you've seen in history. Historical examples of gold corrections are 40 to 70% declines. Those are your historical connections. And this rally in gold has been much more extreme than any historical rally we've ever had before in gold. So there's an even greater likelihood that gold corrects worse than the historical examples because of that. So we'll see. We'll see. All right, let's see what the info has for us. All right, Microsoft's race to respond to new threats from Anthropic. Let's see here. Anthropic's launch of Cowork, an AI-powered tool that takes over the computer and handles tasks, including through Microsoft Office apps to Slack. Recent days, competitor to 365. Wow. Suite of AI features for Microsoft apps that aims to automate tasks such as generating documents or organizing user files. Really? Has anybody tried organizing files yet? Multiple 365 Copilot product leaders voiced concerns that Cowork's ability to use apps to generate Excel spreadsheet or PowerPoint presentations could be pulling ahead of what 365 Copilot can do. Wow. Wow, that's impressive. That's Treasury Secretary Besant. Rubio, I'm just checking here. What's Rubio saying? Venezuela, very respectful timeline. Okay, diplomatic pressures. Okay, blah, blah, blah. All right. If IPO, I use 10K and buy it. Who are you talking about, Race? Anthropic? All right. Several divisions at Microsoft are moving quickly to develop AI prototypes that resemble co-work. Ironically, Anthropic's AI model powers some of these prototypes. That is interesting. They're kicking butt. Mirrors how Microsoft used OpenAI to develop 360 Copilot features. Well, yeah. I mean, that's old news. Like, Microsoft isn't developing these LLMs. They're just borrowing from the others. Co-work, strength is that it can take action across multiple applications in a way a human would. It can use a folder full of receipt images to generate an Excel spreadsheet. Yeah, I've actually seen some videos on this. I think it's great. It can search and rename hundreds of files stored on a computer. That's great. That's so good for just like bookkeeping and, accounting. And what will happen is these sort of products will get integrated into things like, Intuit QuickBooks. I think it's fantastic. So this is DocuSign dying, is it? Zoom invested in Anthropic. Yeah, I think back in 23, they invested in Anthropic. It's locked up money, but yeah, some people are investing in Zoom as a proxy to get their hands on Anthropic exposure. Zoom is still a $28 billion business. Kind of remarkable. How's DocuSign holding up? No, it was Zoom that has the Anthropic exposure. Yeah, DocuSign is really suffering, huh? This is like UiPath. UI supports all interface. Right. Yeah, UiPath is also an agentic generator that's a public company. And so they can pull from many different models, whether it's OpenAI or whatever, and you could build your agents. They're not super user-friendly, right? They're a little bit harder. Like, you have to really be a developer to use the UiPath tools. But they're using this. A lot of healthcare companies are using UiPath to build out these agentic models. UiPath has been, as I describe it, an anchor dragging along the bottom of the ocean for a very long time, since its 2021 crash. I actually think in this region, it's relatively cheap. Please let HouseHack be a $28 billion company one day. Oh, that's the goal. Somebody says, bullish today or fake out? Well, I actually think that the market will decline through the Powell speech. And then I think Donald Trump will try to steal the show by announcing Rick. And I do think that Rick's announcement will be bullish for the market. So in our alpha report this morning, I'm going to say it here for those of you listening. I probably shouldn't. But in my alpha report this morning, the strategy is wait till 627. Said it this morning really clearly. I go, don't bet on this market going to all-time highs before Powell. Wait for Powell's speech. Be patient. 627 is the easier up, right? Obviously, you have to confirm it, so you have to bounce there. But anyway, that was my thesis this morning. Remember, you can be part of that every single morning. You don't even have to watch the video. You can just read the alpha report every single morning at meetkevin.com. You get all the courses. People write it off on their taxes. You get the property management course, the real estate course, the YouTube course, the sales course for sales and negotiation skills, entities, insurance, all the trade alerts, the fundamental analysis we do every single morning, the alpha. Like, I think it's a bargain for what you could get at meetkevin.com. I actually think it's a really good deal. And you could use coupon code BDAY today. But anyway, let's keep going with this. So Microsoft has previously previewed features in similar versions of Copilot tools, but it doesn't currently offer a single tool capable of all such tasks. Co-work is an experimental tool, not enterprise ready. Right. That's also normal. Carries unique risks regarding data security. Yeah, this is also true. Did you know that if you use a Google Enterprise account, they say they won't use your data for training. And if you pay for, I think it's OpenAI Pro, they won't use your data for training. I think that's very interesting. Somebody says, any dating advice in the course? No, sadly not. Sadly not. I'm not a dating man. I have never dated in my life, unless you count Lauren. But I don't really consider that dating. We never went on dates. We're like, hey, want to be boyfriend, girlfriend? Like, sure. Like, all right. So we kind of skipped all that stuff. Anyway, Microsoft executives, product leaders, recently have discussed Anthropic's new technology, dubbed the AI Accelerator. Shared ideas for how Microsoft can develop products. And this is so great for us as users, right? Like when all these companies compete against each other, we just get better products. Satya Nadella said he started testing Claudebot, open source AI product powered by these Anthropic models to automate tasks. Claudebot can organize an email inbox, rename and sort a number of files, book online travel reservations. Claudebot's creator said on Tuesday he had renamed the product Moltbot to avoid confusion. It'll still be called Claudebot. I honestly, it was like a perfect Trojan horse what he did. Like he's changing the name to not get sued. Oh, it's hilarious. Nadella wrote about how he uses Claudebot. Encourage staff to think about developing similar products. Yeah, Moltbot. Microsoft set to report earnings for the December quarter after the close Wednesday. Oh, Microsoft reports today too? Oh my gosh, it's going to be a busy day. You got Tesla earnings, the Fed, oh my gosh, and Meta. Holy smokes, boys and girls. Look at the earnings today. Microsoft, Meta, Tesla, ServiceNow. Oh, man. That's crazy. Cindy says you just married her at first sight. Yeah, basically. Yeah. Wow. All right. It's going to be a day. How much will Trump's foreign policy chaos really hurt him? It doesn't matter. Let's see here. Past political donations. Yeah, because like Nikki Haley and some Democrats, whatever. Fed expected to hold rates. Uh-huh. Oh, wow, what a surprise. Mamdami's looking to raise taxes. But he did say that during the campaign. So, let's see what he's up to. Ramping up pressure on the governor to hike taxes on the richest residents and corporations to send billions more in aid to New York City. A fiscal crisis created by his predecessor. Well, that sounds very Trumpian, doesn't it? Blame the guy before me. That's what they always do. Largest deficits in the recession. These deficits didn't arise by accident. They're the consequence of Eric Adams' fiscal mismanagement. He said aid to the poor and rental assistance funding for the city's homeless have been under budgeted. Well, the government's terrible at distributing money. Yeah. Sign of the times, I guess, huh? All right, let's go over to the FT. So what does the FT have today? Trump warns time is running out. Yes. Donald Trump has warned that time is running out to reach a deal to avert U.S. military action. Right. Well, and Donald Trump does not, like, he is allergic to being considered the taco man. Although I think it is Wing Wednesday at Wingstop. It's not Taco Tuesday today. But anyway, you probably get some kind of action on Friday. Wings would be good today. Maybe we'll have to order some Wingstop. Birthday Wingstop while we listen to Powell, huh? My mother-in-law got 6 offers on her Miami condo the same day Mamdani was elected. People moving to Miami from New York City. Yeah, I think that's hilarious. I actually think prices are going to skyrocket in New York. Like, I want to go, I mean, it's too far for us, but I'd love to go shopping in New York. Brooklyn, upper portions, not necessarily, it doesn't have to be Manhattan, but, anywhere between Brooklyn and, like, Yonkers. Be down. Williamsburg over here, Go shopping over there. Get some duplexes. Maybe go over here towards Yonkers and Bronxville, Greenville. Go out over this way. Not all the way. Where they're like 800K homes. Yeah, here you go. Look, for you. Why is it for me? 3-in-1, $750,000, fully remodeled. Well, that can't be for me. Anyway. Yeah. I like it. I like it a lot. But it's too far. Donnie, 7th Ave. Yeah, I'm going to build a tower on 5th Avenue, actually. We're going to call it the Meat Tower. It's going to be gold and shiny black. Will Bitcoin run after silver tops? Yeah. And why don't you research? I think Rumble makes you pay money to I don't care. If people want to watch my videos, they can come to YouTube and watch them. It's too complicated to go restream to all these different places. Bitcoin has a Michael Saylor problem. That's why I think there's, everything else could go to all-time highs. Gold, stocks, whatever, and Bitcoin isn't. It's because of Saylor. I think the time to buy Bitcoin is when Saylor goes bankrupt. And people are like, oh my gosh, Kevin, you're being so bearish. That's, hyperbolic. That's never going to happen, whatever. I was like, fine. Then I'm never going to buy Bitcoin. I'd consider buying it when Saylor goes bankrupt. That's my POV. Somebody says here, Trump is waiting for the tariff ruling. If ruled illegal, he'll pick Myron for chair, otherwise Waller. No. After hearing Rick, I am U-turning. I got to be clear on this. I am giving up the Waller bet. The reason for that is after the Waller meeting, Trump never talked positively about Waller and then went to go look for another person. And he found Rick. I think that's because Rick is going to do exactly what Trump wants. He's going to pump it, man. The Meat Tower? That's right. The Kevin Meat Tower. Okay. Is this going to be like a Lady Gaga kind of clad tower? So he says, yesterday was the lowest volume day for Tesla in over a year. Can't recall. Well, yeah. Typically and historically, when Tesla's volume plummets, it can actually break out to the upside. But that also depends on historic volatility and how low it is. I don't know how low historic vol is right now, but I can find out. That computer is off. I need to turn it on. Hold on a sec. I don't know why it's off, honestly. I hope I don't actually turn off the wrong computer here. Not that one. This one. There we go. Yeah, I got like 4 computers over here. And all that historic volatility stuff is on my 4th one. Okay. Let's go see. All right, it is up and cooking. We got like all the 5090s and 4090s cooking over here, But anyway, this while I pull this up, this geopolitical stuff I think may create a buy the dip opportunity. I love the geopolitical stuff for buying the dip. I don't like people dying, so I want to be sensitive to that. But I love geopolitical stuff because it's almost always a buy the dip. All right, let's see what we got. So somebody says, "Speak, Kevin's wearing pants." Yeah, have you not been reading the Daily Wealth? Got to read the Daily Wealth, man. The Daily Wealth tells you. I posted a bunch of Instagram stories yesterday, by the way. I encourage you to watch them. I'll give you a quick little sample. All right, let's take a look at the sample. So the sample of Kevin's IG stories. You have Bikini Bottom in Max's fish tank. Not only do we have Bikini Bottom in Max's fish tank, but over here you have SpongeBob, the sponge filter, which I think is kind of funny. I go into the greenhouse, which I think is kind of cool. So you get to see a little bit about our budding marigolds. Those are going to flower soon. You get to see Jack's beanstalk if you want to see that. The moss garden. You get to see the twinsies. Twinsies are always fun. I post every single day. I post stories here at Meet Kevin, so you can kind of see behind the scenes a little bit. There's Summer. There's Violet. That was me yesterday talking about what's it called? The Daily Wealth, and where we post the Daily Wealth. And then you even see little sneak peeks like bringing food to Max while the little kids are freaking out. So you kind of get a little behind the scenes there. I think it's kind of fun. Anyway, we got to get back to work here. But Violet was freaking out. So she's screaming over there. So I bring this kid. He's not feeling his best. Chocolate and grapes. At the same time, we got to go. You can see that we got 3 cribs in this room. We got the little baby attack over here. I try to hide the flashlight by putting my finger over it. It kind of makes it a little funny, like red color. But anyway, I don't know why we came up to that topic. So anyway, let's get back to work. So back to work. We've got running a Truth Social account. President reiterated a massive armada is heading to Iran. They better make a deal. It's moving quickly with great power and enthusiasm. Yes. Oh, that's right. We were going to look at Tesla's volatility. Right. I can't keep this stuff straight. All right. Here we go. Tesla. So Tesla volatility is about mid-range on the 10-day. However, let me zoom out a little bit. If I go to 2020, it's not as low as what we saw by any means in the summer of 24. But volatility has come down and compressed a lot. So I don't know that it's as clear of a setup as what we've seen in the past. But anyway, has also warned that any attack would be greater than the strikes against the 3 Iranian nuclear facilities. Like with Venezuela, the fleet is ready, willing, and able to fulfill its mission. This is basically a threat to the Ayatollah. Imagine if Trump went in there and snatched the Ayatollah in Iran. That'd be pretty wild. Comments have not been enabled for this article. Classic. Somebody says, you have a water fountain in the hallway? I do, yeah. Yeah, we plumbed that in. That water fountain is great. We love that. Any chance of having another millionaire symposium? Well, I appreciate you asking for that. Not this year. We have a lot of work to do with HouseHack. I'm still waiting for my $1 million wire to clear because I sent it, but SoFi is not clearing it. And usually when I send a wire, it sends fast, like from any of our other banks. But no, SoFi's being slow. Yeah. Why they just charged me the wire fee? They were really fast at charging the wire fee. Yeah, still no transaction number. Come on, SoFi. Look at Carvana. Are used cars toast if rates stay paused? Yeah. Carvana is a really interesting one. Why taco is a problem for Europe? Okay, we'll look at that in just a second too. Carvana is a really interesting one because of how they do their purchases. The insiders sell stocks. And then as the insiders sell stock, they buy these Carvana loans. I think it's a giant Ponzi scheme. But maybe it's not. I don't know. But it is very interesting to me. I think this stock has the potential of crashing really, really hard if we get into a recession. Like, to bankruptcy hard. And so I would say I would not touch this stock with a very, very long pole. We're not going to get a rate cut today. No, I'm convinced we're going to be paused today. And Powell will probably tell us that the labor market is stable and there's no reason. There's no reason for the season. No reason for cuts at all. Anyway, because I mentioned me investing in HouseHack, I should just say, if you're still thinking about investing in HouseHack, make sure you read the offering circular. It's still the same round. We opened it up for about 2.5 weeks on January 17th because we closed it on the 31st. and letting some stragglers in, myself included, by the way. And so I'm waiting for my $1 million additional investment to go straight in. That's my money. And so that's still the 5% yield plus upside. You can invest with credit card, ACH, or wire, no fees. Obviously, I recommend wiring. And you get paid monthly through conversion. Yeah, all the details are over here. We're almost done with all of our renovations from Q4, by the way. It was really exciting because we did a lot of renovations at the same time, and so it's nice to see that come to an end. 10-2 yield curve, 67. Still a little distant from 125, but it's going to be something we'll watch. Saw the warning of time is running out. Let's go see what's going on with Taco. Amazon axing. Let's see here. Deutsche Bank offices raided in money laundering probe. Wow. Yep. Investors bet on hot economy heading into elections. Yep. The reality of a world after rupture. What rupture? Let's see here. Wow, aircraft engine prices soar after shortages and booming demand. You know, I will say, is that, I will. The aviation industry is so slow at manufacturing. It's one of the reasons I like Cirrus stock and Embraer, but they are so far behind. It's remarkable. So what do we got with engines? Pratt & Whitney probably. Let's see if they're talking about... Pratt & Whitney, by the way, is a Canadian company. So subject to some new tariffs when not exempt. Aircraft engine values have soared and are likely to remain elevated for the foreseeable future. Yeah, engines are very expensive. Like I remember my Phenom, if I had to put a new engine in, probably cost me around $700,000 each. And they're two. That's freaking nuts, dude. Like, when you gas up on a jet, it's kind of anticlimactic. Like, you push forward on the jet. It's like super loosey-goosey. Like, there's not a lot of resistance. When you gas up on a jet, you can literally, like, count to 3. So you gas up all the way like this. 1, 2, and then you'll hear, ooh, and then you hear it spooling up. It's, like, so slow. But what I think they should do is we should use AI to show exactly how many $20 bills flow out of the back of an aircraft jet engine. Okay, let's do it. Calculate how many 20, or let's just use $1 bills because it'll look more dramatic. Calculate how many $1 bills would fly out of the back of a single Phenom 300E engine. Assume 750 pounds of, actually, you know what, I'm going to go for 900 pounds of fuel burn per hour at, well, that's going to be at lower altitudes and takeoffs. You'll burn a lot less up at 45,000 if you ever even get up there. Calculate how many $1 bills would fly out of the back of a single Phenom 300E engine in a 30-second, or well, they're going to be like 8-second videos, right? In a 8-second video, assume 400 pounds of fuel burn per hour at 450 a gallon. All right. So we'll let the AI run and do that just for the giggles because I think it's going to be entertaining. And then what we'll do is we'll ask it to make a video of that. So it'll be kind of entertaining. But it's pretty stupid. It's pretty dumb. So anyway, Deutsche Bank offices raided in Germany, money laundering probe. So what's going on over here? Frankfurt is searching Deutsche Bank. Foreign companies suspected of money laundering. Are there any foreign companies specifically they're looking at? Oh, Russians. Interesting. The Russians. They're really coming for that. Süddeutsche Zeitung, first reported by the South German newspaper. Let's see what people say in the comments on this one. Not enabled. Oh, come on, Financial Times. We're taking all the fun away. Investors bet on hot economy heading into midterms. All right. Let's see what we got over here. Also, let's see. Okay. Okay. That's good. Investors are betting Trump administration will run the economy hot. I actually believe this as well before midterms. Because if the stock market goes down before midterms, he's going to lose even worse than I think he already is going to lose. It's going to be tight if the stock market's high. String of robust economic data has defied predictions of a slowdown, credit card spending. Sending U.S. credit spreads to the tightest level in a century. Wow. Yeah, that's like full-on risk on, basically, is what this is. Full risk on. Let's see. Dereg, slow rate cuts, exploding growth, AI. The 2-year break-even inflation. Oh, look at the break-even inflation rate. That's interesting. You're actually seeing an increase over here. Now, you're only back to October highs, but some of those lows of expectations have gone away. Interesting. Proportion of investors expecting the economy to strengthen over the next year, as well as expectations of an economic boom, are at the highest level since 2021. Extra stimulus for the economy. Domestic stocks outperform large caps as investors bet on growth. 2-year break-evens have risen in the short term. The Russell has outperformed large caps. Economy sounds great at the moment, but you've got a kindling for something that can be pretty disruptive. Oh, no. Oh, let me see here. That's not that bad. I thought it'd be a lot worse than that. I don't know if this is right. It only says you'd only see $1.34 fly out of the back in an 8-second clip. That's lame. I thought it'd be a lot more dramatic than that. Because in an hour, 900 pounds of fuel, I'm going to do in an hour times, let me do math just to fact check it. I'm going to do $675 divided by 60. I'm going to do 11. No, I'm going to do 11 a minute. I guess that's true. Divided by 60 again, times 8, 1.5. I got $1.50. It got $1.34. I guess that's fair. That's not that bad. All right, it's not as bad as I thought. That's interesting. In 8 seconds, it's only $1.34. 8 seconds. Every minute, it's $11. Right? Divided by 8 times 60 again. Yeah, $11.25 a minute. About 600. Oh, yeah, that's not actually that bad. I thought it'd be a little bit more extreme than that. Now, maybe if you were, a big Boeing commuter plane, it'd be like 5 or 6 times. So you'd see like $5 or $6 come out in an 8-second clip. That'd be interesting. But it's not as bad as I thought. I thought it'd be more dramatic. Q's still slowing down, coming in pre-Powell here. Thank you for the donation there to say happy birthday. Appreciate you. Enjoy your day, my friend, and many more prosperous years ahead. Oh, thank you. Support for Palantir. Let's take a look. Palantir. Well, I've got a gray line right here. This actually looks, it's decent. It's maybe a little high, honestly. Like if I put it, I think it's a little more stable right here at about 161. 161 looks like a better line. I'm going to jot one there because that could be right below a retracement here. But if I go here, that seems to be a little better because I get a hit on the 21st. Couple hits over here. I get a rejection over here and here. They're not the best. But honestly, probably the 200-day moving average. So between 158 and 161, you're kind of right there at support for Palantir. Hood's another one that's been relaxing. Yeah, see, Hood's been coming down to that 100 psychological line. What about a yacht? Oh, a yacht's not as bad as a jet. Can Canadians invest in your company as well? Yeah, they can. No, still no. Trying to find if this Mercury or SoFi wire is going to go through. Gotta be on my birthday, bro. Anyway. All right. No problem. No problem. Tesla earnings day. Symbiotics slipping. It has a really hard time breaking out of 64, by the way. Staying above that. It has a really hard time doing that. Regularly loses this spot. All right. What else is in the news? So, we were talking about Copilot, Claude Anthropic recently hiked its revenue forecast thanks to Claude Code. Right, but I think they're delaying their profitability, we saw. Let's take a look at that. Let's see here. Yeah, here. When it'll go cash flow positive has been delayed. It is expecting to grow revenue dramatically. Delayed cash flow positive to 2028, a year later than previous projections. Yeah, I mean, because they're investing a lot at market share. That's what this is. It's a big competition for market share. Somebody says Trump is yapping. Where's Trump yapping? I'm watching the headlines. Tariffs on cars priced 15 to 35,000 euros to be cut 35%. Cars priced over 35,000 euros to be priced at 30%. Oh, that's India. I don't see Trump. I don't see any Trump headlines. All right, what else? New projections appear to reflect Anthropic's recent success in Claude Code. Yeah. Up and to the right, baby. All the projections. Give me all the projections. All right. What do they say about margins over here? Anthropic calculates gross margins by subtracting inference costs and other costs of selling its products. Inference costs are expected to be $7 billion this year, $16 billion next. That's about 36 and 71% higher than forecast. So the inference costs are kicking their butt. Yeah, those were India. India is slashing tariffs with the Europeans. Anthropic. For instance, the 40% gross margin figure was 10% lower than what it had previously projected. The costs of running inference are higher than expected. I don't know if these companies are ever going to make it to profitability, and they'll probably end up getting absorbed by rich companies like Amazon, Microsoft, Apple. Apple will end up just buying a company like this. OpenAI, in contrast, projected last summer its inference cost would be $13 billion. That was last year's expectation. Except then you had $12 billion of expenses in one quarter per the Microsoft filings, which suggests that... Oh, but that's for this year. But that potentially suggests that their expenses are even way higher than they projected previously. Cash flow delays. Yeah, none of this is news. None of this is news. All right. Oh, yeah. Storing data, invest in Western Digital, SanDisk. SanDisk has, their growth is phenomenal. Not just in the stock, but if you actually look at the fundamentals, it's really good. It is typically late cycle in a capex build out, but they have done very, very well because, memory and storage are mega commodities. There's nothing massively differentiatable about, one person's memory stick or solid state drive or hard disk drive than somebody else's. New SPAC boom is the last SPAC boom. Oh no. I didn't know we were going through another SPAC boom. That's interesting. I think Boxable is thinking about there it is. Hold on one second. I think Boxable is thinking about doing a SPAC. I don't know. For some reason, I have to log into the stupid TV again. So I'm going to do that really quick. But I think Boxable's thinking about SPACing. If you know anything about Boxable and you haven't seen my video on Boxable, I've done 2 videos on them. I highly recommend you watch them. They are very, very mad at me for speaking the truth. Because every YouTuber that's ever gone there before, from my awareness, I don't know who's been there, but, has kind of gotten the runaround from them. And I think they kind of just take advantage of people. PUYO. But they did not like my video on them at all. Anyway, they're rumored to SPAC. There we go, connected. They're rumored to SPAC and potentially go public. It'll be the biggest cash out we've ever seen. All right. I wonder if they talk about that in this article. There we go. All right. Now that's connected again. Good. So let's see what companies they're talking about here. Let's see. Yeah, there, got it up. Yeah, no Trump over here. See, I was trying to get the Doomers up just to see if see what they're talking about quickly.
Thank you very much. I alluded to it just then. Shares of Texas Instruments
because he's the Tesla guy as well. Ed Ludlow over here.
For the first quarter, signaling that customers have worked through inventory and are returning for chips, analog chips. Multiple analysts are raising price targets, calling the outlook encouraging. Bloomberg's Ian King is here. Analog chips.
Anything for chips, baby. Anything. All right, so what do we got here? Why wait for the mega AI IPOs expected later this year when you can invest in a nuclear fusion company or MAGA crypto bank? Aha. These companies are not ready for IPO names that are coming to the market via SPAC. SPACs are back. Wow. Among the latest in the past few weeks, General Fusion, one of the small companies aiming to produce energy in the same way the sun does, that would merge with a SPAC. It is nowhere close to producing power, even though it has a 20-year track record of research. Yeah, we have a 20-year track record of researching. Wow. Do you guys make any money? No. The deal would make General Fusion the first publicly traded company in the industry. This is to contrast with the other form of nuclear power that like Oklo does. SPAC boom turned to bust in 22. SEC tried to tame in the excess. Biggest change was to tighten rules about what companies could say about their growth prospects. Oh yeah, remember the SPAC pitch decks? Those things were such a fraud. Those were such a scam. New rules hardly matter to speculative companies. Success so far in the future that it would be hard to go after companies that don't achieve what they promise. Imagine a regular 2035 saying General Fusion had violated rules because it hadn't achieved commercial scale fusion. Right. I mean, they're not going to do that. Follow up on the SPACs. Company is doing a deal to raise cash for its development. That's always what it is. They go public to raise money. Or to exit. Wipe the memory of the last SPAC boom. Here's how SPAC works. No, we don't want to talk about how it works. That's interesting. I do find it fascinating that we're about to go into a SPAC boom again. Because that was like the final stage in 2021 of the boom. C3AI in talks to merge with startup Automation Anywhere. C3AI talks to... And I hate the fundamentals of C3AI, but anyway. Struggled for several years. Market cap has collapsed. Automation Anywhere, a rival to UiPath. There it is. There it is. Path, I think, is money. That's interesting. They're trying to, because UiPath is sort of like the Claude before the Claude for more like institutional level, programmed automation. But if the deal materializes, Automation Anywhere would buy C3AI and go public as a result. Interesting. Combined could give Automation AI more automation capabilities. Yeah, I don't know about that. Usually you get these mergers. You take like two kind of lame companies and merge them together, and they don't usually do any better. All right, what else do we have here? What went wrong with OpenAI's year of agents? Oh no. Oh yeah, how's Nvidia doing after the China approval? Symbiotic keeps falling. Nvidia, it's back to the 190s. That's nice. And then how about the Qs? Still holding on to 40 bips. Stable. But, you know, you're going to see more of that decline going into Powell, is my guess. All right. OpenAI's GPT product launched in July for building stuff didn't meet some internal goals, including being used by 10% of weekly users. ChatGPT agent reached 4 million paying users. That was about 11% at the time. But most people without paying. It's the thing, man. A lot of these bots are so good. It's like you almost don't have to pay. Like the free versions are already pretty dang good. 95% of people don't pay for AI. Let's see here. Claude. Anthropic's generalized AI work. Claude Cowork. Atlas browser. Oh, yeah. With the security of vulnerabilities, this is a terrible idea to use the Atlas browser. Not mature of a browser yet. Too many 0 days. No thanks. Apple CEO encourages de-escalation after the ICE shooting. SoftBank said to invest $30 billion in OpenAI. Wow. The circle keeps going, huh? Let's take a look at this. Talks. The Wall Street Journal reported. Oh, let's go look at the journal report then. SoftBank in talks to invest up to $30 billion more in OpenAI. The Japanese conglomerate is further exploring the investment as part of the startup's efforts to raise $100 billion. Wow. Yeah, they need the money because they're burning it all. $30 billion more into OpenAI, seeking up to $100 billion in capital, $830 billion valuation. It's insane, man. How do you keep throwing in money at these high levels? Breaking down Elon Musk's ongoing lawsuit against OpenAI. Elon Musk is suing OpenAI in federal court, alleging that the AI giant manipulated him into thinking he was contributing tens of millions of dollars to help launch a nonprofit. That's the allegation. Musk is the richest man in the world, is seeking between 79 to $134 billion in damages. So somewhere around like 10 to 15% is what he's going for. That's interesting. It's a big ask. Okay. Let's see here. Judge ruled that the case will go to trial. Documents of the case have recently been unsealed, detailing the tangled web. Ooh. That could be interesting. Okay. Musk stepped down from the board in 2018, giving the money to OpenAI, but stopped giving money to the company in 2020. Company is now raising $100 billion in fundraising. Musk accuses Microsoft of knowingly aiding and abetting OpenAI while benefiting from Musk's donations. I mean, there's no doubt that OpenAI benefited from his donations. 2016, Musk told Altman that he should try to pursue a cloud computing deal with Microsoft rather than Amazon, in part because he prefers Nadella over Bezos. I think Jeff Bezos is a bit of a tool and Satya is not. Wow. Nice. I didn't call Jeff because, you know, he's a bit of a... I'm not sure he likes me because he's got a rocket company that competes with mine. What does OpenAI say? truth Elon left out in a post. OpenAI said that Musk had agreed that a for-profit structure would be the next phase for the company. But those talks fell apart after the founders refused Musk's request for full control of the venture. Musk really likes control. He likes control. I don't blame it. I get it. You know, you want to implement your vision, not be a puppet. So I get that. Musk is cherry picking. Elon Musk's latest variant of his lawsuit is his fourth attempt at these particular claims. What other evidence has been released? We've been thinking we should just flip to for-profit. Making the money for us sounds great and all. Whatever. I mean, there weren't really details in here. All right. Another nice surprise for the U.S. economy. America's immigration and labor shock. Let's see here. The deflation doom loop trapping China's economy. Right. Deflation's bad. Really leads to a lack of growth. Because people stop spending. All right. Intel to match federal contributions under Trump account? Hold on, what is this?
Maker. And it's also interesting, Ed, that in December, the company hired Robin Colwell from the White House to serve as its next head of government affairs here in Washington. So Intel is, in a way, really aligning with this initiative, the Trump accounts, which are designed to encourage saving and investment by parents for young children over the next several years to try to get people not only invested in the stock market, but saving over the long haul. And in this way, Intel is trying to get on the right side of the story with the administration in another one of the president's priorities.
Bloomberg's Mike Shepard, thank you very much. Karen.
It's time now for Talking Tech, Ed. First up, Elon Musk has suggested the timing of SpaceX's possible blockbuster IPO could come in mid-June. As according to a report in the Financial Times, the owner of the rocket maker, of course, is reported to be targeting the IPO for when Jupiter and Venus will appear very close together in the sky. Musk's 55th birthday is also in June. Plus, Snap has created a subsidiary dedicated to augmented reality glasses, SPACs. Now, the unit is intended to give the smart eyewear team more independence, but allow it to raise some money. A spokesperson confirmed Snap will launch the AR glasses regardless of external investment. And Apple CEO Tim Cook has joined other tech leaders weighing in.
I'm a big fan of the glass. How's Warby Parker doing these days? Still a big fan of Warby as a glasses co. I have not invested in Warby, but I've been watching them. You know, they've had a nice little uptrend. They've got this line right here that they've now bounced off like 4 or 5 times. And that suggests, you know, if you see Warby again at $17, looks like a good technical buy location. But it keeps getting hyped up on these deals with like Google or whatever for glasses. Big fan. I'm a big fan of the Meta glasses. Remember, follow me on Instagram. You can see my Meta glasses videos. All right. Yeah, Qs keep going down. That's not a surprise. That was also in the Alpha report. Remember, coupon code, link below. Coupon B-Day expires today. It's my birthday. Gotta use the coupon. Everybody wins. Republicans are waking up to the awful tactics in Minneapolis. Well, it's bad training. You know, I think that's what you could wrap it up into, and it's sad, but... All right. Venezuela's a rocky road to diplomacy, or democracy, rather. What else do we have here? Can Carney survive the new world? Ryanair might be the world's most successful airline. Why AI won't wipe out white-collar jobs? Oh, let's see what their argument is. Ugh, I knew this would happen. phone call verification while I'm live from SoFi. It only took him an hour to call. Well, let's give him a little jingle. Oh, Trump. How convenient.
Involved in a program like this, we are expecting a number of announcements from corporates and philanthropists about joining this effort. And you just heard from Ted Cruz that he says it's a bipartisan effort as well. But it is now law, and tax filing season has begun. And so they're encouraging people to get out there and to check this for their kids.
Yeah, trying to make it as easy as possible, which is commendable. Nice little shout out to Nicki Minaj in the house as well, Sarah. When we
She's
come
here
back
today, yes.
Evercore's first reaction to Starbucks.
And other AI stakes. Now, that being said, it's probably worth pointing out that it's as much as $30 billion as opposed to $30 billion itself. So we'll see exactly where he lands there. But I mean, let's face it, like SoftBank has already invested tens of billions of dollars in OpenAI. So what's another $30 billion at this point, right?
Lynn, there are lots of people in my world asking equally if OpenAI is good for it in all their capital commitments for infrastructure and whether SoftBank has up to $30 billion. But the main thrust of it is that this is part of a round that we know is happening, right? OpenAI wants to raise money. What do we know about its target raise overall and the valuation it wants to hit, irrespective of how much SoftBank contributes to that?
That's exactly right. And we've been reporting on this funding round that OpenAI has been orchestrating over the past several months for a while now. Obviously, SoftBank isn't the only name that is intended to invest in this round. We very recently broke the news that OpenAI has been in conversations with very big name investors in the Middle East. And so it's possible that we see some sovereign wealth money wind up in this round. Now, in terms of like what they're targeting valuation wise, very difficult to say. It's even like difficult to say exactly how much they may end up raising in the end. The ranges that you've seen out there from us, from others in the media, are kind of all over the place. It's like anywhere from $750 billion to $850 billion, depending on where investors in OpenAI decide to land in the end. So it's very much an active round, and we continue to try to keep tabs of exactly where it lands.
What's interesting is how SoftBank has been very focused on the AI play, but also selling down an NVIDIA to be able to loosen up some cash. They made a purchase of Ampere, for example, in the chips area. Are they deemed a winner in the AI space right now?
Well, I think it's probably two different questions that you're looking to unpack there. One is, what does SoftBank selling down its stake in NVIDIA really mean? And I think that for a moment, people were making the mistake of interpreting that as, ooh, SoftBank sees that it's getting like way over its skis and it's not really, you know, all in on AI, when in fact what it was really doing is trying to raise enough money to make even more bets on AI. Right. Your other question, though, was like, is SoftBank a winner in AI? I mean, is anybody a winner in AI? I think that the concerns over an AI bubble are still relevant. We saw ASML, though, report some strong bookings, so.
Bloomberg's Lynn Dunn, great reporting. Thank you so much. Now, coming up, investors await Microsoft earnings, setting their sights on OpenAI's impact on Microsoft's cloud computing platform. Wolf Research's Alex Zukin joins us next. This is Bloomberg Tech.
No rush to get there. That does not sit well with President Trump.
He's too late. Jerome, too late. Powell, he's too late. He wasn't too late before the Democrats on the election, then he was too early. But he wants to keep rates as high as possible. Despite that, we've driven rates down.
So the president in the final stages to replace Fed Chairman Jerome Powell. He has 4 candidates on that list. Now, last year, the president talked about having a decision in early January. The Treasury Secretary says that now will be by the end of January.
Okay, look, I get it, but these freaking, like, phone calls to verify wires, they're annoying. Like, I go to send the wire, oh, take a picture of your ID, selfie, and all that. Fine. Like, I already two-factored into the SoFi account. I already text authorized as well, because they do like the passkey and the phone. Then you upload the photos of your ID. Then you take a selfie with yourself. Then they call you and leave you a voicemail and tell you to do the same shit all over again. So now it's been 5 minutes on the phone with these knuckleheads. And they're like, so, we need to send you a link and you need to do all that photo ID verification again. And I'm like, folks, get your act together. So, still on hold. Now I'm on hold. Killing me, SoFi. Killing me. JP Morgan wasn't even like this. Anyway. All right. Enough ranting. So, look at that. SIM keeps declining. It's declining more than the dollar.
Interesting. If you look at China and Japan, fight like hell with them because they always wanted to devalue their yen. You know that? The yen and the yuan. And they'd always want to devalue it. They devalue. And I said, not fair that you devalue because it's hard to compete when they devalue.
Dude, yeah, use Bitcoin instead. I know, right? It'd be done.
He seems to imply that he wants a very weak dollar. Yeah. He favors a weak dollar. Brian Bremberg, you're an economics professor, for heaven's sake.
That's always been the knock on him, is he likes the weak dollar for what he said there. It makes our exports cheaper worldwide. I mean, he's thinking about it like a business guy thinks about how much does my stuff cost to my customer, right? But at the end of the day, this is why he's not worried about it. I think what he knows is when you have a strong, growing economy that's attractive to investors, your dollar doesn't depreciate over time. It actually appreciates because that's where people want to put their money. They're buying dollars to get involved in the U.S. economy. So you don't worry so much about the dollar. You worry about the economy that's behind the dollar. If it's a strong economy, the dollar's going to be great because that's where people want to be.
Well, you're an economics professor. That was very good.
I just think that's it. We make too much of like Trump's language on this thing. Strong economy, strong dollar.
Okay. Right now,
I might be complaining in the background, but I'm still nice to the people. They're just trying to do their job, right? But I'm done. It was another 7 minutes out of my life that we should have been talking about stocks to verify a wire for like the 5th time. It's a birthday wire. And like I'm waiting for it to show up because as soon as like when people wire to invest in HouseHack, wires I get notifications for pretty much all of them. Credit card transactions and ACHs I see at like 5:50 in the morning, but wires I see during the day, and so it's kind of cool. So we should get 2 vibrations on my watch, and that's always the Mercury wire, well, almost always showing up, and it's kind of cool. So we'll see how long it takes SoFi to send a wire. So far, it's been about an hour and 15 minutes or so. Anyway, all right. So let's keep going here. Okay, so what is this? Oh, this is an interesting one because it says why AI won't wipe out white collar jobs. Send it to my account. Let's go. Bank account number, routing number, please. Trump says, don't think Diamond likes me so much, but that's okay. Oh, on JP Morgan. Where? Trump is going to put Zeldin in charge of permits to override local authorities in California. Oh, wait. Where is this conversation going on? This is Reuters. Hold on a sec. I want to see that. Trump. It's probably like a White House stream or something. Oh, yeah, here he is. Trump. Let's go listen to. Let's go. We'll skip around. I'm not going to sit here and listen to all this crap because most of the time he just tells stories and it puts me to sleep.
Rosie O'Donnell?
No, not Rosie O'Donnell. Are you kidding me? The first words I hear out of this guy's mouth are Rosie O'Donnell. Oh, man, you got to love it. Oh, okay, so the talk about California was 6 or 7 minutes ago. Nope, that meme's dead.
I say information. It better be damn good information for the kind of money. But Lee Zeldin is a star, and he has been incredible. Thank you, Lee. And, you know, I have to say this, Scott and I were talking about it. So Lee went out to California after the fire, which should have never happened if they would have let the water flow from the Pacific Northwest, which everybody's been telling them, including me. Now I just opened it up. We literally sent in the military to open it up. But if they would have let, you wouldn't have had the fires, because you would have had a little thing called the old-fashioned way, water in the fire hydrants, as opposed to empty
Fair.
fire hydrants. You would have had water, and most of the houses had the sprinklers on top. No, there was no water in there.
No, houses don't have sprinklers on top. They have sprinklers inside.
Sprinkler in their living room. All those fires wouldn't have started. But they did start, and I will say that Lee, the most difficult permit was Lee. I went there a couple of days after the fire, met so many people on the streets who were, in many cases, fairly wealthy people, some very rich people. Some of the best houses in California burned down. And I said to them, so what do you want to do? They said, sir, we want to start immediately. Well, we'll get you permits. Now, the hardest permit, Lee, was the federal permit. Is that right? He got everything done in 20 days, right? The whole thing? Is that a correct statement or less? 20 days. So he got everything done, 100% ready to go. And I went for a meeting, and this mayor, who's a grossly incompetent person, she said, we're going to try and have the permits done within 2 years. Remember that? I got into an argument. I said, you mean within 2 days, right? She said, no. And I'm meeting all these people as I'm walking along the streets with the fire departments and the policemen, and they're all devastated. You know, they're still smoldering. But they weren't even allowed to go in their property. The Environmental Protection Agency local said, don't go on your property, okay? We said, it's okay, don't worry about it. But all so unnecessary that it happened. But we got it all done in 20 days, the whole place. And you need a local authority to get things done in case of...
Yes, yeah. We know Trump says crazy things like the military opening the valves. We know that was crazy. But California does have infrastructure problems, though. Like, you know, some of our reservoirs, not only pump infrastructure failed, so lack of electricity, but also some of the reservoirs were just empty that shouldn't have been, like the one above the Palisades.
Do that, and low-income housing is great. I built a lot of low-income housing, section of the area, but I just want them to get into their houses. And I don't want a big section of the area built into low-income housing. They want to put low-income housing right smack in the middle of it. And that's not the American dream, you know? You didn't do that. And low-income...
I actually really support what Trump is saying here. Low-income housing is a horrible investment.
Housing is great. I built a lot of low-income housing, but you don't put it there. This is one of the richest...
You could build it and sell it, but to hold, you don't want to hold it.
I recommend it strongly that everybody gets the approval immediately.
His dad was into... not government-regulated low-income. I believe he was into more Section 8 and like duplexes and fourplexes.
Need approval to build a house, and you give them a 10% bonus so they can build a house 10% larger than they had before if they want, for all the suffering they've been caused.
Yeah.
So they can build a little bit bigger house. So Lee, if you want, will you accept the job? He's under a lot of stress. Okay? All right? Override those people. Those people are incompetent between the mayor.
Override the building permits in California. You know, I'm a big fan of streamlining the permitting process in California. There is a serious level of retardation.
And the governor, they're incompetent. They'll never get approved.
Yeah.
Quiet, but he's actually a stone cold killer. He was one of the biggest people in business. He's actually a view. Met Frank, and if you knew
Frank, okay, whatever.
Yeah, I think you. Actually, my whole life was a debate, but I'd never debated before. Americans will vote for him because they want to get him the hell out too. Where's Ted? Where are you, Ted? A very effective person too. Want to go? You know, she happens to be in the wrong state right now for that, but
all right.
When she heard that,
well, if there's anything else that pops up that's interesting. Because I'm watching the tape. So far, nothing else has been really interesting that's been said. Because that one-liner I could have also gotten from the tape as well. But anyway, so what is this European rupture stuff? Oh yeah, and how's the dollar yen doing? The pair. USD to JPY. Ooh. Look at that fall. So I'm surprised so far how much stability we have in this correction down. Because if you look at the correction we had over here, the collapse, the last time, July 6th, let's write this down because it'll make it a little bit more clear. That this is still a red flag near term for the economy. Or market, rather, I should say. Carry trade. Okay, so July 6, 2024, JPY or USD to JPY peaks at 160, right? 160.72. And then it loses, gets down to, Japanese carry trade blow up was August like 4th. 153 to 146 drop was the carry trade disaster, August 4th. Aug 4, 2024, USD to JPY plummets from 153 to 146, carry trade disaster, right? Oh, let's make it so you can actually read that. There you go. And then that coincided with about a 20% correction in the, it was probably more like 16%. Coincided with 16% NASDAQ correction. And we're just now starting to see some of that aggressive move down. But it looks like we're kind of stabilizing around 152, 153 so far. So we'll see. We are at January. We peaked out over here January 13, 159.18 for the pair. And then here we are January 28th, and we are at 153.67. 153.67. There you go. All right. Keep an eye on that puppy. All right. What else have we here? All right, so we talked about that. That was boring. That was boring. What's this? The productivity supercycle. We got a few tabs open. We got to actually get through some of these. So sometimes economic news of the day seems to be nothing but policy chaos, yet perhaps the most underreported story now is a pleasant surprise about U.S. prosperity. Well, that's great. Let's see what this is. New orders for key U.S. manufactured capital goods increased more than expected, suggesting business spending on equipment maintained a steady growth pace in the fourth quarter. Non-defense capital good orders, excluding aircraft, rose 0.7% after a downwardly revised 0.3 in October. This is all November data. The Q4 capex boom. And this is partly what's been driving the Atlanta Fed real GDP numbers. The Fed GDP numbers have been fantastic. I mean, you go look at the Atlanta Fed GDP, and it's quite bullish. Let's go look right now. So, yeah, I mean, look at this. It's at 5.4% right now. It's insane. This is for Q4 estimates, right? 5.4%. Atlanta Fed GDP. Plop that in here. Now, something to know is this is still looking back towards the last quarter, right? So we'll see what this next looks like. But this is great. This is great. The spending continues. All right, what's the labor shock here? Census Bureau reported the population growth slowed significantly in the past year. America's population grew by 0.5% in a year to 341.8 million. Wow. It's taken a while to get off that 340 million number, huh? Less immigration, 1.3 million immigrated to the U.S. during those 12 months, down from 2.7 the prior year. Wow. Half. Somebody says the Qs are getting clapped. Are they? Oh, yeah. What I say in the Alpha report this morning, people this morning in the course live go, Kevin, should we buy calls? And then I always have to say, guys, I can't give you personalized advice, but I would not buy the Qs until I saw a 627 touch again. Or until Powell is done yapping. Because we always seem to go down between the open and when Powell yaps. And then we can boom. And so that's why I say, if you're not part of that yet, use coupon code BDAY. It expires today. A birthday code. Go to meetkevin.com and check out the courses on building your wealth. You can potentially write them off on your taxes, including all the trade alerts and, of course, the Alpha Report every single morning with custom live stream. I guess I still need more to say. Ran out on that one. Josh Altman, I don't remember. Look at that. Next on Varney, Josh Altman's going. And anybody remember this? $1 Million Listing back in the day? I used to love that show. I'd watch that all the time. Yeah, why is Carvana just dumping so hard today? What's so unique about today? Is it just, are the insiders just dumping today? It's possible that they're just, having to sell to keep buying. Because there's no particular news here. Gotham City Research. Are Carvana earnings overstated by $1 billion? Oh, well. Gotham City Research, oh, here you go. Issues report titled Carvana, Bridgecrest, and the Undisclosed Transaction and Debts. Ooh, it's a short report. Ah. Let's go take a look at that. Let's see. Copy link. I do not want to open this inside a Webull. Gotham City Research, LLC. May as well say, don't sue me, bro. All right. So, Carvana earnings are overstated by $1 billion. Far more dependent on related parties than disclosed. Duh. I mean, we already knew that. We made a whole video on that. Without drive time credit, Carvana earnings collapse, and Carvana adjusted EBITDA doesn't cover its own interest expense. Duh! Old news. The whole thing's a Ponzi. Yeah, here it is. That's why they're making the pyramid. It's a reverse pyramid, depicts what we believe along the complex interplay between Carvana's earnings and related parties. Carvana earnings depend on drive time debt issuance at 20 to 40x leveraged, backed by toxic Carvana and Bridgecrest loans. And they're saying there are accounting irregularities. They could have done a better graphic, honestly. Let's Fifi, that's hilarious. I am not reading that out loud. I also don't know why I read that, but that is hilarious. All right, we have uncovered dozens of loans tied to cars that Carvana sold that appear on Bridgecrest's balance sheet and VIN audit reports. See, if you had blockchain, it would show what's actually going on. It would show what's going on. Justin, happy birthday, Kevin, longtime follower. Appreciate what you do. I appreciate you, Justin. Thank you so much. Carvana claims Bridgecrest is a third-party servicer, but Bridgecrest is fully owned by Ernie. Right. These are the insiders. Bridgecrest probably earns a very low servicing fee on loans sold to third parties. Yeah. We believe Carvana sells loans to third parties at inflated rates, booking gain on sales. Yeah, that's how they generate the revenue. That drives the stock up. In exchange, Bridgecrest charges these third parties very low servicing fees. Yeah, Because that money, this company could lose all the money in the world. Doesn't matter. It's not the public one where all the dough is being made. GoFi LLC, sounds like SoFi, fully owned by Garcia the second. GoFi burns cash. GoFi revenues are from drive time. GoFi and Carvana share the same mailing address. We have detected accounting irregularities. They all share the same auditor. The same auditor as Tricolor. Grant Thornton. I bet they're not doing PCAOBs. PCAOB. I don't know if they are. Inspection report. Oh, well, let's see here. PCAOB inspection of this auditor. I want to download this. Let's see if there's any juice in it. There might not be any juice. PCAOB audit report 128-26. 2026, man. That's just crazy. Do I play League of Legends? No. I'm tempted to play the World of Warcraft release. I saw that's coming out in March. It's like in a month, you know? You gotta start getting your keybinds organized. Our 2024 report on Grant Thornton provides information. Okay, let's see if there's anything interesting about this company. Overview of the 2024 deficiencies. 13 of the 27 audits we reviewed are deemed significant because of the deficiencies. 48% deficiency rate in audits. Primarily relating to the firm's testing of controls and testing of revenue related to accounts and inventory. This is going to be such a disaster when this all collapses, man. This is exactly the private credit kind of nonsense that's just blowing up. So what were the problems? I just want to see like a summary of the deficiencies. Inspection approach, I don't care. Just give me a bottom line, would you? Inspection, observation, opinion, independence. 18. Let me go to page 18. See if they got any juice. Page 10. 16. We believe the firm had not obtained sufficient appropriate audit evidence to support its opinions. So this auditor sucks. Audits with unsupported opinions. The firm selected for testing control. Firm did not evaluate the specific review procedures that a control owner performed to assess the reasonableness of certain assumptions used to develop selling prices. I'm telling you, this just sounds like Carvana. Just sounds like Carvana's scam, honestly. You know, opinion. Let's be clear about that. Okay. Respect to inventory. These are just testing and controls. This is all kind of like boring auditor language here. With respect to revenue, for which the firm identified a fraud risk and accounts receivable. Issuer D, industrials. Oh, okay. So a different one. Oh, so they give us, these are the summaries. Okay, yeah, here. So look at this. So you have Issuer A, information technology, deficiencies on the financial statements regarding revenue, accounts receivable, and inventory. With respects to inventory, did not evaluate procedures that control owners perform to assess the reasonableness of assumptions to develop revenue. Okay. Who is this? Consumer discretionary. The firm identified a fraud risk. The issuer recognized revenue upon delivery of its products and also delivered additional products to the customer in exchange for a return of products sold. The firm did not identify and evaluate the issuer's conclusion for recognizing revenue. Whatever. Fraud risk. Industrials. We have revenue and insurance-related liability issues. So this auditor's not very good. Allowance for credit losses, inventory issues, healthcare, intangible assets. The firm identified a significant risk. We found deficiencies, payroll. This company's honestly getting hosed. Other instances of non-compliance. In 3 of 26 audits, the firm did not make required communications regarding unusual transactions, the going concern or whatever. In 2 of 26, they did not inquire at all about, certain potential misstatements. Did not communicate to management, blah, 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 blah. This PCAOB report hoses this company, man. So if you want a shystery auditor, here you go, I guess. I feel like they're being nice. You know what I'm going to do? I'm going to put this into a Gemini really quick. And I'm going to tell it to give me, the TLDR. Put in a table the allegations the PCAOB makes against Grant Thornton. Keep it short. And simplify the issues. All right. Anyway, let's get back to that short report. So while that's cooking, that is very interesting. Oh, interesting. And then they provide other reports. GoFi annual report, drive time. Yeah. Yeah. Well, that's, this would be fascinating to kind of go deeper into, honestly, this Carvana issue. And it's one we've reported on quite a bit. Oh, wow. We're going to lose the lead here soon on the Qs. Didn't JP Morgan say Carvana was the top buy for 2026? JP Morgan sucks. That's all I can say. They said Nikola was a good story stock to buy. I think they're the definition of morons. Not everybody. There are some nice people at JP Morgan. But I'll never do business with JP Morgan. So, my long-term secret goal, and this is not a pitch for investing in HouseHack. My long-term secret goal is to IPO HouseHack and have JP Morgan line up to be the investment banker, and then I flip them off and go, you're fired. You don't even hire them, so you can't even go fire. You go off. That's what they're going to get. It's going to be glorious. I cannot wait for that day. Just for that moment. Not even the IPO HouseHack part. Just spite. All right. So, fail to obtain enough. Okay, here we go. So this is the Gemini summary. Fail to obtain enough proof in 48% of reports. Significant failures in testing revenue. Does not verify the accuracy of data reports. Doesn't perform detailed analysis, basically. Failed to make required reports. Didn't get approval from audit committee. The firm itself reported 105 instances across 51 clients where it potentially violated independence rules over a 12-month period. Wow. This company sucks. And they're the auditor for Carvana. The stories write themselves, man. Stories write themselves. The reality of a world after a rupture. All right, what is this? The annual meeting of the World Economic Forum in Davos last week. We heard Donald Trump deliver a rambling address. Suffused. What the hell kind of word is that? I've never heard of suffused. Is that like a different word of like infused? Like embedded with, you know? Suffused is to gradually spread over. Her cheeks were suffused with color. Which cheeks? Okay, Kevin. All right. Stop it. Anyway, so we heard Mark Carney, blah, blah, blah. Carney had a good speech. You got to give him credit. He had some serious balls. Not as big as Jerome Powell. The Jerome Powell balls are pretty big. But, let's see here. Carney, nostalgia, blah, 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 globalization. This is boring. This isn't news. All right. Let's see here. What else? So boring. Elon's got to hurry up and an IPO before the recession. Nobody knows when that sucker's coming. But let's see here. Dollar slide, saw that. Italy clarifies ice role during Winter Olympics. I don't know what Italy and ice have to do with each other. I'm too uninterested in looking. All right. So the FT is a little boring today. Google Scuppers service comparing YouTube viewing with TV and streaming. What is Scuppers? Google has forced a UK television measurement company to suspend its landmark service that compares channel viewership to other TVs. Cease and desist. Oh, whatever. It's an analytics firm. All right, this is the jobs narrative thing, right? Yeah, why white-collar jobs? Okay, let's find out here. SpaceX IPO will be the top. So we have a lot of SpaceX exposure in my venture capital company, and I don't know how fast I could dump those shares for the venture capital company, but just to be transparent, I want to dump those shares. Right at IPO, baby. It's 9 o'clock. Still no wire from SoFi. It's been 2 hours. 2 hours. I could have sent it with Bitcoin. Still don't have a transaction ID number. What the hell, SoFi? Are you guys incapable of processing a wire? It's not that damn hard. Whatever. All right, what else here? Everybody's going to need fewer employees, or fewer employees. AI could indeed wreak havoc, but rather than making such jobs less lucrative, let alone redundant, it's likelier to reshape the jobs, okay? The AI office will look less like a robot and more like a cyborg, combining the best of human and computer capabilities. Yeah, the $6 million man rather than the Terminator. I like that. I agree. I agree. I like this a lot. I like where this is going. For all the alarm, white-collar workers are still doing well. We've added white-collar jobs. Blue-collar employment has remained flat. Oh, interesting. Wow, look at that. Earnings for white-collar is outpacing blue-collar. Wow, is or are? I don't know. Anyway. Some occupations often cast AI as early victims of the terror. America has more than 7% software developers. Has 7% more software developers, 10% more radiologists, 21% more paralegals than 3 years ago. Wow. That's actually the opposite of what you would expect. Right? That's very interesting. I want to write that down. I find that very, very fascinating. Okay, let's write that down. Is this live? Hold on.
Thousands of businesses are being built all over the country, and you're going to have a beautiful, very positive explosion sometime during the year when these things start opening up. But there's never been no country has done what we've done.
Murphy, I ask you no question. I put no words
There's
in your
the blonde.
mouth. How do you see today?
No,
So
zoom
I
in on
think if
Riggs.
you look-
Not him. Zoom in on Riggs. Come on.
hole in it. I think it's really hard to do that. It's really, really hard to say
Well, the blonde's on the other side of the table.
for the economy isn't playing out exactly to plan. So I think when you look at the market, we talk about big earnings coming. So yes, they can't just fall down and completely miss the quarter. But aside from earnings, I want to hear from these people the AI spend. You know, how is the AI, are companies continuing to spend for build outs to support AI? And I think the answer is a resounding yes. So I think that doesn't mean that the stocks necessarily trade higher tomorrow on the earnings, but what it tells you is that the economy is going along to President Trump's plan. There's going to be a lot of hiring. There's going to be a lot of cost reductions, so therefore better bottom lines for companies. And you're going to see people, U.S. citizens, are going to be earning more money. So I think I'm 100% behind what he's doing, and I think the economy is in a great place right now.
Okay.
I hear you breathing.
Uh-oh.
No, I'm just kidding.
Well, I brushed my teeth, Dagan, so don't worry, I'm not breathing on you. I hear what you say, and I wanted to add something to that, Dagan, because I think in your intro, you rightfully pointed out, I think the market's really excited about Mag 7. Now, that is not necessarily the real economy, but this all ties in together. With the S&P 500 at
I don't think anybody's excited about Mag 7. Mag 7's been slowing down. Has she looked at Microsoft stock lately?
Without Mag 7, because you've seen a broadening of the rally.
Right.
Nvidia is down 9% from its record high. Apple is down 10% from its record high.
16.
Microsoft is down 11% from its record. Tesla down 12%. Meta down 15%. Palantir down 20%.
Yeah.
Your favorite CoreWeave down 41% from its record. So the S&P is doing well, but big tech is not necessarily keeping up. And I like that. Here is why. In the last 3 months since October 29th, when big tech peaked, materials are up 15%, energy's up 13%, consumer staples are up 8%, healthcare's up 8%, industrials are up 6.5%. Only 2 out of those 11 sectors are in the negative, one of whom is big tech and the tech sector. So I like that, because to me that's signaling that the market can rally without only 7 stocks. And what is rallying is that real economy, real GDP stuff, which I think bodes well when you think about the economy. It is driven by fundamentals, real economy, not just the hopes of poof AI, and AI is just going to save us all. This is real stuff, and so that's what I like. Don't get me wrong, super excited about Mag 7, and this week is it. But outside Mag 7, revenue is up 8% year over year. If you told me that you could have a multi-trillion-dollar economy, we are powering up 8% on the top line year over year, with the bottom line up 15% year over year, I wouldn't think that that was possible. So that's showing me that there is real economic fundamentals trickling down into companies.
The question that keeps coming up.
I like that. That was good. That was a good sort of expanding narrative there on how sort of the benefits are getting buttered out a little bit. I'm glad she mentioned that a lot of those Mag 7 names are down. I actually think some of them are very cheap. You know, I'm not a big fan of the chip sector right now, but I think Nvidia is cheap with these earnings forecasts. I think Microsoft is cheap. Meta's cheap. Netflix, not a Mag 7, but I think it's cheap. Tesla's like the only expensive one out of all of them right now. Amazon's cheap too.
How people feel about the economy, just trying to make sense of that. But you would think.
All right, whatever. I don't care about that. All right, so look at this. So back to this right here. I'm writing these notes down over here on the AI impact on jobs. Blue collar jobs flat since 22. White collar jobs up 3 million. We have 7% more software devs, 10% more radiologists, 21% more paralegals. Professional and business services like CPAs are up 5% in real wages. Office workers, 9% more in real wages. So real wage growth is happening. Digital era's computers rarely replace entire jobs. They automate routine and repetitive tasks that could be codified and executed by machines. When a job is all repetition, it can disappear. But most professional tasks are a bundle, or most professional roles are a bundle of tasks, some of which can be automated. We raise productivity, in other words. Yeah, I agree. By raising productivity and cutting costs, computers widen the range of activities firms could undertake profitably. E-commerce generated new logistics, supply chain planning, digital payments. Yep. Smartphone created app designers. Social media ushered in influencers. What? The result was sustained growth in white-collar employment. Yeah. New jobs. AI is cleverer than digital technologies of the old, but the same logic is to apply. For one thing, today's artificial intelligence systems have what AI scholars call jagged intelligence, displaying uneven or inconsistent performance, being good at 95%, but not good at the remaining 5%. I actually agree with that argument. Economist references AI as jagged intelligence, good at 95% of automatable tasks, but still need a human in loop for remaining 5%. Evidence from Anthropic bears this out. Only 4% of occupations use AI across 3/4 or more of their tasks. Hardly, and can hardly automate any of them in full. Text, writing code, gathering information, running analysis. The cost of doing that is being reduced. Recent labor market data support this view. We analyzed employment and wage trends across 100 white-collar occupations in America. Employment across the same has risen by 4%. Real wages up 3%. To get a sense of AI's impact, we used occupational descriptions to classify white collars into 4 workers: technical specialists, managers, coordinators, and care workers, and then back office. Here's where you saw the down. Secretaries and administrative assistants, graphic designers, pharmacists, and customer service reps. I mean, that makes a lot of sense to me. I write that down. That's a great reference. Great chart by Economist on where jobs are being lost. That is an opinion. There we go. Remember, you can get all that data on the Meet Kevin app. The Meet Kevin app is free. You get the daily wealth every day as well. And you can customize your notifications. It's on Apple and Android. Yes, I get it. It's another app. Like, there's no shortage of apps. But I actually think this one is one that's like free knowledge. Who doesn't want that? And so you can see that data. Okay. Roles that combine technical expertise with oversight and coordination enjoy the biggest gains. Oh, interesting. That's a great way to put it. Biggest AI gainers. Technical expertise plus oversight. Biggest gainer. So, like, basically, you know, being an executive. Like an executive, I'd argue. You know, I could do a whole lot more. I need fewer employees with AI. You know, my team can get so much more done with so many fewer employees than, you know, 4 years ago. Thanks to the help of AI. You know, you still need people to lead it. Oh, that's remarkable. I like this a lot. Back office work has shrunk. AI is already generating all new jobs too. Companies are hiring data annotators to label digital information that AI can parse. Fast growing white collar operations, blah, 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 blah. Business operations specialist. Okay. Not to say all white collar could sleep easy. Well, we saw the negative there. Entry level jobs look vulnerable. We've heard that. Clerical and administrative work. Some painful disruption, human accountability, blah, 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 blah. It's good. It's a good one. It's a good piece. Good article. Oh, look. Did the Qs find a floor? I mean, we've been doing this all day long, though. The downtrend is pretty clear here. You can just look at the 100-minute moving average. Oh, yeah, even NVIDIA had a little bit of a dippy doodla. Tesla leading up to earnings. How is Tesla doing today? Stable. At, oh, wow, it's back at my 433 line. That's funny. Happy birthday, Kevin. You've changed the trajectory of my life. I've been watching you since I was 19. I'm 24 now. Oh, that's awesome. Well, thank you for saying that. That's really nice of you. What do I think about SanDisk? You said you've been following me for 6 years? All right, well, if you've been following me for 6 years, you can see my SanDisk analysis. Hold on. So, stock tab. SanDisk, you say? So, the analysis that I did on SanDisk. Oh, there it is! There it is. Wire received, boys. The $1 million wire. The wire has arrived. Hold on, we gotta share the notification. It just popped through on my watch. It should be on my phone then too. There it is. Let's see if I can do this without doxing myself. All right, here we go. There it is. Look at that. Money received. You received $1 million from Kevin Paffrath. HouseHack. HouseHack. Money received. See how it's always 2 notifications? I don't know why it's always 2 notifications. But it came through. My birthday wire to HouseHack. Kevin, what'd you get for your birthday? I invested it in my own real estate company. our little AI startup. Anyway, where were we? We're going to look at SanDisk. So that took, what? Probably about 2 hours and 15 minutes for the wire to show up. Bitcoin would solve it. All right. So here's SanDisk. What I wrote on, so they've got a 4.66 PEG ratio right now, which is insane. It's high. They have a lot of cash flow. Massive free cash flow. Good balance sheet, plenty of cash, accounts receivable to pay for all their debt. They're not raising money. The free cash flow is solid. Yeah, you could see they're repaying debt. They paid off $500 million of debt with their cash flow. They're not raising debt. They're paying down debt. They have plenty of money to pay for their bills. Their revenue is growing by 22%, and their gross margin is growing by 20, or their gross margins are almost 30%, which is fantastic. It's really good. You know, we did have a little bit of gross profit compression, but you still have that revenue growth, which is very impressive. And the margins are great. The Wall Street forecasts for growth of this company are huge. And the stock is skyrocketed in value. I mean, what is the puppy now? It's $517. I think when I analyzed this, I said that this was close to a fair value. And it was like in the 2s or something like that. So the rest has just been momentum. And it's been very impressive. Yeah, this was in the 2s. When we did this analysis, I'm like, it's a really good company. And that's what can happen, is you could get companies that are at a fair value and then they skyrocket, you know, beyond that fair value. Hood, Tesla, Palantir, SanDisk, doesn't matter. You know, when people get excited about a sector or a stock, these things can rocket way past their fundamental values. But the fundamentals were fantastic when we analyzed it. Really good fundamentals. Volumes were actually declining right here. You can see that explosion in volume is what has created this run, this recent surge here. Really impressive. It won't last. It'll correct. And it'll probably overcorrect to below fundamental values. That's always how it moves. But it's very, very good. The ICE agents involved in the shooting in Minneapolis have been placed on administrative leave. Oh, interesting. Sonny here says, when you reviewed it, I bought some. Oh, see, course member here. We reviewed it in the course member live stream. Like the fundamentals I went through. You know, I'm not trying to tell you to buy or sell or whatever. I'm just trying to give you information. And, you know, what to watch for. I always say, teach how to fish. Don't fish for people. And so good for you. You made a, you know, you bought a company at a fair price. And you paid a fair price for a great company. And it's skyrocketed. You deserve the win. So I'm really happy to hear that. So, okay, good. Fed has not complied with subpoena as Powell probe continues. Oh. All right, what else? Symbotic. Symbotic is a great company. They cannot hold above 64. I don't know why. They cannot keep it above 64. I would personally love the opportunity to buy them again in the low 20s. You know, we did a lot of fundamental analysis on Symbotic back in the low 20s. It was like $19 to $21 when we analyzed Symbotic. We're like, this is a real robotics company to invest in. Big fan of Symbotic, and You know, but it had its little euphoric moment. It's time for more tea. Yeah. All right. We'll go see what's going on in just a moment. But how do you like my mug today? Huh? Oh, you can probably get a better. Huh? Yeah. Oh, look at that. Look at that. Isn't that cool? A little custom-made abstract art. Looks a little bit like Iron Forge or something in World of Warcraft meets something else. I think it's awesome. All right. Next. Let's go. So we looked at immigration. We looked at jobs. Declining immigration is occurring against the backdrop of falling fertility rates and an aging population. Also interesting. You know, we grew... How many immigrants did we say we had? Immigration... America's population grew by 1.8 million population growth July 24 to July 25, down from 2.7 million. Was it 2.7? Oh, 1.5 fewer. Oh, no, it's more than that. Down from 3.2 million the prior year. That's population growth. Of that, 1.3 million... immigrants, others being births, right? Down from 2.7 million immigrants. Okay. And then here they're saying this is happening at the same time as the population is aging and the government can't force people to procreate. You can force me to procreate. I got 7. I want more. Slowing growth creates a political problem. California, New York, Illinois, Jersey, Massachusetts. 5 states. If this holds, Democratic-run states will lose at least half a dozen congressional seats. Oh. Anti-growth policies have consequences. I agree with that, by the way. Is this an op-ed or is this an editorial board? No, this is the editorial board. I agree with them. Let's see. Wall Street editorial board. Anti-growth policies hurting Democrat cities and will punish them in House seats. That's actually Democrat states, I should say. So what I actually think is happening, mind you, is that these are, unfortunately, poorer individuals moving out to, you do have like this billionaire tax didn't help at all, the rumor of that. But I think a lot of this is a concentration of poverty. And so people move from these expensive states to cheaper areas. IMO, I'll say, this is a symptom of poverty concentrating mostly. Obviously, some big profile billionaires leave to send a message as well, right? Yeah, but that is interesting. Anti-growth policy. Oh, that's how they end the article. Oh, let's see what they say. I also want to grab the link to that. Cite your sources. All right, what do we have here? So we have less educated, unqualified, non-English speaking illegal aliens causing net migration loss, and that's how somehow troubling. Reducing the burden on American taxpayers, making more jobs available for U.S. citizens. Must have missed something. I mean, this is a classic sort of like right-wing response. I don't actually think that, first of all, every immigrant is not non-English speaking. A lot of immigrants do speak English. And a lot of them are qualified for exactly the things that Americans need. Physical labor, farm work, service industry jobs, hotels, restaurants. Those are people that actually enable Americans to take theoretically better jobs, right? So Guess I'll see you tying steel with the road crew next week, huh, Walter? This nation runs on immigrant labor, not some 20-something-year-old American kid sitting on his hands at home. Let's go, Charles. Let's go. Yeah, I totally agree with Charles on this one. I think Walter is taking a too single-minded mindset there. It's a popular mindset, but it's too simple-minded, I should say, is a better word than single-minded. Yeah, simple-minded. All right, what else? Trump Fed finalist. Is Nick T in on this one? Greetings from Sweden. What's up, Sweden? Palantir struggling because of the ICE controversy? Oh, maybe. Yeah, that could be. That could be right. Let's see what people say about Nick T's article. My 15-year-old Foxbound is qualified to be Fed chair, provided he does exactly what Donnie and the tariff clown dictates. I mean, that's obviously a little extreme. Sundown Dawn? Are people trying to use that insult for Dawn? Nah, that does. You can't pull the Biden insult on Trump. Okay, you might not like Trump, but you can't pull that one on him. Sundown Dawn will use his usual hiring model. Loyalty is job one, and competence is job none. Oh. Having a spine would be an automatic disqualification. 69 likes. Don't let Hassett near the job unless you really want to tank the dollar. My guess is Trump is shorting it. It doesn't care. Oh, no. Bondi to the Fed. Noam to education. Kennedy to defense. Hegseth to press secretary. That's comedy. All right. We gotta stop. We gotta stop messing around. We gotta actually read what Nick T wrote. $5. Happy birthday, Kevin. Thanks for the hard work. Your stock info changed my financial outlook for the better. Appreciate everything you do. Oh, thank you for saying that. It's very nice of you. Appreciate it. All right. What's Nick T here saying? Finalists. Treasury Secretary Bessent made managing the scourge after ruling himself out. Blah, 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 blah. Each represents a different trade-off. Tension was on display. They all respected, all great. Everyone could do a fantastic job. Telegraphed, core anxieties, blah, blah, blah. Blah, blah, blah. This is just catching you up. There's no news in this. I just want to see if there's anything new in this, so I'm just skimming it. Hey, what's up, Nick T? We'll see you at the presser later. Rick. Track record could appeal to the president. Also, Rick has impressed Bessent, but he comes with baggage. And it comes with political baggage. I don't really care about that. Like whom he's donated to. Who's he donated to? He's donated to him. Whom he's donated to. Yeah, there we go. Oh, hold on. Blondie's talking.
I couldn't buy a flight home for Christmas one year because prices were too expensive. My parents said, you're holding down a job, you're paying rent, we'll help you out, we'll buy your flight ticket. I'm still on my parents' Verizon family plan, but they see that I'm trying to raise a family, so they're helping me on my home bill. Is that a middle ground? What do you think?
Wait, what? I missed that. You're still on the family.
Let's not talk about it.
No, that's actually. I just want. I don't
think there's anything wrong with that. You bundle up with your family. You save money. You know, you save money per line. I don't see a problem with that. You're coming to defend the Blondie here.
Common for people who are even married. I know other people. It's just a thing. It's just a thing.
Just a thing.
My parents had an 800 number when I was your age, so we could call home. It's the same. It's just a different generation, different concept.
Okay, I don't know that I've ever seen a parent with an 800 number. This is stupid. Sorry, this is a waste of time. Let's go look at something else. Legal fallout in Minnesota has only just begun. Yeah. Elon Musk is flexing his political muscle again. Oh no, not this crap again. Yeah, honestly, I think up until about 3 months ago, one of my phone lines was on my in-laws' phone plan still. And so I just reimbursed them. Like, they weren't paying for me. I'd reimburse them. But I have 4 phone lines. No, I have 5 phone lines. So, Yeah, I got them all. AT&T, T-Mobile, Verizon, Mint. I got some others as well. Anyway. Elon Musk is flexing his political muscle again. The GOP is responding. She's just saying stuff. I know, that's what I'm saying. Like, she's a little kooky, honestly. I also bet the blondie reimburses her parents for the Verizon phone. Like, I don't think, her parents are paying for her. I don't buy that. She didn't say that either. Sonny says, Kevin, let me get a course with a major discount. Been a member for 10 years. $1 million discount code. Marty, use B-Day. Dude, it's a good coupon. Here's the hack, okay? Here's the hack. Use the code B-Day on the Meet Kevin membership. This is like probably the best price you could get on the ReInvestAI. Add that to your cart when it's in your checkout. And you can check out to both. It's like an order bump or whatever. That's amazing. It's a good deal. The bundle. Somebody says, get off political. They're too biased. Yeah, well, sometimes I like reading biased stuff. I mean, when we watch Fox News, we're not going to watch Fox because they're biased, or CNN because they're biased. We know they're biased. You just have to lean into it, It's like, all right, I get it. Everybody's got a bias. Now I got to weed through to see if you got anything interesting. I think somebody just doesn't want to hear the talk about Elon Musk here. Are you worried about Tesla stock going down? Alles Gute zum Geburtstag. Danke sehr. All right, so what do we got here? Musk is persona non grata no longer, thanks to his mega checkbook and mega platform. Republicans see his recent donation to a Kentucky state senator as an encouraging sign that he will back the GOP. Oh, wow. They're going to back the GOP and lose the GOP. Wow. Musk spent more than $260 million last election trying to get Trump elected. Well, I got to pour my tea here. All right. Get my tea brewing. All right. Let's see here. Musk accused the president of being in the Epstein files. 6 months later, Musk is back having dinner with Trump and the GOP again. They need his money, dude. America is toast if the radical left wins, he said on New Year's Day. I had to mute his X account because I kept getting fed all this nonsense. So, I have to go out of my way to see his stuff because it's exhausting. But anyway, let's see here. Campaign has driven a huge number of calls to offices. 2 of the Senate's most endangered Republican candidates have leaned into Musk to hold a vote on a bill. Bozeman, American flag emojis, blah, blah, blah. Congressional Republicans. Seeing Musk's reemergence is a mixed blessing. He blew up a carefully negotiated government funding deal in December of 2024 and almost sunk the GOP mega bill in the final stages because of personal objections to the electric vehicle subsidies. I don't know about that. He was branding it as being opposed to debt, right? That might be where the bias is from Politico, right? Let's see here. History is not on our side regarding midterms. That's true. Yeah, I don't think Republicans will hold. That's why they should really push another. If they really want to do another package, they should shove it through reconciliation now rather than wait. That would be the way for them to go. All right, what else? Let's see here. Trump threatens Iran. We saw that. California super PAC emerges with $10 million from big tech. So who's the California governor going to be? Who's actually leading right now? Is there a poly market on this? Poly market, California governor. Swalwell, really? And there's low volume on this. Only $93,000 of volume. What's his pitch? Oops. Eric Swalwell. Let's see here. Armed with $1 million war chest. That's not a lot to run for governor. Oh, they did the whole, they took the color scheme from one of those California newspapers. Forgot what they're called. Meet Eric. Hey, you can't take the meat trademark. Dublin, California. Oh, HouseHack owns property in Dublin, California. All right, I like this guy already. Why am I? What are you gonna do? Why can't they just give us policies? California's next governor has 2 jobs. 1, keep the worst president in history out of our homes. Wow. Okay, well, that's a classic California Democrat line. Okay, all right. That's a little extreme. Our state is under attack. Militarized retreat. Canceled cancer research. I hate that. Clean energy. This will come back. Clean energy projects. Build a new California. How are you going to do that? I worked as a planning commissioner in a place of low income, low expectations. Leave my hometown, most prosperous cities. Priorities will be homes and jobs. If you work hard, you should... Like, where's an actual... There's no plan. You know, when I ran for governor, people could go to my website and they could see the exact 20 things that I was going to do. It was probably too logical. That's probably why I lost. Lost like a loser. No, we got 1 million votes. We spent less than $1 per vote, which is really amazing. I think we did a great job. Then Newsom had to weaponize Larry Elder's Delta virus fears. Everybody's gonna die if you vote for anybody but Newsom. Somebody sprayed Omar. Wow. What, is she gonna go fight him? What the hell? Wait, attacked at a town hall on Tuesday? What? Hold on a sec.
Must resign or face, and DHS Secretary Kristi Noem must resign or face impeachment.
She like squirts water on him or water on her or something. Kooky Dukes. This is crazy. Yeah. I'm not a fan of stuff like that. I mean, I don't like her. I think her policies are stupid. You know, I'm not a fan of her at all, but, you know, I hate that kind of stuff. Anyway. Oh, this is the New York Times for you. So... What else? It's popping over. Maybe try Bloomberg.
At some of the highest levels, Mike, that they have ever been. So, geez, thank you so much for that.
Yeah, I think maybe not segueing backwards. You know, I think what's going on with our elected officials, like we need more free markets. We need more. Yeah. Like people have to be able to strive, get ahead, and like you know, the new governor coming in, I don't support what she's doing, how she's doing it, and I think that's why it's important who support more free markets to run and be in a position to help the people that they're there to serve.
Oh, how many of you all are going to go watch the Melania movie? I guess somebody's tweeting this. Not a single ticket sold for opening night at Melania's Melania at Boston's largest theater. I mean, we know they put this together just to shill to Trump. I'm not going to watch it. But that's interesting. It's more aggressive than I thought. Peter Schiff. The dollar is going to collapse. It is going to be replaced by gold. No. But the Ponzi will continue. I love this guy. He's a good guy. I like Peter.
People say affordability is a problem, and I'm going to fix it through a price cap. And then voters say, oh, that sounds good. Let's have a price control on things, because that's always works globe throughout time. And that's what she's doing here. Like, she's just using price. No, actually what they're doing is taxing people through a stupid cap and trade program that makes their fees more expensive. She's taking that, and then she's recycling it back through to people as a subsidy to pay for the higher prices of electricity.
Right.
It's the stupidest thing ever. But you know what? Actually, in our world right now,
I love it.
It doesn't matter if you're a Republican or a Democrat.
I love it. Wait, hold on a sec.
With price controls right now, and like,
oh, I had the wrong audio on. I was confused. I was like, I thought this was gonna be about the dollar or gold, and I'm listening to Fresh. I'm like, this doesn't even sound like Peter. Sorry, I screwed up. I'm like, that didn't sound like something's wrong. But yeah, I screwed up. Here we go. Sorry.
And the world is now pulling the rug.
There we go. That sounds like Peter.
And the world is now pulling the rug out from under the U.S. The dollar's going to collapse. The dollar's going to be replaced by gold. Central banks are buying gold to back up their currencies. They're getting rid of dollars. They're getting rid of treasuries. We are headed for an economic crisis, again, that will make the 2008 financial crisis look like a Sunday school picnic. The biggest difference between the crisis that we're about to have and the one we had back then is this one is all in America. It's not going to be exported to the rest of the world. It's not a global financial crisis. It's an American financial crisis.
I totally disagree with that. I agree that we're going towards something not great. But the entire world is going to suffer. All right, what else do we have going on out here? Donald Trump, massive armada is heading to Iran. I mean, in fairness, FSD has gotten better. You know, people make these memes all the time about Elon, but you know, what are they on now? Version hardware 4.5. That's what I heard yesterday. All right, what else? Let's go see here. FBI is executing a search warrant at a Fulton County elections office in Georgia related to the 2020 election. They're seriously still on that? Dude, Trump has no shame for the vengeance at all. No shame. All right. I remember that Fulton phone call that Trump was on, the pressure to find a few votes. That was a shystery phone call. It wasn't a good phone call. We went through it live. I didn't like it at all. Oh, look who it is! The Impaler!
Pieces, and you know, every year or so he drops one. It's like, it's a me, Dario, you know? But yeah, I think that the danger is we can get distracted by infinitely many low probability risks while ignoring the thing that's right in front of us, which is these private companies are raising capital at the valuations of hundreds of billions, and the people benefiting from that are dozens, maybe hundreds of people. And how can we get that to millions?
Because
You
think it's hypocritical?
Well, if retail investors don't get exposure to these companies, then what I worry about is they're going to fight against it. It's not like in crypto. Crypto did this right from a very early point by distributing the value, letting regular people have exposure to it. And now, whenever there's sort of like risks of government overreach, you have an army of millions of people defending the industry. And I think AI, we're at risk of not having to do that. So actually, the Trump Accounts Initiative, I'd love to find a way to get AI companies to donate their shares so that the future generation gets exposure to that as well.
Okay.
And I think we have mechanisms. That's why I'm excited, because this isn't just a one-time donation by the government. It's a platform for private individuals, businesses, philanthropic organizations.
Yeah. You know what would be so funny? I actually think if you had Governor Newsom come out and say, we're going constitutional carry in California, he would get, I mean, I still don't think people would vote for, like, the right-wing people would push for Newsom, but it would so neutralize a lot of that, oh, Democrats are anti-guns thing, especially with, you know, when Trump pulls some of these quotes off. Can't have guns, can't walk in with guns. I mean, the question might be related to a protest, right? In fairness, which is, you know, reasonable there. Yeah. Somebody says your mag is restricted. I know, they got to get rid of those mag restrictions. I mean, unless you got a mag during Freedom Week. If you got a mag during Freedom Week, you can have a full-size mag in California. Let's see here. Ron Barron. What is he up to? Let's go see.
Year and the economic growth has been about 2%. What happened is the value of your money falls 4 or 5% a year. That's inflation. Falls 4 or 5% a year, and the economic growth has been about 2% a year. So it's about 7% a year growth, and that means everything doubles in 10 years. The value of your money falls in half every 15 years. So you got to make twice what you're making today in 15 years to stay even. And so stock market, you know, so Bitcoin's been amazing, obviously.
How old is this? But anyway, he's assuming inflation at 4 or 5% in that clip. That's quite aggressive. I get it, maybe because of tariffs. But what is this? Here's the layoff letter for Amazon. Let's look at this. Hold on one sec. Full-size mag kits on Amazon. Oh, are they really? Oh, that's funny. Yeah, but you gotta be careful. You don't want to break the rules. Come into your house and take all your stuff. So... All right, let's get that ICE letter. Where's that? Letter. All right, here we go. ICE letter, Amazon letter. Wanted to let you know that we're making additional organizational changes at Amazon that will impact some of our teammates. I recognize this news is difficult. In October, we're going to strengthen our organization by reducing layers, increasing ownership, and removing bureaucracy. While many teams finalized their organizational changes in October, other teams did not complete that work until now. The reductions we're making today will impact 1,600 roles across Amazon, working hard to support everyone whose role is impacted. That starts with offering most US-based employees 90 days to look for a new role internally. Then, for teammates unable to find a new role, we'll provide transition support. Wow. So you got to go try to sell yourself to a different team. Wow. Okay. What's the, let's see here, CNBC's. So Powell released in about an hour. Subpoenas. Here we go. All right, let's see what's going on with the subpoenas. Always funny wording. Fed has not complied with subpoenas as Powell probe continues. Okay. Let's see here. Federal Reserve has not yet complied with grand jury subpoenas. Oh, he's going to get asked about this today. That's going to have to go on our bingo board later when we make it. But it'll be really interesting. It's just no comment. No comment. Can't comment. Okay. So what do we have here? Probe is continuing. Not clear what the deadline is. I mean, they usually get like 30 to 60 days. So it's kind of early. That's all they have? All right. Nick T just tweeted. Iran advisor says talk of a limited U.S. strike is an illusion. Well, that doesn't sound like they're getting a deal done. So let's go to Nick T. Iran's response to any U.S. strike will be immediate, all-out, and unprecedented. Uh-huh. Nick T. All right, here we go. All right. For a meeting outcome lacking much suspense. Right. We kind of all know what's going to happen at this meeting. Fed Chris Waller vote could draw particular scrutiny. Right. Is he going to vote for a cut or a pause? Oh, yeah, that is interesting. A vote with the majority to hold could cost them the job. Yes. Yeah, totally agree. Yeah. Okay. What else are the boomers here? Bloomberg's. How are the bonds doing? Because that always gives me a little color on what's going on. Bonds, yeah, up again. Look at that. Still 4.25. I mean, it goes up and down every day, right? But 67 on the 10-2. We're now normalizing the 60s. We were normalizing the 50s for a very long time. We normalized the 50s since Liberation. Liberation is when we had a big spike, right? When we got liberated from 2% global tariffs and got to 18% tariffs, trade weighted, we moved from about 29 on this scale to about the 50s. Stayed there for a while until December. All right. What else? Taco is a problem for Europe. All right, what do we have here? Last week, U.S. President stopped waving a stick at Greenland. It was claimed once again that Trump always chickens out, and perhaps he does. But who suffers in the end? Taco is no more than a loss of face for the rest of the world. It proposes a strategic dilemma. Oh, yeah? If the president can be counted on to renege on his threats in the 11th hour, the incentive to hedge against America, an expensive business, is correspondingly weaker. Why not just wait him out? Right. In other words, you don't have to, what's it called? You don't have to sell U.S. treasuries because he's just going to chicken out anyway. All right. Let's see here. All right. In other words, it is the hope that gets you. It saps you of motivation to become self-sufficient. This threatens to be a tragedy for Europe. Trump offers the continent just enough support to induce a level of competency, but not enough to make the place safe from its enemies. Okay. Twinkles of hope. Blah, 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 blah. What has to be done to make Greenland safe? Even now, the idea that it switched from protection to desertion is something of a cartoon. Messier truth is that America's commitment to Europe is harder to gauge, harder to plan around. If there's the slightest doubt, each case of Taco encourages it. Their preference might be to take chances rather than to suffer upfront hit. All the desirable political events, let's see, blah, blah, blah. All right, whatever. Let's go jump in over here. That was boring.
In 2022, prior to violating any PGA Tour regulations, Patrick is eligible to compete on the PGA Tour as a non-member
Come on.
It's terrible. Politics seeps into everything.
What do you mean? Talk about climate change or the economy.
Administrations have done is leave mounds and mounds of debt for kids, but that this administration is trying to give them something that they'll have. If you take your baby account, if you contribute to it over time, it'll be tax-free growth that compounds. You could potentially have, if you want to go to college by the time you're 18, you could potentially have enough money to be able to do that. Maybe there'll be other opportunities for down payment, ways to use it as down payment or various factors. So at least they're trying to do something in that regard to give to kids. The only other thing I would say in this Wall Street Journal article, they talk about the United States Social Security programs and Trump's tax cuts as the major reasons that we're in trouble. We're in trouble for a lot more reasons than that. The list goes on and on. Social Security definitely is a huge aspect, but cutting taxes for people who are working and who are contributing to the economy, I don't see that as a negative. There are so many places it can be offset. The waste, the fraud, the abuse, the illegals that we're supporting, Social Security programs, Medicaid. I mean, so I think they sort of oversimplify it here.
Mr. Sunshine, 20 seconds. What do you say?
I'm going to say that you don't want to be in the position we're in currently, but you have to play the hand you're dealt. So we have a lot of debt. So we need to grow the economy, as Larry Kudlow said. And if we could lower interest rates at the same time, at least get it, instead of having it running away to the upside, it starts to trickle down and you start to see it reverse. So I think we're in a great position right now. There's the sunshine.
Mike Murphy, good to see you. Go get a triple dipper. You earned it today.
Thank you.
Okay, coming up, President Trump headlining a summit on Trump accounts, and we have the highlights. Tiffany Smiley weighs in on that and much more in the next hour of Big Money. Stay with us.
Nothing. No big news here. No big news. No news. No news. Except for the Iran stuff, which we might look at foreign affairs in just a moment to see what's going on there while we wait for Powie Wowie and all the goodies.
Tomorrow before the bell.
Yeah, it'll be important to see what they talk about. They had the spinoff already, so how's the core business doing and really kind of what they're focused on in the future.
All right, NASDAQ is before the bell as well, Joey.
We own it in the ETF. Earnings expected to grow 21%, 11% revenue growth. IPO pipeline very strong, above all the major moving averages in a bullish trend.
Jenny, TMO, better known as
Thermo Electron. So Thermo Fisher. I'm so old school.
Thermo Fisher. That's the last time we played that game.
That's funny. No,
Tomorrow before the bell, Thermo Fisher.
That's so funny. So it's up 50% since last June, and now it's trading at 25 times earnings. So what we really need. Oh, and by the way, the revenue growth is only 5%, and the earnings growth is 6%. So it's had a big run. So what we need on this call is reassurance that the government spending cuts are not impacting their business.
MA. You know what that one is?
I do know it's Master.
What is it?
It's MasterCard. It's not Master Charge, what the other people would say.
Okay. All right.
Old timers.
That's tomorrow before.
That's like American Surpress. That's all right. What else? You know what? Let's go see if there are any fun clips. All right. So let's go to CNBC's Biz. Let's see if there's anything fun over here. We've got... This is not the business one, but we've got... What is here? Meta and Google go to trial over child safety. China's next DeepSeek moment is AI. Ooh. Why everyone is suddenly talking about private credit? Let's go find out. I made a private credit video too. Let's skip around and see what they say here.
Private credit market is projected to grow from
Yes, we know it's going to grow.
Private credit has been driven by the...
Let's get to the point.
Credit are inherently...
Retail risk scale.
In any way, and that is a choice that they have made, but the consequences might be bad.
The rapid growth of private credit and its recent entrance into the retail investing world means that private credit has not yet really been tested, sparking anxiety about what could happen in a fraught economic climate.
If the economy actually stumbles, if we start losing jobs and unemployment starts rising, consumers start to pull back, it's in that environment that private credit equity will get stressed. It has not been stressed at all.
That's why you get Rick. to come in and bail out private credit.
Is risk.
The lack of disclosure in private credit can allow lenders to delay the recognition of problems until they are undeniable. Bankruptcies in private credit can happen quickly and with little warning, as we saw with home improvement firm Renault.
Well, we just saw Apollo's write-down, too.
There are some signs that the first cracks in private credit are showing. As more capital flows into private credit and new players...
This is too basic of a video. I can't handle this. Too basic. Go listen to something else. All right, so... Did Bessent fully close the door on the yen intervention? Walter Isaacson describes the downside of AI adoption. Go find out.
We're joined now by Tulane University professor Walter Isaacson. He is also a CNBC. And Walter, that we're up to that test. And do you think we're underestimating what could go wrong with this technology?
Yeah, his essay about the adolescence of technology, you say, oh, we up for it. It is indeed like an adolescence. It's going to be a transformation that's got some dangerous and weird sides to it. I am not as worried about the total number of jobs going down. I'm listening to your show today. Part of it is about all the job cuts of companies like Nike doing it because of AI. And the other part of it is all the people adding jobs because of AI data centers. I think it's important that the Bureau of Labor Statistics, which I'm losing a little faith in because it's become politicized, is very good. It should be very good. It's important that it be good in saying how much the gains in productivity that come from AI translate into more demands for more goods and services and perhaps more employment.
What about if we take all that as fact and we don't see, at the end of the day, as many job losses as some are projecting? What about the so-called brain drain? The fact that our lives are going to essentially be run by data centers. Individualized thinking is going to be shoved to the wayside because everything is.
All right. Let me take a quick look at the market, and we may come back to this in just a moment. See his response there. Somebody says just lost 5K on Apple calls. Gotta be in the Alpha report, man. This morning we're like, guys, down between now and Fed meeting. No calls. Sorry that happened to you though. Look at that, Starbucks is losing all of the 9% that it had the open. I mean, I dumped on Starbucks. It's probably my fault. I shouldn't have dumped on them. Because we did a fundamental analysis on them this morning.
Going to be determined by what is put into a data center and what is spit out.
Oh, I don't think individualized thinking will ever come connect creativity to the technology. And that symbiosis of human creativity and the problem.
Whatever.
Power of purpose or.
As a consequence of where the Fed is setting rates. He'll face questions about that from the press, but also with the Fed on pause, what will it take to get them to cut again? Take a look at this. The Fed, by its own account, is on the high side of neutral, but they're divided by how much. Some say the Fed is at neutral. Others say neutral is 1/8 of a point away. Others, a full percentage point below where the Fed is right now. The Fed is similarly divided on the outlook for the year. 11 officials in the December projections dialed in 1 cut or less. 8 had 2 cuts or more. Kevin Flanagan from Wisdom Tree telling me, even if they do keep the door open to further rate cuts, we're at the end of the rate cut cycle, so there could be, with the makeup of the committee, a little bit more unanimity around the pause this time around, that is. To bring back cuts, Gregory Dako, VY Parthenon, says the Fed will need to see either clearer, more durable evidence of disinflation or a renewed labor market downshift. As for the markets, it's pricing in a 61% probability of a cut by June and 59% chance of a second cut by December. So some confidence, but not overwhelming so, that the Fed will get on with rate cuts eventually. Of course, much of what happens this year depends on who leads the Fed, who else the president appoints to the board of governors, how much legal authority the Supreme Court grants the president to fire governors. It's also going to depend on whether Fed Chair Powell decides to stay on as governor, along with the outcome of an ongoing criminal investigation, Kelly.
Right, because Powell could end up staying. He's going to get questions about that too. You know, if Powell ends up sticking around just to spite Trump, you know, he could do that. He doesn't have to step down. He could still be a governor, right? His term as chair will be over. But let's do a let's write some of those things down for our Fed bingo board. So this will be, let's see here. Insert photo collections favorites Fed bingo board. Oh, that was from this morning.
We have a strong dollar policy.
And on that note,
we're actually going to listen to that whole interview in just a moment. So I want to play it, but I want to write this down on our Fed bingo board. So for Fed bingo, let's see what we got here. Okay. We're going to go with, you know, obviously, do the classic on time here. But I think we can pretty much guarantee, asked about subpoena, asked about, now spell this one, subpoena? Is it like that? Is that how you spell subpoena? Subpoena. Oh my gosh, I spelled it right. Let's go. Asked about subpoena. Bonus. No comment. Okay. So that'll be a good one. Okay, then we'll have asked about stepping down. About or staying on, right? Staying as gov. Bonus here. No decision. He'll keep that optionality. No decision to announce. There we go. Get those situated, eh? All right. What we got here?
Social media about dollar debasement and losing the reserves and all the rest of it, that they don't see that playing out, and the data is not there to support that either. And so, what are traders saying that we could still weaken from here? We were in the 80s in the early 2000s, so these levels are not low by any means historically.
No. Historically, the amount of time the dollar index really after like 03 is spent over 100 is prior is minimal.
Exactly.
It really is minimal. And I agree that the debasement trade, I don't believe in that. The reality here is that it's a fiat currency trade that moved gold, and I think the dollar and a lot of other foreign exchange areas kind of get caught in the kind of tornado of that.
The only real substantive thing I wonder about, and I agree, I think a lot of people are piling into metals now, that's just kind of a meme trade, but the substantive move is this weakening in the yen. Because when the Treasury Secretary said, no, we're not involved, are traders now going to pile back on and push that back up towards 160 now and almost kind of push them to get involved?
Well, here's the thing. I definitely don't see the U.S. intervening, but that doesn't mean the Bank of Japan wouldn't get nervous should a resurgence in selling the yen occur again. Even though history dictates that they should probably not intervene, I think that may be a possibility.
Yeah, absolutely. And there it is. Again, you can see a little bit of that weakness after those comments this morning, back up to 153. Rick, thanks very much. Rick Santelli.
Thank you.
Now, while Chair Powell's press conference could...
All right. Take a look at this. This is this video of somebody using a flamethrower to get the snow off their driveway. That's freaking awesome. I love it. It's hilarious. All right. What else? Let's see here. Jerry rig everything. Why I sold my Tesla. Oh, he finally sold his Cybertruck? Dude, he's been dumping on them forever. Is it just a short? Oh yeah, he did. Why I sold my Cybertruck.
This video, my Cybertruck has been sold. I'm not selling it because it's a bad truck. I actually kind of like it. I'm selling it because of Elon.
Thank you.
That Elon. We all know what this is and exactly what he's doing. And even though he tried backpedaling and saying, "Oh, my heart goes out to you," is that the face of a man who is sending his love? I don't think so. And to confirm suspicions, it won't come as a surprise to anyone, but the same guy who's throwing around Hitler salutes, Elon, has posted on Twitter about the white race being replaced about 50 separate times in the last year. At least once a
That's actually, I didn't know Elon went on this kind of tirade with all these posts. Hold on a sec. I want to see some of these. White people are rapidly diminishing. A rapidly diminishing minority of the global population. No more white guilt. Wow.
Anyone, but the same guy who's throwing around Hitler salutes, Elon, has posted on Twitter about the white race being replaced about 50 separate times in the last year, at least once a week. He is obsessed with the topic, even going as far to say that as white birth rates fall, white males will be slaughtered. He is obsessed with race, kind of like another guy we knew, but just like I wouldn't have bought a Mercedes back in 1940, I'm not gonna buy or own a Tesla now. Because if it walks like a duck and talks like a duck, but it gets worse. Experts agree that the Tesla stock is currently overvalued by like 90%.
Yeah, probably true.
And Elon keeps pumping it higher with fake claims that never come to fruition. Like the promise of 500 driverless robotaxis in Texas by the end of 2025, there are currently 0. Or humanoid robots who can do AI surgeries on humans next year. Turns out they are teleoperated. Watch this guy take off his helmet and the robot crashes to the ground.
I mean, yes, they are teleoperated. We already know that.
Kind of fake. So the world's richest man is puffing his own stock. But why? What is he?
I mean, he's always done that. That's how they survived, you know, like 2018 production hell.
Using the money for. It's pretty easy to find out, so let's take a look. Elon Musk saw the Epstein files during his Doge days at the US government, and he told the entire world on June 5th that Donald Trump is in the Epstein files, which was then confirmed with the subsequent release of the files, and the few pages that we got mentioned Donald's name more than 1,500 times. Elon has since deleted the tweet, probably due to some skeletons in his own closet, but continue
from Elon Musk to Jeffrey Epstein. I did, thank you, Jeffrey Epstein. Elon, were you able to meet up with Ghislaine? I did, thank you. Smiley face. Wow.
Is to publicly fund pedophiles, his words not mine, to the tune of $300 million. And I'm a reasonable guy, but I do draw the line at fraudulently funding pedophiles. So that's where I'm at. None of this is normal, but at least now my Cybertruck is officially gone. No hate to the Tesla engineers, just the owner. Best of luck, Elon. My heart goes out to you.
Oh, the double slam. Oh, oof.
Seems to be staking out a position where people could differ. They could say more what you're saying. They could say there's a risk that this becomes entrenched. 3% is the new 2%. The Fed's not going to finish the job. Powell actually has usually taken the other side of that so far. I mean, they did the cuts last year. He's talked about productivity. He seems to be more sympathetic to the labor market.
I will give Kevin a $100 super chat when Carvana drops to 100. Let's go. Let's short it.
In the labor market. And if we think about the 175 basis points of cuts that we've seen in the last 2 years, they have been motivated by trying to shore up and give insurance to the labor market. Like, inflation is elevated, but inflation is not elevated in a way that you want to risk a recession over it. So,
right.
And I think Powell sits very much in the middle of this committee. There's a wide disagreement. There
I
has
agree.
been for several years now. What's happening with inflation? What is it going to take to get inflation down? There's a lot of disagreement. I think Powell is very aware of the labor market. The Fed has moved to support the labor market, but inflation is an issue too. So it's a big balancing act, and he's done a good job with it so far.
To both of you, Claudia, first to you, are we going to import inflation because of what's going on with the dollar? Does anything happening, and that you see all of the discussion about this, is there anything that you're worried about?
Well, so the piece of evidence the Fed wants to see right now is goods inflation starting to turn down. That's been the reasonable base case. The tariffs pass through. We see that extra inflation that's coming from goods subside. A weak dollar could, put some pressure in the other direction. Like, we need to see that improvement. So it's not a good sign, but these aren't huge effects. So I don't want to overstate that issue of the dollar being weaker.
It does make me scratch my head a little bit, Stephen, and this is for another discussion, but in the literature, when you look at what Stephen Myron was writing about before he joined the administration and kind of this reorchestrating of the trade system, to Rick's point, you want to keep the reserve currency, but maybe weaken it and do all these things. The concern from tariffs was that the dollar would strengthen to offset that impact. And yet the opposite is happening. So if they run into a situation where we still have...
Let's go look at the dollar. So the dollar, what do we got for the dollar? Yeah. Well, here's the uptrend that's been going on since 2022, 21. Here's 22. Summer of 22, somewhere right around here. So anyway, dollar has basically been straight up through the last, 2 or 3 years of the Biden administration. Trump takes over. The dollar peaks when Trump takes office. Wow. And Trump likes a weaker dollar. We know that because he wants to promote U.S. manufacturing. But I mean, that's almost to the day on inauguration. What was inauguration? The 21st or 22nd this year? Last year. I peaked on the 13th. Yeah, a week before inauguration. Wow. Very interesting. Very interesting. Weakening. Wow, dude. Holy smokes, man. Carvana's down 18%. Oh my gosh. It just dropped another 10% after that short report. I'm going to go back to that short report. I think that was like one of the most interesting things we saw so far. I mean, we saw a lot. There's a lot out there. We're all waiting for earnings, obviously. Here. Full report. Let's go read their full report. Loading PDF. You have a virus. What? Gotham City short report. Carvana. Alright, let's drop that in. Whoops. There we go. Alright, this is the full report. Both Hindenburg and Jim Chanos lamented at the limited transparency into their related parties, DriveTime and Bridgecrest. Carvana refused to release financial details about DriveTime in a lawsuit against Carvana and its executives, alleging they carried out a fraudulent pump and dump scheme. Oh, I totally agree with this. Totally agree. So, like, my opinion of how this works, based on what I've seen. All right. This is just my opinion, and we'll see how it corresponds. My opinion. Company near bankruptcy 3 years ago. Negotiate to burn bondholders bigly and save the stock. Use the rising stock to enable insiders to sell. Insiders take that cash and buy Carvana loans, possibly at inflated values, through their other companies like Bridgecrest. That makes Carvana look like a revenue turnaround story. Stock, or as company shows profits from selling to Bridgecrest. That makes stock go up even more. which means insiders have to sell even more to buy more loans, leading to more revenue, stock up more. It's like a big, you know, but the risk is, are the insiders buying these car loans at inflated values, creating an essential Ponzi scheme, you know, farming the stock to prop the stock up, right? That collapses once it's either exposed or Bridgecrest financials show the true losses. The Bridgecrest financials probably are not sustainable, which means the only thing holding up Carvana stock is insider sales of the stock itself. So when it U-turns and people sell, the market sells, and insiders sell to keep the Ponzi going, everyone is now selling. The stock collapses 90% rapidly. That's my take. So that's my opinion, right? But we've still been in that Ponzi scheme opinion. All right, based on my other video that I made on them. All right, so yeah, look at this. Drive Time burned over $1 billion in cash, over $1 billion in debt, funded these losses. That's another private credit bubble right there. So private credit, wow, more private credit for this. More private credit. Funding these losses. That's why BlackRock wants 401ks. Blackjack. We believe drive time subsidies fuel 73% of Carvana's EBITDA. Oh, 100%. I absolutely agree that that's likely. I actually think it could be more. When do you close your shorts? I mean, not personalized advice, but typically after a big collapse in a stock, like what's happening today on Carvana, the next morning you're going to have some kind of bounce, you know, usually. Unless you know, the jig's up, but I don't know that the whole thing is up. This is just a short report right now. All right. Drive Time is levered 20 to 40x. Wow. How do they get that much leverage? How do they get that much leverage? Bridgecrest instantly marked down its $5.9 billion loan book by 15% in 2024. Yeah, because they know they're overpaying. Oops. Bridgecrest knows they're overpaying. What's with the autofill today? Apple being stupid. All right. Research opinions. This we've seen. Carvana 10K will be delayed. This is their prediction. Grant Thornton will resign as auditor. Well, they're useless anyway. Those are the opinions. Basis of opinion. Let's look at the actual stuff. So Carvana's financial information. Here's the revenue. Income from related parties. And here's the growth. So it's left to right. This is income from related parties growth. Massive. Let's see here. Let's see. Drive time burns over $1 billion in cash. Net margins are 0. That doesn't surprise me. To fund this, they issue more debt, leveraging up. How do we know what their leverage is? I'd like to see the drive time debt. Its loans historically lose 30%. These toxic loans are what backs their debt issuance. How do they get this debt? That's what I want to know. Like, somehow they're able to keep getting this debt. Carvana's trying to keep financial statements sealed from public view. Let's see here. So, if only they could show where they get the debt. Drive time appears to be run like a standalone for business. Ugly time. What is this? Carvana, nearly bankrupt. We know that. This is just a history of it. Drive time, statement of cash flows. Purchase of finance receivables, originations of finance receivables, net cash in operations, nearly down $1 billion here. Well, if you combine 24 and 23, okay, that's fine. So, but where's the leverage? I mean, I guess we could just look up Drive Time's balance sheet. Oh, I'll just search for 20. Here we go. Well, this is at the beginning. 20 to 40x leverage, though. 2025 leverage sits at 20x is what they think. Okay. Leverage ratios. This is for credit acceptance. Okay, here we go. So what is this? Drive time net debt. Net debt, $4.5 billion. Oh, compared to EBITDA. That's how they're considering the leverage. So they're looking at how much debt the company has against adjusted EBITDA. Okay, that's how they're coming up with the ratio. Yeah, it'll be really interesting to see how this goes. All right. Enough of this for now. But, yeah, Carvana's now down 19%. Holy smokes. Yeah, the movies are going to be crazy when that thing collapses. Drive time annual report obtained from the Freedom of Information Act. Oh, that's how they got it. I was wondering, because I'm like, how did they get these financial reports? Ah. Interesting. Net income, nothing. They don't make money. These are thousands. Well, 64 million bucks, that's not nothing. Total cost expenses, used cost of vehicles, revenue. This is drive time. All right. And how's the balance sheet? Balance sheet. How they got these is awesome. Where's the balance sheet? Come on. Dealerships. Give me the balance sheet, please. Like, who does the debt for them? That would be so interesting to see. Here we go. Finance receivables, $4.9 billion. Total liabilities, these are portfolio term financing. So they're taking on debt from somewhere. Term financing in their warehouse facilities. So who's doing their debt? That would be interesting. If we could see what bank is involved in this. And then watch, the bank that's involved is probably giving them positive ratings for buy targets. You know, that's how it's all rigged together, isn't it? Credit. Let's see here. Down payments. Number of loans originated. Delinquencies. They've got 2024, 24% are 0 to 30 days delinquent. Oh my gosh. That's a trashy portfolio. Wait, how many if I add all this together? 24.5 plus 9.7 plus 5.3 plus 5.4. 44.9. Oh my gosh. Percent of drive time loans are delinquent. Wow, dude. Holy smokes, man. That's even worse. For the year ended 2024, we saw an overall increase in delinquencies. So who lends to them? We amended our DT warehouse facility, resulting in an extension of the commitment expiration to February 2026. Uh-oh. So that's actually next month for their warehouse facility. But that's smaller in terms of lending than their term facility. Oh, here we go. We renewed advance rate 75% extension commitment to July of 26. Okay. So the warehouse facilities. Where's their term? Their term loan. Operating leases. Here are the facilities. Got a lot of loans. I can't find it. Term. Financing terms, drive time brand. Oops. Yeah. Well, either way. So we're running through some AI. There you go. Term financing. Here we go. We sold retained bonds. Oh, they're selling bonds for these. Okay. So they got their warehouse lines and bond sales. But they're 45% delinquent. It's not good. That's nuts right here. Financing receivables. That's nuts. And this note about how they think it's going to get worse. I mean, like, how is it trending? Up. 2024, delinquencies trended up last 3 years. 61 to 90 days. You actually had a little bit of a trickle down, but that's only because the long-term delinquent ones went up. People just stopped paying their loans. But it seems like regularly only about half of this portfolio is actually current. Wow. Wow. Almost down 20% now. Hey, the Qs are stable. All right. What do we got? 30 minutes to Powell? Let's listen over here for a moment. Oh, well, they're not back yet. Let's try the doomers then. Doomers, and gloomers.
He stays. I mean, I think his character would be that he would stay and kind of help shepherd the next Fed president through a very delicate fight to maintain independence, and I don't think he would walk away. I mean, he's going to have that great book deal whenever he leaves, whether it's in a year or 4 years. So I don't think he has to rush out to sign. I think that he can stay and finish the job. He strikes me as someone who has a lot of personality buried underneath a public visage.
Fascinating. Some unexpected answers from Catherine Edwards. Catherine, it's great to see you. Thanks for being back with us here on Bloomberg, and look for her work, Bloomberg Opinion, OPIN Go, on your terminal, and of course at the website, Bloomberg.com. I'll meet you back on the late edition of Balance of Power, 5 p.m. Eastern Time.
All right. Just trying to get a little bite to eat. And of course they got to cut the commercial.
Backed by...
Dang it. Just want a bite to eat. Let's go to Fed reports in 28 minutes. Ugh, all of them are on commercial.
that are good to say about this. And the private donations, Nicki Minaj, kudos. Michael and Susan Dell for getting the ball rolling. I think this might, along with helping children, be the best thing that's ever happened to American philanthropy.
Yeah, I'll get to Secretary Bessent's words on this, the Treasury Secretary, and how he sees this in just a moment after I give a little detail. So the baby has to be born on or after January 2025, and this goes up through 2028. Okay, you have to make the election on your IRS Form 4547 when you're filing your tax returns. This is going to start in July. Families can contribute $5,000 annually. Employers can contribute $2,500 per employee. And the money has to be invested in funds that track the broader stock market. And the key is that it can't be withdrawn until the child reaches 18 years old. Secretary Bessent explains it further. Listen.
You can access the account until you're 18 years old. And when you're 18, you could either access the account, help pay for a first car, home, college, or you could roll it into a retirement account. And then just based on current returns or historical returns, it could be $500,000. So it could be a great supplement to Social Security.
And by the time a child's, say, 28 years old, we did the math. I mean, you're looking at if that parent's contributing, maxing out what the contributions that they can make with the matches and everything, it could be $1 million in that child's account by the time they're 28 years old. These are some of the companies that already say they'd match, including Charter Communications, BNY, BlackRock, Robinhood stepped up, Charles Schwab, Bank of America, JP Morgan, and more. James.
Yeah, and it really addresses a lot of the concerns you have, whether you're a taxpayer or you're a donor to charitable causes. How do I know the money is going to do what I intended it to do? How do I know the incentives are going to be good? How do I know it's not just going to be wasted and given to a bureaucrat or a nonprofit executive or someone who doesn't have any incentive to save it and grow it and then use it for some productive purpose? So it has so many benefits. I think it's wonderful for teaching children. And again, on the philanthropy side, the donation side, how wonderful to know that it's not being frittered away by overpaid nonprofit executives building empires, people pursuing radical political agendas that the donor never intended. We've obviously seen that through history. Henry Ford II famously quitting the Ford Foundation. So I think this is really, really exciting, and most of all for children to have that stake in the United States.
All right, more shilling the Trump accounts. I get it. Okay, 20-something minutes until Jay Powell. Thank you for that. Corey says, been watching for 5 years. Gold course subscriber. Appreciate all you do. Help me in more ways than 200 characters can say. Enjoy vacation. Oh, thank you. Okay, let's try here. We got 26 minutes to Powell. Well, until they release a statement. All right, come on.
Most European countries, exports are like 50% of GDP. So from that perspective, the dollar matters actually less for the US inflation relative to how much the euro matters for inflation in the euro area.
TK, I think we've got to get to the elephant in the room, and that's Torsten's big call for the year ahead. Do you think that Wall Street is underplaying just how hot GDP could be in the next few quarters?
Well, if you do go into your Bloomberg screen and look at the consensus expectations to growth, it tells you that growth is expected for the next 18 months to literally for every single quarter be 2.0. That happens to be exactly the potential growth rate from the Congressional Budget Office. In other words, there is not much drama to the upside expected. There's not much drama to the downside. But if you begin to look at what happened on January the 1st with the One Big Beautiful Bill being a tailwind, we still have AI and data center build out, that's a tailwind. We now also have the dollar going down, that's also a tailwind. And we also have oil prices going down, that's also a tailwind. So the risks are indeed beginning to rise, that we're going to see growth accelerate as we go through this year. So I do think that it is maybe laziness on the forecasting community, but at least it looks like from the forecast that people are just penciling in 2.0, meaning the long-run growth rate.
Let me follow up, because I don't want to lose friends this afternoon either. But is Wall Street getting intellectually lazy? or are they just struggling to price the chaos?
Well, I do think that it's, of course, a struggle to figure out both, of course, what policy changes have meant. We've been through the last week or so, also some pretty significant changes on the geopolitical front. So it is still very uncertain in terms of what are the implications when it comes to what's coming with tariffs. Is more coming? What's coming with tariff uncertainty? Are companies going to pull back because there's more uncertainty? But all that aside, I mean, it still is the case that if you take fiscal policy very expansionary, now you have the dollar going down, you have oil prices going down, and you still have a strong AI boom with a data center and energy build-out. Those are all very strong tailwinds, not only to capex, of course, on its own business fixed investment, but also to consumer spending. So I would expect that growth is going to be higher than what the consensus is expecting at the moment.
I'm not going to ask this of Vice Chairman Clare. That's not what he does, but I am going to ask you this. I want you to frame out right now your call on real GDP, the actual GDP number, and the inflation on top of it to get the nominal GDP. If I take Atlanta and add inflation, I got the United States pretending it's China right now. 6-7% nominal, 5.375 nominal published. Where are we going to be in a year with a new chairman? Real inflation, total nominal.
Absolutely. So the starting point for that discussion is exactly that inflation today is about 3, a little bit less. It's not 2, which is where the Fed is supposed to have inflation. Right. So that's why inflation is a little bit too high already, even before we've begun to see an acceleration. So that's why the next several months, what companies are going to do, especially in response to the One Big Beautiful Bill, will be very, very critical, because that may result in that by the end of the year, we could have the nominal GDP could indeed, to your point, Tom, be a lot higher than what people are expecting.
Okay, well, let's take this over. While you were in Davos at the piano bar with Barry at Cloudflare, John, I was reading Orzeg Posen. Peter Orzeg Lazard, Adam Posen, a giant at Peterson Institute. You and I read the essay on a persistent higher inflation that we're not prepared for. That's how you get there, isn't it? Off the wages they model in their
Absolutely. Peter Orzeg and Adam Posen are heavyweights.
Well, you have persistent higher inflation, you got a problem. Those rates are going to break private credit eventually. So what do you got here? Opinion piece from the Council on Foreign Relations, published today, writes, the AI bubble is getting closer to popping. Okay. AI is driving the S&P 500 and the economy forward. Few dominant firms have become celebrities. The line between hype and reality is blurred. What may burst the bubble are not worries about circular financing, growing debt, or Chinese competition. Instead, the unanticipated drag of tariffs and the fall in the number of migrants might bring AI down. Wow. That's an interesting one. President Trump has promised to do whatever it takes to lead the world to AI, mobilizing the federal government and pulling its industrial policy levers. His administration is opening up federal lands for data centers, fast-tracking permitting, taking equity stakes in Intel, a lithography startup, as well as critical mineral firms. It's taking on state-level AI regulations, using executive authority to clear the regulations, and his administration has exempted servers, semiconductors, circuit boards, and many other electronics from tariffs. Okay. These coordinated policies advantage AI over traditional manufacturing, boosting the surge in interest in announced capex. As a result, deep-pocketed hyperscalers are pouring hundreds of billions of dollars into connected servers. Compute power is expected to double by 2030. As data centers proliferate, so do their electricity demands. Power demanded from AI. Yeah, US and China lead. Input prices were already rising for electricity generators. Punitive rates on steel, aluminum, and copper wires disproportionately hit metal transformers, power lines, and transformers. The electricity storage batteries that utility companies use nearly all come from China and face even steeper levies. Oh, interesting. So they're making the argument that to actually build out the power demands, Trump's tariffs are really screwing that ability. Yo, Meet Kevin, plug the app again. I can't remember what you call it. The Meet Kevin app? Trump's migration policies are making the AI build out slower and more costly. I mean, yeah, it's a good point. Tech CEOs loudly worry about not having enough scientists, AI researchers, engineers, and other highly educated workers in H-1Bs. But AI's labor market vulnerabilities begin at construction sites. 25% of those building in the trades come from abroad. 1 in 7 are undocumented. With harder borders, high-profile ICE raids, and stepped-up deportations, say goodbye to the days of picking up extra skills outside of Home Depot. Surveys of contractors suggest more than 80% of openings for workers. These gaps have become harder to fill. Worker shortages are the #1 reason for project delays. New residential housing is down at a 5-year low. Commercial construction is down 13%. Building of power plants stalled. Data centers keep growing. Right. Power investments. Annual private construction spending on. Right. So, cumulatively, this line keeps going up. This is just annual spending. Got it. For AI data centers, hundreds of billions of dollars in capex. Don't go as far as they might. This dynamic is likely to worsen in 2026. Trump is zeroing in on housing and affordability, focused on lowering mortgage rates and the institutionals. But home building push is around the corner. Lutnick most recently won with builders to hash out what the administration needs to do. Interesting. That will mean more residential projects chasing the same dwindling set of electricians, welders, and so on. Interesting. Interesting argument here. All right. Government needs to focus as much on electricians, welders, and engineers. Domestic training program could help, but the crunch is hurting the industry. More H-2B visas, EB-3 visas for building trades. So more visas. Okay. AI success or failure will depend on whether or not they could start to show the worth of those massive investments. But even if success in transforming the way industry after industry works, cost and time will determine who gains and wins and when. And today, Trump administration's tariffs and immigration policies are a big part of what's holding back American models and companies. Wow. It's an interesting part. Or an interesting argument. That is an interesting argument. All right, what's over here?
Here, we're likely to see the Fed pause.
The Fed's likely not cutting.
I think they'll hold.
Oh, that's just sort of a sizzle that they're doing right here. All right. Let's see here. We've got little news while we wait for the Fed. Well, that's not a surprise. How's the market doing now? We've got Q's at 30 bips. Somewhat stable. Palantir is still down about 4. Carvana is now down like 21. Right on my line now.
This afternoon on the S&P 500, a slight pullback from record highs. We've gone 5 days with no losses on the S&P. Will these losses stick? In the bond market, twos anchored around to where Fed funds is right now. Let's call it 360 on a 2-year. 10s in a range of 410 to 430 for the year so far. 426 at the moment, and up a single basis point. Where the fun and games have been over the last week, the drama, the fireworks, the headlines. In foreign exchange, euro dollar 119.21 for a heartbeat. Euro dollar was north of 120, and what happened? An ECB member, TK, pushed back against where the euro was and talked up the prospect of acting if this move continues.
That's the game theory of this, and you've got a neo-mercantilist president, and I don't think he understands the game theory of how they'll push back. We mentioned Adam Posen earlier. William Klein at Peterson owns the high ground on this. they push back.
What do you make of the Sell America trade? Seen this headline repeatedly: Sell America. People are selling America every time we have a bit of dollar.
You know
weakness.
where I am at this.
Go on, tell me, share it. I got views too. I got views too. I'm set myself.
I was down in Houston with the CFA Institute, and somebody said the same thing as well. I think it's the craziest thing going. We have led on technology. I'm going to get emotional here. I remember the day the 3 astronauts died at Cape Canaveral. I remember it clearly as a bell. We had the technology then. It's different now. We're not going, well, excuse me, Mr. Musk, I know you're listening. We're not going to the moon, but we're there with AI and technology. We're leading the way, and everybody else.
I'm pleased we get to talk about this, TK, because some of the price action we have seen is also consistent with the pickup in global risk appetite. If you see the Kospi at record highs and up 20% for the year, the Aussie outperforming in G10, copper at a record as well, small caps domestically outperforming large, doesn't that just speak to a better growth pickup domestically and internationally?
You know, we made a joke about the British song from Pulp here about the groceries. There's a half of America flat on their back looking for 2 or 3 rate cuts now.
Then we're going to
relieve them. I'm not sure those rate cuts relieve them.
Kathy Jones of Charles Schwab joins us now. We're going to get into this Fed action. That decision is about 13 minutes away. A news conference 30 minutes after that. Kathy, let's get into the decision. Most people assume no change. Any nuance in the statement you'll be looking for?
In the statement, you might see some adjustment to what they said about inflation, maybe that it has, has stabilized, but still elevated, and then a slight tweak there to the statement. Don't expect much else because, frankly, there's no logic to making a change at this stage of the game. So I doubt that there will be a big change to the statement.
Kathy, one thing I've watched in the last 72 hours with the dollar dynamics, and as John mentions, commodities, is the real yield, particularly the 10-year real yield, just as a benchmark, has been very quiescent. What does that mean to you that the inflation-adjusted yield has stayed stable in a tight range?
Yeah, I think that there's some influence here of kind of the stability provided by the Fed now, the expectation of a steady policy. You do have the $40 billion in a month that they're injecting into the system. I think some of that is also reflective of just uncertainty. We don't have a really clear vision of where we're going from here. I think there's this hope for this productivity surge to continue. There's hope at the same time that we're going to get, a big boost in the economy from fiscal policy, which seems logical, and yet there doesn't seem to be the market pricing in a huge risk of inflation going forward. And so I think the markets are sort of sitting here, the real yield sitting here, and kind of trying to figure out where to go.
Well, and Kathy, given that uncertainty, why do you think the S&P continues to make all-time highs, including today?
Well, the good thing is, Thorsten, I don't do equities, but I will say that the financial conditions are very easy. When you look at where we are in financial conditions, credit spreads are very tight, corporate profits are near record highs, and the Fed's bias, at least from the dot plot, is towards easing, and a softer dollar. I would say that all kind of adds up to a pretty good environment for the stock market.
Yeah, it's important here. Kevin Gordon had the best tweet out of Schwab yesterday. Kathy took the day off, and Kevin Gordon said, you know what? January feels like it's 9 weeks long. That's the wall of worry that makes equities go up. I believe that's what Ms. Saunders would say.
9 weeks is kind. This feels like about a year. TK at the moment. Kathy, what's remarkable to me so far is just how stable, until very recently range-bound, the 10-year bond yield has been in the face of all the risks, not just domestically, but internationally as well. Torsten's talking up the prospect of strong GDP growth for the year ahead, maybe even inflation closer to 4, never mind 2, and we're trading at 4.25 on 10s. What gives?
Yeah, I think all the, and I agree with you. I think the yield should be moving higher. We have seen a steepening in the yield curve, and that's really kind of our big call for the year, actually since last year, is a steeper yield curve on the assumption that the economy outperforms expectations, inflation doesn't come down as anticipated or not as quickly as anticipated, and that the risk from the Fed is, particularly with the changes taking place, is that it acts on an easing bias rather than holding steady for longer. I think right now the market has steady policy priced in, well into the middle of the year. If you get a new Fed chair coming in or some rotation of the members that's unexpected due to all these lawsuits, you could probably see a push for easier policy sooner rather than later. And that, I think, would start to get yields moving higher at the longer end.
Torsten, that's my headline of the year so far. It's not sell America. It's the fact that people haven't really been selling treasuries in the face of everything we're discussing. Why are treasuries so stable in the face of all the risks that you're thinking about?
Well, because there's worries now. If the Fed is telling me that short-end rates are going down, well, many people are worried about, well, maybe that means that there is a slowdown in growth coming. But if you begin to add up fiscal policy, AI...
That's the yield curve they're talking about, right? The yield curve shows you that between the 10 and the 2. The bond market is flushing out a slowdown.
In C mode that they're in today is very important, and that's why the communication from Powell about monetary policy will be very critical. Will he begin to signal that there is indeed some upside risks, as we're talking about here?
Do you think yields end the year closer to 5 than 4?
So I do think that 10-year rates at the moment are driven by, of course, the fiscal challenges, but it's certainly also driven by Fed expectations. So if Fed expectations are indeed that rates are not going to move much in the front end for the rest of this year, well, then I do think that there is a chance that long-end rates could be higher.
John, to your good question here, and I'm going to take this from Orzag and Posen. What's the single catalyst that changes this dialogue? And the answer is it's wage dynamics, inflation-adjusted wages and nominal wages. If you get a wage pop, everything changes in this.
I'll tell you one thing, Tom, so far, it's not Tokyo. To have the convulsions we had in JGBs just last week, and for that to only engineer a 6, 7, 8 basis point move at the long end of the US curve, I was surprised by that. If you told me we'd move by 20 to 30 basis points at the long end of the Japanese curve, see yields we've never seen before in Japan, I would have expected a bigger move last week in treasuries than the one we got.
And you did see yesterday at its 40-year auction in JGBs that actually there was very solid demand, telling you that we're getting to the point where investors are interested in the levels of yields that they're
asking for a friend. Did Apollo load the boat?
I don't think he's going to answer that one. Subhadra Jafra, SocGen Mai. Subhadra, welcome to the program. The stability in bonds so far, what shakes us out of this recent range?
I don't think there's a clear catalyst, to be honest with you. I think that what shook us out last week was, in fact, the sell-off in JGB yields. We did see a pretty dramatic sell-off. Yes, treasuries outperformed JGBs in the sell-off, but for the most part, that was the only catalyst. I mean, there are other dynamics that we're missing in the bigger equation, right? It's the fact that the Fed has been buying a lot of treasury bills. There's been a lot more issuance in the very front end of the yield curve. And then in the long end, coupon issuances are expected to remain stable
There we go.
for the remainder of the year.
I just made a banner really quick to put it at the top so I don't have to say it as much. Coupon B-Day expires tonight at mekevin.com and househack.com.
Putting a lid on term premia in the U.S. and 10-year yields, as a result of that, I think are somewhat range-bound.
The history, Subhadra, of stocks
Gold at 4,300 an ounce now.
on global Wall Street. Is there a bet on this meeting right now?
Not really. I think that the expectation is very consensus that the Fed is probably going to keep policy on hold. And if anything, the market seems to be continuing to push back on the timing of the next easing. We almost have no cuts priced in until June of.
Thanks, Kelly.
And there's just a lot of uncertainty. And really, in some respects, it feels.
All right. Yeah, let's go do bingo. All right. Let's set up bingo. I feel like an old man when it comes to bingo. Gotta move the camera. There we go. That's a little better. All right. What are we going to do? So, we need a freebie. We're going to we got our freebie in the middle, but we need another one. I think it's too easy if I put it in that one. I should put it in another one. Let's put it over here. Off the middle one. That's going to be over here. Purple. High. All right. Jobs are stable. Labor market. Labor market. Stable. All right. Let's see here. No comment about the subpoena. Yep, we got that. Somebody says, I've been playing Fed Bingo for 50 years. Let's go. And you're only 29. That's cool. Ooh, laptop. Okay. If we need fill-in. Obviously, let's do some of the generics. Inflation expectations remain anchored. Expectations remain anchored. Let's do, obviously in like 3 minutes, we're going to get no cuts. Like, we already know that. That's going to come out. And then we'll get a statement we'll be able to look at in just a moment. And then, of course, we'll have the presser in 30 minutes. Oh, yeah. Good afternoon. We got to get that. That's another good freebie. I like that one. I like that one. Good afternoon. Okay. How about, another one that I like doing is ask to repeat question. Repeat question. I think, they'll announce they'll be on hold. I would say, obviously data dependent. Data dependent. But I think what they'll do is they'll basically say, we're not discussing rate cuts at this time. Like, that would be a big line. It would be bearish, right? So we're going to make this the, whatever. I'll just, it doesn't matter. All right. Bearish. No, discussions, because that's how they announce that they're on hold. No discussions on rate cuts. Rate cuts at this time. That would be bearish. That's why you need Trump to come in and save the day. Okay. Wow, Carvana is like bouncing on my line, down 20%. This random line I drew, and that's what it's bouncing on. Obviously, it's going to be no rate cut today. I think that's another freebie almost. No cut today. All right, I'll just throw it down here. No cut today. Decisions in 30 seconds. We'll come back and fill more of this in just a moment. But the statement is going to come out now. So I will read it from the news wires. And at the same time, we'll listen. They're going to be slow. So, okay. All right, it's going to come across the tape in just a second. Come on. Oh, there it is. A reaffirmed statement on longer run rated goals. Vote in favor of policy 10-2. Waller dissented in favor of a cut. Waller and Myron went for the cut. No way, dude. Yup, Waller. He wants the job, bro. He wants the job. 10-2, though. 10-2. We have reaffirmed statement on longer run goals. Assessment of economic activity says it's been expanding at a solid pace. Uncertainty about economic outlook remains elevated. Attentive to risks on both sides of the dual mandate. Unemployment has shown some signs of stabilization. There's the word. Stabilization. That's the magic word right there. Obviously, we didn't get a change. No longer judges downside risks to employment as rising. Wow. That's bullish. That's a bullish line. That's a tweetable, bullish line right there. I like that a lot. Nick T also posted his red line, but Fed no longer judges downside risks to employment as rising. Very bullish catalyst. I like that. Here's Nick T's red line out already. So we've moved from moderate pace to solid pace. Job gains have remained low rather than slowed. Employment rate has shown signs of stabilization. They removed the downside risk to employment, and they decided to maintain rates. And then, of course, Waller. Wow. Myron didn't go for a half-point cut. Myron only went for a quarter. Oh, that's really interesting. Oh, all right. We should write some of this stuff down. That is, I'm very interested in some of this. So this is somewhat suggestive that even Myron is starting to slow down his thoughts on rate cuts. Let's jot that down on the actual document. Let me see here. Open. Here we go. So Myron downgrading to 1/4 cut equals, even Myron sees the economy is strong, bullish, right? Waller is only cutting because he wants the job. Waller is really only cutting because he wants the job. That's why he voted for this. But this 10-2 is pretty clear right here. This is huge. This removal is bullish, very bullish right here. I like that. And then some signs of stabilization. That's also bullish. Also bullish. With solid growth. I mean, this is good. I think this is very, very good. Interesting. Still between now and, it's usually between now and Powell's speech that you kind of get read, well, at the beginning of the day and Powell's speech. But what's fascinating to me is that this is actually, the market is used to rate cuts, right? But to me, this reiterates, don't plan on rate cuts anytime soon. I think they're not going to talk about rate cuts at all. This removal is bullish. Ironically, the market will hate this. The market will hate this because the market loves rate cuts from uncertainty around jobs. But, ADP weekly and S&P PMI reports are showing us that unemployment is stabilizing. Jobs are stabilizing. So this was predictable that that they were going to say this. Economy expanding, we know that. Let's see. Job gains remained low. Inflation remained somewhat elevated. They got rid of the sort of little tariff remark over there. This is good. Balances have declined to ample purchases. Yeah, they don't have to make any announcement on that. No changes here. And what else? Goolsby. That got removed because they basically all voted to keep it. Okay. Yeah. Let's go see what Seema Sis is saying.
And then everyone who's been bidding up metals and pushing down the dollar and worried about, the new chair, how dovish they might be. This statement takes a bit of a breath on all of that and just says, wait a minute, there's still, maybe not a slam dunk case for a lot more.
But I don't think that's really, I don't think it's happening because of liquidity to come. I think that's because of liquidity that's right now.
Mm-hmm.
There's plenty of beer in the fraternity right now without putting any more in. But I think that's. You did go to Michigan.
I just got $45,000 and 2 different wires just hit for a HouseHack investment. So whoever sent $25,000 and $20,000 to invest in HouseHack, I get wire notifications right away. The other ones I get the next morning. But sort of aligns with my my $1 million investment that I wired over this morning. It's my birthday, so I'm like, what are you gonna do for your birthday, Kevin? Oh, I'm just gonna invest $1 million in my startup. Okay, so let's go make a note. Fed decision. The pause was expected. Stabilization of employment is bullish. It's not bullish more rate cuts, but it's bullish stabilizing economy and not recession. So let's see here. Okay, we've got that in here. Drop that at the Fed. Obviously, we got, no cut as expected. You could see these notes if you want them in the Meet Kevin app. Meet Kevin app is free to use. Okay, good. So let's listen in here, and I want to see what bonds are doing.
Today under yesterday's low yields, and we were at 358 before the statement was read. We moved down about a basis point. We moved up about a basis point, and guess where we're at? Right at 358. If you look at the 2-10s,
yeah, the 10-year just popped up a bit on this. Not a surprise. 4.265. So if I go intraday, see the intraday movement here, and then let's look at the 10-2 spread. Widened a little bit as well.
and right now, should it close here, it's actually back above what was the 2025 low close. So it's got some buoyancy. We were discussing earlier, anybody who looks at a dollar index chart past 2003 sees the amount of time over 100 is minimal. So we shouldn't make a big deal about this, but maybe the biggest story is the normalization of all the infractions central banks did for about 7 to 8 years right before COVID hit. And then they really went off the rails with things like QE4. So I think the bottom line to this discussion and question.
I love this guy's anger. All right. Let's see. Nick T. Modest revisions. Let's see. Waller wants to stay in the race. Yeah. I love all these AI comments. You know, like you can read these AI comments from a mile away. This wasn't hawkish conviction. It was a pause for optics. The easing bias is clearly alive. No, it's not. This is not a pause for optics, bro. They were cutting for the labor market to try to preempt labor market pain. Stupid, dumb AI. Loser. All right. So, try the Dubers. See what the Dubers have to say about that.
They were before. I think that's an important fact of life. I mean, the real debate and the real issue is, you know, within the Fed and in the markets is, you know, where's the neutral rate? Where do front end rates end up? And we still think that neutral for the funds rate is somewhere down around 3%. But obviously that's going to depend on where we are in the cycle as well.
And this may be an unfair question, Rich, but I mean, do you think an incoming Fed chair is going to make dramatic changes to the Fed staff in terms of who's head of which departments? Or how do you think the incoming chair might think about things if he or she doesn't think that it's likely that interest rates are going to be coming down because of persuading the committee?
You know, I'm not sure about that. It is important just for the public to know that the board staff does report to the chair. You know, during my time there, Chair Powell asked me to get very much involved with the staff, and I learned a lot from them. But I think there typically have been and always will be changes in staff. People get promoted, people moved on. And I should say during my time at the Fed, the senior staff I worked with was incredibly capable. So,
all right, let's pull off this for a moment. Let's finish our bingo board here. So I wrote, next Fed summary of economic projections, I'd expect fewer cuts, to get I wouldn't be surprised if Powell says that. I think he's kind of going to be he's going to be a hawk today. Powell will hawk to us. Powell will hawk to us. A, economically, and B, to spite Trump. Right? So I think you'll get the hawking. Meeting by meeting. Let's see here. What else? Give me some more thoughts. What do we think Powell's gonna say today? We've got, obviously they've got near consensus to hold. Consensus to hold. Hard to have consensus at turning points. Hard to have consensus at turning points. And they almost have that. Hawk Tua, that's right. Japanese yen question, and he'll point to the Treasury. He deflects to Treasury. That's what I would anticipate. Private credit, I'd say he'll say monitoring. Monitoring private credit. That's usually what he does. Monitoring private credit. Okay. Let's see here. All you heard is Powell will hawk to a Yeah. Oh yeah, inflation from tariffs. Yeah. Year over year, tariff inflation. And we have to make sure that doesn't have to need to ensure inflation does not entrench, right, into expectations. Year-over-year tariff inflation will be noticeable soon, visible soon. Come on. Soon. Stop it. There we go. Okay, a few more boxes here. Ready to act. I don't think there's anything super close now. Dual mandate. Balanced dual mandate. That's what I would call it. Balanced dual mandate. Okay. Inflation still above target. Still above target. Bonus. More work to do. How do you think the Q's will hear? Okay. I think you really need Trump's announcement to help pop things. Because I think he's going to be pretty hawkish here. Blue tie today. Oh, dude. That would be hilarious if he comes out with a blue tie. It's not going to happen. Because even though he would love to send that spite signal, I would give that a 0.5% chance of happening. But I would die if that happened. That would be hilarious. I can't put that on the bingo board because the odds are just pure gambling on that. That's like a 10,000 to 1 bet right there. So, and he cares too much about his job and the independence of the Fed. So I can't see him doing that. So we have 3 more to fill in here. Are you expecting a Trump announcement? I think if the stock market falls today, Trump will rush his announcement. I don't know if it'll be today, but, today, tomorrow, it's going to be soon. He said January. January's over basically in 2 days. Maybe he'll announce it on Friday, right? So it's sort of like after the market. Red tie, no chance. That's just like guaranteed no chance. You may as well say, is Powell going to come out with knee pads on, The dollar, I don't know that he is going to focus much on the dollar. Squarely focused on dual mandate. Yeah, we got good afternoon. Let's say, how about something about resilient or strong growth, right? Very, very strong Q4 growth. Very strong Q4 growth, right? Which the worry is like, could this be deflationary or sorry, inflationary? Too soon to determine if AI will boost productivity. All right. I mean, we know it does, but it's going to be too soon for them to say that, which would be disinflationary. Do we have data dependent on here? We do have data dependent on here. I need one more. Blondie come back. I think she's in Europe now dealing with the ECB or something like that. Smilyak? Yeah, where is she these days? Smilyak, New York Times. She is in Brussels. I write about the European Union. I am the Brussels bureau chief for the New York Times. Wow. Good for her. We got the subpoena question in here. We got no comment. Not my job. I like that one. I'm going to put that one down. Not my job. Not my job. All right, there we go. So if you want to play bingo, go ahead and screenshot it with that little coupon code banner up there. Hold on. Can I make it a little bigger? Ish. He's going to get cut off if I do that. Dang it. No. Oh, I know what I can do. No, I can't. Yeah, you have to deal with the cutoffness. Stupid thing. Come on. There. Nope. Right on the edge of glory there. That's pretty good. Right there. That's the best you're going to get. Productivity got cut off a little bit at the bottom. Gotta love coupon expiration day. Yeah, it's my birthday. And the coupon code is B-Day. That's both, by the way. We've had quite a few people hit us up, by the way, on our ReInvestAI. Just because a lot of people are finding deals with it, which is really great. And it's so early in our AI beta release of it, which is really exciting. And you pop it open, and it's like, oh, what are the good deals in the area today? And it's amazing. And you can kind of just scroll through them and go, like, pick the deals that you want in your city, right? And when the valuation estimate comes out, man, that's going to be fun. That's going to be a fun one. Oh, yeah, that's juicy. What is over here? Yeah. So I would say for the stock market, though, to switch gears here, you know, this is a broadly expected day. I don't know that people are like really freaked out by, oh my gosh, you know, Jerome Powell held. And he's going to announce that he's on hold. That is just too strong, but it should be bullish, you know, broadly. So the labor market not falling off a cliff is great. You don't want to go into a recession. If you go to SanDisk, still up 8% here. It doesn't care at all about the Fed. It's kicking butt. Carvana, look at that bounce, man. That's crazy. I mean, this line has been here forever. At 376, we get a 20% collapse. And where does it decide to turn around? Right on Kevin's line. It's like the reverse Nike swoosh. Anyway, remember, you can always get my technical analysis every morning when the market opens up by joining the Meet Kevin Alpha Report. Join once, you get lifetime access. All the courses could be a tax write-off, private live streams, fundamental analysis every morning. Where am I on the bear bull scale if Rick is at the Fed? Well, I think that's a foregone conclusion at this point. So let's write it down. So this was my last bear bull scale from 2 days ago, and I was at 6.3. So I actually would go to 6.5. Boosting 2 points on a Rick R at Fed. IMO bullish. Bubble expanding more. So it doesn't eliminate private credit risks. Also potentially papers over some private credit risk in the short term. Well, I would say medium term is more appropriate. The next year and a half. Next 18 months or so. Eventually, the bust will be the worst ever. But Rick will be a useful tool for delaying that bust. My take. So, and I'm already pre-writing that in. So you can actually see my bull bear scale right here, just to see its evolution since September. This is kind of how my bull bear scale has been. So thanks for asking. All right, let's listen in over here.
And then you ask at the end of the beer, well, how are you even investing your money? Are we still buying dollar assets? Because dollar assets still offer great returns, again, higher levels of yields. Also in AI exposure, you don't get much AI exposure if you invest only in European stocks. You don't get much AI exposure in Japan, Canada, and Australia. So the US offers things that are simply not being
offered. You get AI exposure at HouseHack.
12 hours on the set in London the day of.
Just invested $1 million into it. That round is closing January 6th. If you haven't checked that out yet, you can do that at househack.com.
Sterling.
I hope so. Yeah. I'm looking at the chart here, and we're right up against the range.
Given the recent price action, I wish I was funded in sterling, but given this is my 10th year over here, I'm still funded in dollars.
Your review's over.
Okay, thank you, sir. Thank you, boss. Let's get to Diane Swank of KPMG. She joins us now. This news conference starts in about 7 or 8 minutes' time. Diane, welcome to the program. What are your questions for Chairman Powell when this news conference starts?
Well, I think one of the questions that hasn't been asked of the Fed is we've heard the Fed talk about curbs on immigration.
Sorry, did I say Jan 6th? I always do that. I mean February 6th.
And
yeah, because we closed around December 31st. Read the offering circular. This is not a solicitation. Then we reopened it around Jan 17th just to get some stragglers in, myself included. That ends February 6th.
And over the summer, and that is because of curbs in immigration. We know that foreign-born and native-born workers in some professions, most notably in the service sector, are complements, not substitutes for each other, and that's something that we're watching closely as well. And even with the productivity growth we've seen, the AI boom that's going on is currently, with that productivity growth, not derailed inflation. And in fact, it is adding to inflation on the margin for salient prices for many consumers, notably electricity costs. And then you have this cold spell on top of it that added to natural gas costs. But all of that is still pushing up prices rather than down, when we're going to get a lot of fiscal stimulus in the beginning of the year as well.
Diane, your work recently has been absolutely brilliant about the fabric of employed America. What is the one thing Wall Street consensus, the 3 zip codes in Manhattan, what's the one thing they get wrong about labor America?
Well, first of all, the overall unemployment rate is not really a good summary statistic right now. We know at the end of the year, those having to accept part-time instead of full-time hit an all-time high. We're now at the place where in the new millennium, for the last 25 years, we've seen, instead of multiple job holders falling as an expansion goes longer, they're now rising. This is part of that labor share of income being eroded, the inequalities we're seeing out there, and the frozen state of the labor market, where those who have a job are clinging on and those who do not have a job are left wanting. I think is very important to understand when you think about things like the U6 measure of unemployment, which gets into that sort of under the hood. That's running around 8.4%, 2.2% above what it was in 2019. And I think those are important issues.
Then quickly here, the model is that the tech bro are taking over America. We've talked about American exceptionalism, but so many people just want to turn around that ugly labor share vector. How would you do that?
Well, it's a difficult thing to do, and certainly with the way that the C-suite and the gap between employees and the C-suite see AI and how it's affecting productivity growth is another issue. We could literally see a payroll recession as the economy booms in 2026. And that is something that I never expected to see out there. I think it's really important to remember, though, that we still have not ameliorated inflation. We still have inflation. And it's much like compounding stock returns that has driven that wedge of wealth higher. Compounding inflation over the last 5 years has left prices out of reach for too many.
You know, that's actually a really interesting line. The lady says that there could be a payroll recession while the economy booms. Basically, like, how would that look? If you had a payroll recession while the economy booms, basically that's like saying the rich are getting richer and the workers are suffering, right? So rich corporations who can do more with less win bigger EPS, stock market keeps booming, and consumers suffer but matter less to GDP, so it doesn't get noticed as much. Kind of interesting argument.
Only makes inflation stick. And as I said, inflation's already compounded to the place where most Americans...
We're 2 minutes away from Powell coming out. We got the bingo board ready to go.
Stocks are somewhat muted after the Fed decided to hold. Usually we're in a holding pattern before the decision. Now we're in a holding pattern afterwards as well. Let's turn back to KKR Financial's Jeff Kilberg, and with due reason, because the press conferences are notoriously volatile. So why lay your bets out before we hear from the chair?
And that's the forward guidance. We really want to understand that forward guidance. What is Fed Chairman Powell going to talk about? He only has a couple more meetings left, Kelly. This is his first and last one of 2026 for the month of January. And will he make it to May of 2026? Will President Trump appoint someone differently? So there's a lot going into this press conference. Couple that with we are seeing 3 of the Mag 7 reporting afterwards. It feels very coiled here, and that's why we're seeing a bit of a stalemate. The word of the day, stalemate.
Okay, but hold on. We're entering year 4 of a bull market. The average return on a bull market in the 4th year after double-digit gains is 14.7%. Doesn't mean we're going to get those gains, but his history is on your side. So the 5th time, by the way, in 100 years, we might have 4 double-digit returns in a row. Is there anything you've heard from Jerome Powell that puts the market rally at risk?
No, not yet. But at the end of the day, what we're seeing in this year 4 of the rally, we're seeing a broadening. The equal-weighted S&P 500 is outperforming, beating the brakes off the S&P 500 total return. And you can attribute that to a lot of the Mag 7 profit-taking we saw in the end of 2025, Sully. But what's interesting in this broadening, 65% of S&P 500 stocks thus far in earnings season are outperforming. So I get excited about the profits. We talk about profits being a more important input to the economy. But yes, what Fed Chairman Powell says or what President Trump says about who's coming in to potentially play the part that he wants of lower interest rates is critically important.
Anybody better for the markets? Reader, Walsh, Waller,
I think Rick Reader is a practitioner. He understands it. Obviously, coming out of BlackRock, he's the guru. So having him control the innovative toolbox more so than one of the others. But they're all great candidates. I don't get into politics, silly, but they're all great candidates. But Rick Reader would be interesting because he could
Powell's
really
got to come out. He usually comes out 30 seconds after. It's what, 20? There he is. It's a purple tie. Let's listen to Good Afternoon.
All the rest of it. So as mentioned, here comes Fed Chair Powell.
Good afternoon.
Yes.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
Yes!
To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
He's keeping it short today.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling, and so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Bullish, very bullish.
Nick Timbers, The Wall Street Journal.
There he is,
Chair
Nicky
Powell,
T,
you
Nicky
generally
Leaks.
avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Let's go. I'll call that a bonus. That's a bonus right there. Let's go.
Michael
Nailed
McKee
it.
from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Shut him down.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that.
Dude, are you kidding me? Are you kidding me? Look what I wrote. Yen question related to the dollar. He reflects to the Treasury.
Diversifying, is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything.
Did he say not my job?
This year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve Leisman, CNBC, and sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows with any precision. Is that you had a follow up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Amira Moakley from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to employment have probably both diminished a bit. So we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically,
I want to see that.
There are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
Oh, if I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
Bullish.
I don't have anything for you on that.
That is bullish.
That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the mandate as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you, a minute ago you said you felt expectations were consistent with your mandate. That the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe.
210.
Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
How do I not have bingo yet?
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that. I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now. Anybody's base case that the next move will be a rate hike. But ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But, right now we're running a very large deficit at essentially full employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not what Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it will be hard to restore the credibility of the institution. If people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important. And the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I'm strongly committed to that, and so are my colleagues.
Archie Hall from The Economist. On that sort of stabilization of the labour market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labour market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And then one more on growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. Consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising productivity. So and we always ask, well, this is going to be different. Is it going to be different? And we don't know.
Wait for it.
And we may, in any case, see in the short term.
We don't know.
Jobs that are being eliminated by the capabilities of AI. We may
Look
see
what I wrote
that.
down.
We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Becky.
Thank you, Chair Powell. Beyi from AFP News Agency.
AFP.
You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this.
Bessa just says the Trump chair pick may come in a week or two. They're delaying it again. Yeah, because Powell's being dovish.
Inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we will be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. You know, geopolitical risk for us is a lot of it is around energy, oil. And so far, we haven't, you know, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. You know, longer than that, it's trade, and you know, the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well,
deflation.
We didn't cut rates today, but you know, it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but you know, there's growth and there's how fast the potential is growing, and at a time of you know, high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output. And it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. You know, GDP was negative. There has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is you know, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, you know, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, you know, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Last question.
Hi, Nicole Goodkind, Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections. And that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here, and like maybe happened.
Did he just say there's a lot of uncertainty at turning points?
Everyone studies those periods, and we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not. We're not. No one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time.
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data, and our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
There we go. Wow, that was awesome. All right, folks, remember coupon code expires at meetkevin.com and HouseHack, but let's go ahead and do a summary recap of all of this and go take advantage of that birthday coupon code. All right, let's get started. Who's ready? I'm ready. All right, I think I'm ready. All right, here we go. Okay. What did Jerome Powell just say? And boy, what signal did we just get from Myron? And boy, I have to give you a spoiler alert and just put it up on screen. This was broadly bullish. I thought Powell would hawk to us today with this hold, but honestly, he was just bullish on this economy. This is almost the most bullish and excited I've seen him about the economy. And I mean, you know, he's an economist, so it's not like he's up there jumping up and down, yippee yappy, like, you know, a Meet Kevin YouTuber kind of personality. But like, I actually thought he was broadly bullish here. Anchored inflation, well-positioned, didn't want to say that the risks between employment and inflation were balanced, but he kind of implied that both of those risks had, he said both of those risks had diminished, and implied that they had both diminished towards sort of a level of balance, but hard to say. He sort of says that, hey, we think that inflation's going to peak out hopefully in the middle of the year, because what they're seeing with inflation is that goods inflation is still rising, and that before we had liberation, before we had tariffs, we ended up getting tariff or just regular inflation down to about 2%. So outside of tariffs, we'd be around 2% inflation. Unfortunately, with goods inflation that we're seeing and services disinflation, like housing rents still coming down, we see PC and core PC sitting around 2.9 to 3%. So still a little bit elevated, and this is obviously what they're fighting, but Powell argues that they're good to hold at this point because the economy is doing well, and that as these inflation numbers hopefully peak out in the summer, that's when we'll have those year-over-year numbers, they should start coming down. When those inflation figures start coming down, it'll open the door again to rate cuts. Now, in my opinion, that's broadly bullish because it essentially says, hey, once we get through this inflation boogeyman because of tariffs, we're good. Now, the votes were really interesting today. Obviously, we didn't end up getting a cut. We got a hold on a vote of 10-2, but there was a little bit of a change in the tune. Rates remained unchanged, but Myron downgraded what he was looking for from 50 basis points to just 25. So even Myron, whom, I always thought when I first heard about Myron that this guy was just a Trump shill, but I came to sort of respect his analysis as he would break down his thesis on inflation in the labor market and otherwise. And I actually think he's very intelligent. And the fact that he downgraded his forecast to just 25 basis points for a cut during this meeting, to me is a sign that even Myron sees that the economy is holding up. In my opinion, this is broadly bullish. This KPMG lady, right before Powell came up, she was on Bloomberg. She's like, what we could see is we could see a payrolls recession while the rest of the economy booms, where you just don't have a lot of payroll growth, but the rest of the economy booms. Powell somewhat touched on this a little bit. He somewhat implied that you could have labor demand that falls essentially to zero, and then you could have labor supply, because of a lack of immigration, essentially fall to zero. And if you have both of those fall to zero, you're kind of in a weird spot, because it's like, is that bad? Technically you have balanced employment at that point. So is that maximum employment? That was his question. In my opinion, what it really signals is that the rich just get richer, right? Workers, they don't get necessarily all the benefits, but companies get to do more with lower expenses, and therefore their earnings per share go up, and hence the stock market and real estate goes up, and that's probably why you see continued spending, which Powell talked about as well. He said, look, people are leaving these negative surveys, and then they turn around and go out and spend. So, what the heck? These surveys are very volatile. We can't really pay attention to them much. Another thing that we saw in the statement, which Powell, in fairness, said, don't read too much into this, but he did say right here, or acknowledged, that they removed this line here, judging that the downside risk to employment rose in recent months. They removed that line. I actually think that removal is bullish. The market doesn't necessarily love that because we want to see rate cuts, but Powell did give us a hint for rate cuts later in the year, said that the base case right now certainly isn't a hike, that there's no base case for a hike in anybody's forecast that he's aware of, and they broadly have consensus to hold and wait. Now, this was predictable because the ADP weekly data and the S&P and PMI reports on labor have been showing us the same thing, that jobs are stabilizing. So this is good because ultimately we don't want to go into a recession. What could obviously knock us over into a recession is if the stock market, for whatever reason, private credit, carry trade, who cares, whatever, fell 20%, then you could accelerate layoffs and then things get unbalanced again. But with the stock market still broadly rising, consumer spending still resilient, we're not seeing a lot of those risks now. Now, I think it makes sense to be cautious, but here's sort of an outline of his dovish tone. He says consumer spending is resilient, housing weak, obviously because of rates. That's what Donald Trump wants to fight. He wants to see rates come down to boost these. Business investment is expanding. The labor market has gone from softening to stabilization. Private payrolls, he says, are at 29,000 per month, and sort of recognizes that right now it seems like we've kind of bottomed out on the unemployment pain. Hopefully it stays that way, obviously. He says, don't read too much into it, though, because it could break in either direction. He does say that the economy right now is on a solid footing for growth, though, and overall we have a stronger forecast for growth in the economy. And usually you would think that economic growth would be conducive to more jobs. That says he does come up with some lore and suggests that if there's GDP data saying things are great and the labor market saying things are bad, usually the labor market wins that argument. So he makes the argument that be careful if the numbers in the labor market start rolling over, this good news could fade away. Now, he makes it really clear that the leftover inflation we're seeing is really just because of tariffs. Although he didn't really come across and slight Donald Trump for that. Kind of just said, hey, these will be one-time transitory is really what we got from him. Which is also interesting because at the same time that he starts saying, hey, one-time price changes, we'll get through this, it's kind of dovish, the economy is doing strong, we didn't get a hawkish Powell. And as a result of us not getting a hawkish Powell, what happened? Scott Bessent. See, I thought you're going to have a hawkish Powell with a hold, and then the stock market would fall, and then Donald Trump would come in and go, nope, we'll just announce Rick. But we got a dovish Powell. We got the hold we expected, but we actually got a really dovish Powell. I see that as bullish. And so what did Bessent do? Bessent comes out and says, we're going to delay the Fed chair decision a week or two. It's not a coincidence that Bessent comes out during Powell's press conference to make the announcement that they're going to delay the Fed chair choice by a week or two, because that probably would have been the venue for them to announce that Rick is going to be the next Fed chair, or whomever. I believe it's likely to be Rick, right? We made a whole video on that yesterday. So I actually think this is broadly positive for the economy. Powell says, hey, we're not going to comment on the carry trade, the yen, the dollar, or gold. He says the Fed's credibility is where it needs to be. We did bingo. I don't understand how I didn't end up getting bingo, but just to go through some of this, we got the good afternoon. We got the year-over-year tariff. Inflation will be visible, and we expect it to come down from there, which would be a bullish case for rate cuts in the future. Inflation expectations anchored. Inflation still above target, but mostly because of those good prices. Data dependent. We got a not my role, which was close enough to not my job. No discussions on rate cuts at this time. So they're not having discussions on rate cuts at this time. They think they're in a good place. And they think they're at a level where interest rates are probably at neutral right now. And so they're going to wait to burn off the rest of that inflation before cutting again. So we might not see rate cuts for a hot minute. It could be 6 to 7 months before we see rate cuts again. We got repeated question. We got on time. Too soon to determine if AI will boost productivity? And even if it is boosting productivity right now, Powell cautions that we're not sure if those productivity gains will last, that those could fade. But at least right now, they see that the labor market is stable. And Powell doubles down and says, look, every time we've seen the labor market start deteriorating, that's when we've acted. He did that in the third quarter of 2024. He did that in the third quarter of 2025. Both of those quarters, we ended up seeing softening by bringing rates down rapidly with a 50 in 2024 and these 3 cuts over here in 2025 in response to the labor market weakening. Now, I don't think that because of these rate cuts, all of a sudden, the labor market slows down. That's convenient. But maybe it's hard to say exactly how fast that transmission of rate policy into the market actually is. Some say it could be very fast these days, but it's highly debated. What we do notice is that the 10-2 is at 66 basis points. 66 basis points is relatively elevated. Usually when we get to about 125, we're in a recession. We've got quite a while to go between then and now. And I mean, we were stable in the 50s for almost, 8 months? So, I mean, if it takes 8 months for every, 10 bips or whatever here to go up, you've got 6 8-month periods. That's a long time. That's divided by, let's see here, 12. We've got, 4 years? Yeah, 4 years. Based on that pace, right? But obviously these things can spike rapidly, just like they did over here during Liberation. We saw a really rapid and sudden spike in these 10-2s. And I think this is always a great place to watch. Now, everybody was expecting that we weren't going to get a cut today, and the bond market's actually been relatively stable on a 10-year basis in response to this. You did have a little bit of a spike during the meeting and when the meeting notes were first published, but really we're right back where we've been almost all day. So really, the key to this economy is making sure that either private credit doesn't implode, the stock market doesn't crash, or the labor market doesn't fall off a cliff. Till then, it's broadly bullish. Obviously, today's my birthday. We got that coupon code expiring. Y'all know about that. I did also send $1 million of new money to my real estate startup, HouseHack, which I'm really excited for. I timed that on my birthday because I thought it was kind of a cool thing. And I think, one day I want to be able to look back at that, in 6 years when I'm 40 or whatever and go, what did I do on my 31st birthday or 34th birthday? Oh, I invested $1 million in HouseHack. Oh, that's good. How has that performance been, right? Anyway, if you want to learn more about that, this video is obviously not a solicitation. Read the offering circular over at househack.com, and then you can use that coupon code at either meetkevin.com or househack.com. But broadly, bullish Powell here. I think it's optimistic, and I honestly think getting a RIC announcement from the Federal Reserve is also bullish. So I have nothing bearish to take away from this meeting at all. We know what the warning signs are, but this is the most clearly bullish on the economy I think I've ever seen Powell, and I think Powell could not be happier because he will take this into his legacy and say, see, I helped you guys get from insane inflation, thanks to congressional money printing, Fed obviously enabled that, into a bull market and into substantial growth. So now we got to see, is it going to hold? Well, that remains to be seen. But we'll be reporting on it all the time. Okay, cool. So that gives us a breakdown of Powie Wowie. Let's go listen here. We're going to switch over to Tesla earnings next here. Let's go listen in here for a moment.
Wants it, but the next person coming in, not much pricing in the market for additional cuts other than this 50 basis points out there, plus or minus.
A sign of the times, no doubt, that the very first question, as I mentioned at the very top of coming on the air here after Chair Powell was finished, was that the question was about why he attended the Lisa Cook hearing, in which he said he thought this was, quote, perhaps the most important legal case in the Fed's history. I thought it was interesting how he responded to the question, what advice would you give to your successor? In which he emphatically said, stay out of elected politics, don't do it. And then gave an impassioned defense, I thought, of the Fed staff. What'd you make of that?
Well, Scott, I came in with about a half a dozen questions I wanted to ask him about the video that he made January 11th about issues about Fed independence. It seemed to me like he shut the door on those, and I did have a bunch of questions about policy, so I asked him that. But I think he said what he had to say in the video about Fed independence. He did what he did, and his actions spoke when he showed up at the Lisa Cook hearing. I don't think Powell wants to be where he is right now. But the reality is the Department of Justice has launched a criminal investigation.
I actually think he's pretty satisfied where he is right now.
Investigation is an attempt to impinge upon the Federal Reserve's independence, and he wants to preserve that. Part of the steady ship that I think he wants to give the helm to the successor is one that is not under constant attack, one where the president has the right to come in and fire governors. I think that's what Powell wants to hand off to his successor.
Good to talk to you, Steve. Thank you. That's Steve Leisman, our senior economic correspondent. As we go back to Jeffrey Gundlach, and that's what I'd like to ask you, Jeffrey, what do you make of this investigation into Chair Powell and the Fed? What do you make of the unprecedented manner in which he responded to it a few weeks ago, and then the advice he gives to whoever his successor will be? Stay out of elected politics. Don't do it.
Well, it just seems part of where we are right now societally. I mean, we've got all kinds of people making all kinds of videos and making all kinds of threats against other people. It's just a bad moment for that. And I think Jay Powell got himself caught up with that and regrets it. I think a lot of people putting out these videos probably regret it. So it's just a sign of the times. What's interesting, I thought Steve sort of alluded to the helm of the ship. I think that one of the things that made Jay Powell seem sanguine, I like that word that you use, sanguine, is that the GDP now has come out at surprisingly strong levels. I mean, a few months ago, we were worried about unemployment, and now we've decided that we have an explanation for that because of the global balance of no hiring, but no labor force growth. But GDP now, GDP during 2025, the first quarter was officially negative on a real GDP basis. And then it turned positive in Q2, and then got even better with a 4 handle. At least that's where it is now. It might get revised in Q3. And now GDP now of the Atlanta Fed is at 5.4 for the fourth quarter. Now, that might be a little early, but if you put that all together, if we go with that 5.4 GDP now and use the numbers as they stand presently for the first 3 quarters, real GDP for 2025 will be 3.2%. Nominal GDP will be 6.3% if the inflation forecasts are right. So the GDP deflator, that means, would be rising over 3%. That is an elevated level of inflation versus a 2% target. And we've been going on for 5 years now with inflation above 2%. And if inflation runs at 3%, which is what it's running at now, over a 15-year period, you would have a 56% increase in the price level. If you run at 2% over 15 years, you would be up only 35%. So 1% difference doesn't sound like much. When you accumulate it over a not terribly long time period of just 15 years, you end up getting over a 20% difference in the level of the price rate. So there is a big difference between 2 and 3%. So we do have an elevated level there. But if you look back at the past 5 years, the inflation rate has been 3.9%. So that's what people are still feeling when it comes to inflation. They feel that prices are elevated. Yes, gas has come down. That's in parts of the country, it's come down phenomenally. You no longer hear about the price of eggs. Egg prices are lowest they've been as low as they've been any time in years. But still, you have the K-shaped economy, which is undeniable. We look at GDP and it looks great, but it's pockets that are doing that. You know, it's a lot of this of business investment with AI build-outs and the like, and it's a lot of high-end consumer spending. So I like to admonish investment analysts to say, don't always just look at aggregated data, because as the economy gets so much more bifurcated and new technologies catch people's imagination and have a lot of capex investment, that doesn't mean that just because on average things are doing well, there's a huge dispersion as you go quartile by quartile.
Yeah, okay, so there's dispersion, but who cares? Like, isn't that, I mean, it's only a problem if one of those things are capable of bringing the entire economy down. We understand there's a wealth gap growing. That's a problem. Talk about that. But I don't know, I think Gundlach here, I'm trying to understand what he's so fussy about. You know, it's like, oh yeah, well, parts of the economy are bad. Okay, well, parts of the economy are great. Yeah, it could collapse if jobs roll over, but they're not rolling over. So I don't know what this guy's on about.
And we're starting to see signs that might be becoming more probable. We go all the way back to Liz Truss with the blow up in the gilt bond market when they started to run indications they were going to run even higher and higher deficit spending, the bond market collapsed. And then we saw a revolt last week in the Japanese 40-year bond market, where the yield went up 25 basis points in a day, and then all of a sudden, the intervention comes in. And so I think we're getting closer and closer to that moment where intervention becomes more of a choice on the menu of government policies. And that's why one reason that, although I'm negative on long-term Treasury bonds still, even though that trade has stalled out for the time being, I'm thinking more and more about what will happen if those rates continue to be stubborn. Will they try to get those rates down to stimulate the affordability of housing, maybe low?
Right, with yield curve control. That's why they want Rick.
Well, what it would mean is potentially a very violent rally in the long-term part of the Treasury bond market. I'm not positioned for that. I don't intend on positioning for that.
That would push TLT to the moon, basically, is what he's saying.
Becoming more and more of an issue that something funny is going to happen with government finances and the financing of the bond market. And we've seen tells on this building up over the past 5 years.
It's interesting that you went there because I wanted to ask you more specifically about it. If you look at what's happened with the spike in Japanese.
All I know is I'm bullish, so I ended up getting some tendies. I got chicken tendies right here. See these chicken tendies? We got tendies, boys and girls.
They put it, and they looked at the historic spike in Japanese yields. They try and extrapolate from there and suggest that it's a global story. And I think you may agree with this. You have the threat of more tariffs. You have obviously where the deficit is. You have a surge in corporate bond sales, partly tied to the AI build out. A lot of leverage in the system as a result of that in and of itself, which has exposed the financial system to shocks just like what happened in Japan and could easily happen elsewhere, to which they are tactically underweight long-term Japanese bonds and also long-term U.S. treasuries, just like it sounds like you are, and have real no...
All right, blah, blah, blah. It's been a little boring, honestly. Let's see what the doomers say.
Describe to our audiences here, worldwide, why a 5% all-American unemployment rate now was 7% unemployment rate back when.
Yeah, it's structurally shifted down over time. In which case, because the labor market dynamics have changed materially. What keeps us in full employment today is not the same as what we were. So therefore, if we're sitting at 5%, that's a much riskier environment than what it would have been.
John, you live this.
Why is that risky?
The auto business in the United Kingdom. I just watched the destruction of Eastman Kodak.
She's talking about the delta, like if we go up 0.5% in the unemployment. Got it. Yeah.
It's gone when it was a 7% unemployment, and now we're walking around happy with a 5% number.
Well, I think to build on that, Tom, I think we have to confront a new risk. You bring up the old manufacturing hubs, the basis of, say, the United Kingdom, and for that matter, Detroit here in the United States. That's what globalization did to manufacturing. And the risk now that we have to confront in the West, at least, is whether AI is going to do that to services. What globalization did to manufacturing. Do you think there was a brief acknowledgement there from the chairman in that news conference, just to give a little nod to the prospect of a reduction in jobs, at least in the short term, because of this new technology?
Yeah, I think that's fair. And I guess that is the risk in the future, that we end up with a structural shift higher. Because before it was, a backdrop where globalization and manufacturing helped to sort of bring the economy into, today we're a much more developed economy than we were, of course. That's the risk that we see into the future, that we end up with a structurally slightly higher unemployment rate. But I'm not convinced that it will end up being quite that. I think there's an environment where you end up with job gains as a result.
I think that's the problem being a policymaker right now. I'm not convinced of anything, and I'm not sure they are either. Things have changed. We asked Bob Michael at JP Morgan, your former colleague, the question a little bit earlier. What's more important for the outlook for the economy now? The spending numbers from these big names that report in about 20 minutes time in the next hour, or the payrolls report that we get every first Friday of the month. And he's pointing to capex from the major tech players in the United States. That has completely changed the conversation. How do you set policy with traditional macro indicators when what's driving the economy right now is something else?
So I think What's driving markets is, of course, AI, and that kind of is required to continue moving ahead in order for the U.S. economy to be okay. If tech capex started to slow down materially as a result of AI, there was for whatever reason, they decided the return on that investment wasn't quite as high. The U.S. economy would still be okay. We're not at a place where AI is so ingrained and important into the economy that if it were to...
I think this lady has lost it.
...would be in big trouble. We estimate that the domestic share of capex, of AI-related capex, is about 1.5% of GDP. Housing is, a little over 3%, so it's not that ingrained yet. In a couple of years...
I don't think she's counting all of the second-order effects. I think she's nuts. Without AI, we'd be in a recession.
You're fine. And that is, if you look at the labor upset that's out there, John and I are overwhelmed every day with emails talking about fancy people at BlackRock and Wolf Research, talking about AI this, AI that. When does the central bank just have to address with these two Americas? When do they address two Americas?
It's a great conversation. It came up again in the press conference, and I think Powell did a really nice job in addressing what we don't really know, and we don't know what that impact is going to be. But he also critically added this comment on, this is not something that Fed policy is well suited to, right? So if we want to address labor market frictions and disruptions, that's much better suited to other government policies than the broad cudgel of monetary policy. I want to just come back to your earlier conversation and just make one other point, that the wealth effect that we were discussing, it's a double-edged sword. So while the capex impact that Stephanie was talking about, point well taken, the wealth effect, if you were to have, a challenge to the valuations or concerns or a repricing, the benefits that we've seen can also, turn into headwinds. And so we should just be kind of aware of that fact of the AI micro impact to the macro economy.
Jeff, I just want to avoid the rant, but we have got a few more minutes. I get frustrated when we say things like the Fed can't do things about certain situations when they've contributed to them themselves. And I'm talking specifically about, say, inequality and the K-shaped economy. Jeff, haven't they contributed to that problem?
Yeah, it's one of my favorite discussions. And, it goes back.
Well, the Fed can't really deal with providing stimulus directly to lower-end consumers. The Fed operates through a top-down capitalistic point of view. It's impossible to assume that the Fed can pull it off the other way around because they've never been able to before. All right. Let's see here. We are looking at... what do we got? We are looking at 15 minutes to go until Tesla, Microsoft, and Meta. These are going to be pretty big. Let's go see how they're performing right now. Let's go zoom out a little bit. So Meta at 671. It's at one heck of an inflection position. Look at this. Let's see. Let's draw that with a gray line. It's not the best. Let me see if something like that. All right, something like that. Okay. Maybe even a little tighter in at the bottom. There we go. Good. Okay. Then, let's go grab from down here. Come on, mouse pad. Look at that. Holy smokes, man. This puts Meta in a really interesting spot, I think. This is sort of a make or break earnings right here. That's going to be fascinating. Tesla is right at the 433 line. Literally holding it all day long. And then we've got MSFT. They have been on the day chart coming down as well a little bit. Let's go see. Let's see here. They've come back over the last couple days. They've actually come down a little bit because it bounced off of about 450. Earnings calendar. What do we have today? We have, ServiceNow reports as well. ServiceNow and IBM. All right, so we'll have to put them up as well. ServiceNow, IBM. Well, that's going to be fun. This is going to be a lot of earnings. All right.
Full team coverage for you today. Steve Kovac looking at Microsoft. Julia Boorstin is watching Meta. And Phil LeBeau, of course, on the case with Tesla. Two-star analysts on the desk with me here at Post 9. Wedbush's Dan Ives, Evercore's Mark Mahaney, and we have two shareholders at the ready as well. Hightower Stephanie Link. She holds Meta. Capital Area Planning's Malcolm Etheridge. He holds Microsoft. Mr. Kovac, we begin with you. The most important thing to know on Microsoft.
Oh, man, there are so many things to know. I can't give you just one. Let's start, though, with Azure growth. Microsoft, as we saw last time, was expecting 37% growth. The street is looking for 39% growth. Also, another thing to watch is RPO. That's remaining performance obligations and the growth there. We saw that go up 51% last quarter. That's expected to grow more after that recapitalization moment with the OpenAI deal. We're also going to be looking at Copilot subscription and usage data, if there's anything there, and also capital expenditures. Now, they did not give guidance last time for what capex would be. They just said it was 35 billion in that previous quarter, so we'll get an actual number, but do not expect guidance there. And then, of course, like I said, that deal with OpenAI from October, we learned that Microsoft had that 27% ownership stake in the public benefit corp of OpenAI. That's valued at $135 billion, and that whole recapitalization effort is going to play in to the financials here in this report, Scott.
All right, Steve, this is your appetizer before your apple entree tomorrow. Thank you, Steve Kovac. Julia Boorstin now with Meta, which needs to do something different, at least the stock does, than it did last quarter.
Well, the big number to watch, and I think the big number that will influence the stock, is the company's 2026 capex guidance. It's expected to be over $110 billion, according to FactSet estimates. JP Morgan saying they expect outsized spend this year, but they are looking for greater commitment to financial targets. Those shares are up about 10% in the past week on some bullish analyst notes. Comments about increasing spending did spark investor concerns last quarter, and shares are still down about 11% since its last earnings report. As the company focuses on AI, investors are looking to understand how...
Wow, look at Carvana. Double bounce, bro. Double bounce on my line. Wow. This is just a fib, isn't it? Yeah, it is. That's crazy.
5:30, but we will get a snapshot of where the company is at the end of 2025 and at least a peek into what it's expecting for 2026. For the quarter, they are expected to report a profit of 45 cents a share, with revenue coming in just under $25 billion. As you take a look at Tesla over the last 3 months, one interesting thing to keep in mind, we might see the first annual decline in Tesla revenue the company has ever experienced. When we get the final fourth quarter numbers added in with the rest, we'll see what all of 25 comes out at. But as I mentioned, the 26 focus, it's all about autonomous vehicles, full self-driving, robotaxi, the growth in those two areas, as well as the development of the Optimus humanoid robot. 5:30 is when we will hear...
The earnings call is all that matters today. And Elon's going to be mega bullish. So it's like, you can't really have bad earnings.
Mr. Mahaney, welcome. Good to be here in person all that often, so I'm going to begin with you because I feel like Meta, this is really the moment. Certainly after what happened after last quarter in the stock slide. 110 billion capex guide. If that is the number, what happens to the number that investors care about most, the stock price?
I think the capex number is going to be greater than that. I think they're also going to give you total expense guidance for the full year. Street's got about 150 billion in their models. I think it's going to be greater than that. Then the question is going to be, do they have enough revenue upside to offset? That's what's going to be a little bit of a disappointment. So they're going to have to print something like 22%, maybe 23% revenue growth. And if they guide for that for the full year, I think the stock kind of holds. We're at 22, 23 times earnings. I think we're range bound 20 to 25. The PE multiple, that's what I think that's the range. And I don't really see a big move in the stock one way or the other. If I had to guess, my guess is it goes up modestly.
Why do you think the stock reacted the way that it did? As we show you on the screen, you could see the big drop off after last quarter's numbers hit. What was the major issue? And it doesn't sound like if investors were overly worried about Zuckerberg spending, that they're going to be relieved of that anytime soon.
I don't think they will be. But we already had that surprise last quarter, and we're down at a lower 20s multiple. So I think some of this expense fear is already de-risked into the stock. Doesn't mean the stock trades up, but what you need to then do is you need your big two catalyst. You need to be able to talk about moderating expense growth. I don't think we get that kind of language from the company until 6 months from now, 9 months from now. And then you need a product cycle. So you're spending all this money. What are we getting for it as investors? And I think we're going to get that product.
There we go. I opened up poverty chat again. I think the spammer guys are gone.
Been making it a lot more engaging or addictive or attractive. But I think it's one of those things that's going to break through for the stock.
Dan, you cover it as well. Do you agree with what Mark said?
Look, I agree. I mean, 100%. Obviously, he always has great thoughts. Mahaney, I think my view is that this is really going to be, from a digital advertising perspective, it's our view. AI is going to...
I can't stand this guy. Paige Schill from Wedbush, but he's such a loud character. People love him because you can't be bearish with this guy. Things only go up. They only go up. Oh my gosh. Those wings were too hot. Woo! I feel like some of those Wingstop wings were like sriracha sauce or something. Well, it's not the best food to have on a live stream. Oh man, birthday wings. Woo, boy. All right. Well, earnings are on deck. It's gonna be really fun. Gonna get a lot of news here. Let's see here. What is this? Denmark. U.S. met on Wednesday to discuss Arctic security. Oh, good. And then shout out to those of you who have been joining. Oh, I haven't done this in a while. I should do this again. We got Jagger, Meet Kevin membership. Ryan, Meet Kevin membership. Michelle, Meet Kevin membership. Myron, ReInvestAI. Ismael, Meet Kevin membership. Gene, ReInvestAI. Francesco, Meet Kevin membership. Manuel, Meet Kevin membership. Kareem, Meet Kevin membership. Michael, Meet Kevin membership. Welcome aboard. Thank you, those of you joining. That is using that birthday coupon code. All right, earnings now 6 minutes to the close, probably about 11 minutes to earnings. Microsoft, Meta, Tesla. It's gonna be fun. It's gonna be fun. All right, what do we got over here?
In the running, how closely are you watching this from the perspective of a portfolio manager?
I mean, it's just so volatile. I don't know if you look at the poly markets, they're very popular these days. People like betting on everything, up, down, left, right. And Rick Reeder's
congrats on putting 100K there in Robinhood. Yeah, I mean, there are a lot of great stocks right now. Obviously, I think the play right now is more diversification rather than less. Like, I like really concentrating on stocks when things are like dead low. Like, big bet on Nvidia in the fall of 2022, for example, when it's in like a recessionary level. Things aren't really like rock bottom prices for a lot of stocks right now. The whole market is relatively elevated. So I kind of look at that and go, you pick a basket, you could even go, I mean, what you do is obviously on you. I can't give you personalized financial advice. But broadly, I go, I don't see a problem with diversifying into Qs or the SPY, or you pick, 20 stocks that you really like. I prefer that in these times in the market. Certainly seeing some risks go away, but there's still plenty of risks sitting around, so be a little cautious. All right, what else do we have here on the deals?
Here, credit markets, spreads are tight, but with earnings strong, I think credit can perform well. So it's kind of an earn your carry market in fixed income this year.
Any concerns, Ken, about some of the moves that we've seen in the dollar, and more importantly, the tone coming out of the White House with regards to what at least appears to be an avocation or at least some comfort with softness in the dollar? I thought Jay Powell kind of brushing that off, saying that's not really the Fed's purview. That's basically the Treasury's decision here. Any concern, any overlap?
we've been talking about adding non-dollar diversification to your both fixed income and equity portfolios for almost a year now, and it didn't really work for a while until maybe middle of last year, and we still think that's a good idea.
That's nice. Somebody says you should take 1,500 of that to buy the Meet Kevin membership. That's awesome.
Along with continued issuance of debt and fiscal concerns, I think it makes sense for investors to diversify both fixed income and equity portfolios.
Absolutely. And you have to imagine that dollar volatility, really FX volatility in general, will continue, Ken. But I want to go back to the point that you made when it comes to credit markets at this point. You called it sort of an earn your carry type of market. Where can you best do that right now when you take a look across the landscape?
Well, our favorite part of the credit market is probably shorter duration, where you can be at the front end of the curve. You don't have to take that much interest rate risk. You don't have to take much spread duration, which is the sensitivity of a bond to movements and spreads. So shorter duration type assets where you can still pick up, maybe 100, 200 basis points over treasuries. I think it's a nice place to kind of hide out until we get some vol. Hopefully we do get some vol. It's been kind of a boring market. Equities just seem to...
It kind of has been. I think what he's saying is wait for some vol, is like chill somewhere and wait for some good buying opportunities. I don't actually disagree with that. I keep saying, like, hey, we've got cash sitting around. Like, we don't mind if we can get, if there's some volatility on geopolitics because Trump strikes Iran this weekend, or the Supreme Court tariff drama, those are sort of your remaining catalysts, right? Geopolitics, Supreme Court, shutdown is, I don't think, a big burger. I don't think Trump wants another shutdown right now. He wanted one last time and he got it. But I don't think Trump has the appetite for another shutdown here in midterms. Or during a midterms year. So what do we really have for remaining caddies? Let's write them down. We've got, so these are remaining catalysts to find dips to buy. Are going to be Supreme Court killing AIPA, very bullish catalyst, by the uncertainty that follows. Obviously not personalized advice, right? Then I believe geopolitics, so Iran strikes, likely. Geopolitics are pretty much always a buy the dip. What other catalyst do we have? Venezuela. Oops, spell it correctly. Venezuela. Cuba. Buy the dip. What else? Weak jobs. This is the only catalyst for caution, right? Not a clear buy the dip. If there's a layoff wave could be a sell the rip, right? Sell the rip. And then not worried about inflation. Inflation should continue to disinflate. I don't know. Fed share choice. Fed Rick is bullish by the dip, right? Like, I'm having a hard time. I mean, there's private credit with bad catalyst.
Mark Mahaney, it's great to see you here. Thanks for being here. Dan Ives, of course, you as well. Steph and Malcolm, thank you, as always. Well, the moment of truth is just moments away. The bell rings, and that sends us closer to these mega cap earnings. I'll send it into overtime with Melissa and Mike.
The bell's bringing an end to the trading day at the NYSE. The founders and investors representing 30 years of Silicon Alley. And at the NASDAQ, it's America Needs You doing the honors. Welcome to Closing Bell Overtime, live from Studio B at the NASDAQ market site. I'm Melissa Lee alongside Mike Santo.
Yeah, so here's my catalyst map. Basically, AIPA is buy. Well, we'll do green is buy, and yellow is caution. You know, pretty much everything here is a buy, with the exception of layoffs, right? All right, let's go see earnings. Let's see here. Oh. Did Microsoft already release? because I just see a giant red candlestick. It's only about 3% though. Microsoft, yep. Q2, it beats estimates. Cloud revenue crossed $50 billion this quarter. Azure cloud revenue meet estimates at 38%. Intelligent Cloud comes in better than expected at $32.91 billion. This is good, dude. They raised guidance. Q2 revenue came in at no guidance yet. Q2 revenue came in at $81.2 billion versus $80.3. This is good. Why is it going down? The numbers are good. Meta numbers. Reality Labs loses a little bit more money on Reality Labs than expected. Family of apps revenue beats $58.9 billion versus an estimate of $57.4. That's a beat. Reality Labs revenue misses slightly at $955 million versus $962. Earnings per share, $8.88. Q4 revenue comes in $59.89 billion. That's a beat over the $58.42 expected. Ad revenue coming in at $58.14 billion. Expectation was $56.7. That's another beat. Capex, capex $125 billion at the midpoint. The estimate was $110. Q1 forecast beat. That's a big beat on the forecast. I've got a forecast here of 55 divided by 51.2. I got a 7.4% beat on Meta's forecast, but the capex comes in at 125 over 100. Capex comes in 25% more than expected. Is that right? That can't be right. Hold on. 125 divided by 110. Sorry, 13.6% more than expected. Yeah, that didn't sound right when I said it. Sorry. Earnings. We'll just write down a couple of these notes really quickly so we don't forget and we don't have to run the math again. So Meta forecast beats by 7% on Q1 revenue, beats Q4 revenue, and then we have forecast $125 billion midpoint on AI capex, which is 13.6% above expectations. That's going to be the red flag that pisses people off because people don't want to see all this spending without revenue, right? So, all right, so we'll have to watch that. Then that was Meta. Dude, Microsoft is down 7%, dude. Holy smokes. Why? Microsoft 365 seats grew 6%. Azure grew fine. No forecast here. I think they usually do that on the earnings call. And they don't have a capex mention here. So I don't know what the beef is over here. Tesla numbers are not out yet, but we're going to go through those in just a moment. So those will be really interesting, obviously. We should have Tesla earnings in about 10 seconds or so, if they're on time. Oh, Tesla EPS beats, adjusted EPS beats. 50 cents versus 45. 50 cents of EPS. Tesla adjusted EPS beats 50 cents versus 45 cents expected. Congrats, Tesla. That's awesome. Obviously, the expectations are that a lot of this is going to be down, but that's very good for Tesla. Okay. I've got gross margin. Wow! Gross margin beats too. This is a good report. Gross margin comes in at 20.1% versus 17.1% expected. So gross margin 20.1% versus 17.1% expected. And then we have you have revenue missed though. Revenue missed, but that was expected. Rev misses at 24.9 billion versus 25.11 bill. Operating income, still, these numbers are actually good, honestly. Operating income, 1.41 billion. Op income versus 1.32 billion expected. And then we had free cash flow comes in well as well at 1.42 billion versus 1.59 billion expected. So free cash flow and revenue a little bit light, but honestly, for what people thought was going to be hell, that's very good. This is excellent for Tesla, frankly. These are excellent numbers. Now we'll go through these in detail here in just a moment, but great numbers, Tesla. Really good. And Meta and Microsoft beat as well. So this whole, temporary sell-off there on Microsoft is just insane. Let's see here. IR page. Do we have the press? We have the shareholder deck. I'm afraid I can't do that. Error 404 on the shareholder deck. That's funny. Okay. So we're just waiting for that shareholder deck to load here. Looks like it is an error 404 right now. All right, no problem. Tesla to invest further in clean transport, infrastructure. Yep. Let's see here. Yeah, Tesla's doing fantastic. Fat green candle. I'll tell you, these numbers were good. Cybercab, Semi, and Megapack 3 on schedule for 2026. It's great, dude. That's great. Cybercab, Semi, Megapack 3 on schedule to invest further in robotic infrastructure. I mean, this is literally exactly what everybody wants to hear who's investing in Tesla. This is... If people want to see the Cybercab this year, 6 new production lines across products. So not sure what they're referencing there. And do we have the shareholder deck? Still no shareholder deck. Just error 404ing. I think they linked it a little oopsie doopsies. But that's all right. So, shares, let's see here. We saw the adjusted EPS B. We've got... Still waiting for more on Tesla. We'll come back. Whirlpool comes in with free cash flow of 450 mil for 2026. Expectations were 350 million. That's better than expected. Q 2025 revenue is coming in a little lighter than expected for Whirlpool. Ongoing EPS about $7 versus $7.23 expected. So a little light at Whirlpool. FICO's not out yet. ServiceNow is not out yet. I've got Microsoft. Snowflake, Datadog follow Microsoft lower. Microsoft quarter includes net gains from investment in OpenAI. Oh, how interesting. So Microsoft, was able to boost their earnings due to reported paper gains from OpenAI. It's the circle continuing. Auto gross margin ex credit 17.9%. Wow. That's great. That's really good, Tesla. Fantastic. Let me see if I can get their slide deck yet, because I keep getting error 404 here. Yep, nope. Let's try like a private browser or something like that. Nope. Huh. All right. Tesla in pact to invest $2 billion to buy... No! People voted this shit down. What the hell? Tesla in pact to invest $2 billion to buy Series E shares of XAI. People literally voted it down. What the hell? People said don't do it, and now you're going to put $2 billion into XAI. What the hell? That's dumb, dude. That's dumb. That stuff pisses me off. You're not even listening to the voters. I don't know. Whatever. All right, let's see what else is going on. Did Now come out? All right, let's see what's going on with Now. Now, ServiceNow sees revenue of 15.3 to 15.7, 2026. Board authorizes $5 billion share repurchase program. ServiceNow expands buyback program by $5 billion. Adjusted EPS 92 cents versus 89. Subscription revenue beat. So ServiceNow beats. ServiceNow just beat. And then... Okay. Yeah. Yeah, see, it didn't pass. See, look. In November of 2025, shareholders voted on a proposal for the company to invest in XAI. More voted for than against at 38% versus 33%, but a significant number abstained. Because Tesla's bylaws often count abstentions as votes against, the proposal did not pass, though the board will review the advisory vote. So basically, they technically didn't get enough to make it happen, but then they looked at it and go, whatever, we'll do it anyway because, you know, more people voted for than against it. How fascinating. Yeah, and look at that. Now you're kind of reversing some of that euphoria we had on Tesla after, because the Tesla earnings were good, man. I'm surprised. Let's go to ServiceNow. ServiceNow. What do we have here? So Microsoft. Oh, is the deck up now? Thank you. There it is. Deck's up. Okay. I'm really interested to see these numbers. All right, let's see what we got. Let's get right into the financials, right into the weeds. All right, so here's our cash flow. All right, so I've got capex, capital expenditures, I've got at 2.9. Here are my cash flows from operations here. I've got digital asset gain or loss. Digital asset gain or loss. Added that back in to net income. So this is an add back to net income. So those are probably Bitcoin losses. Previously reported periods have been recast. So that's probably a loss that they added back in because it's a paper loss. Okay, that's our capex. Net cash from financing, net flows of debt activities. That's some pay down, non-controlling interest, solar. Okay, so we got some debt pay down here. That's good. I've got total assets. Let's take a look at what we got here. Cash, 44 billion, keeps growing. That's really nice. Accounts receivable are fantastic. Inventory, 7.6. That's quite a lot of inventory. And if I go to total liabilities, where are my current liabilities? Current liabilities, I've got 31.7. Deferred revs of 16. I got about 29. About 30. 30 billion in bills. 30 billion in bills. And then I have 44 bill cash plus 12 bill AR, which is great. Total fine capitalization. 2 billion into XAI, despite 38% vote for, 33% against, and then obviously board typically taking abstentions, 17%, as no votes. So a little bit of a change there. Abstentions. There we go. Okay. Okay, how's our revenue over here? So here we've got automotive sales, obviously very low for a Q4 over here. So not great. They still booked regulatory credits of $542 million. So they're still getting these credits. And energy generation generated about $3.8 billion, which is really nice growth over the 3 that we had over here. That's almost 30% growth. Services is growing. So our gross profit over here, I wonder how much FSD revenue they recognized, if they could say. FSD. Well, we'll just read through it here. So we saw the removal of the safety monitors. Now they're monitoring it from behind. Let's see. Critical year, laid the foundation for robotaxi service. Began the installation of our cyber cab lines and fine-tuned our production-primed Optimus design. Okay. So our approach to autonomous vehicles and humanoid robotics mirrors the way we approach electric vehicles and energy storage. Vertical integration, economies of scale. 2025, we completed a refresh of our vehicles. Right, with additional variants. Right, but not new models. We believe maintaining an optimized, efficient product portfolio with a focus on long-range, best-in-class software and economy is the correct strategy. No! Damn it! This is basically saying no new models. AKA no new models. Other than, the Cybercab, obviously. That's a bummer. That's a little bit of a bummer, honestly. I mean, it's not like you're expecting product announcements on these things, but... Alright, so we looked at some of this already. We know we're down. Yeah, total automotive revenues are down 11% year over year, which isn't great. But their total revenue is only down 3%. Still, for the multiple they have, it's pretty remarkable. But whatever. Free cash flow is also down 30% year over year. I've got capital expenditures down 14% year over year, though their cash is up nicely, up 21% in cash. So they definitely have some nice dollar hobbles, right? So okay, let's see here. Then we've got other models. Other models down 48%. Wow. That's a lot. That's a lot on the other model side. Cybertruck did nothing. The Cybertruck probably killed their desire to do new models. A lot of Tesla sales still got the EV tax credit last quarter. How'd they do that? Yeah. No, these numbers, even Model 3 and Y were down 14%. That's production. Production is -3. Deliveries are even worse, dude. -16% on deliveries. Ouch. Right? -16% deliveries. Ouch. So... price is basically held up. Oh, man. Total production. Tesla locations. Automotive. Tooling. Okay, so they reduced the capacity for the Cybertruck. I don't know if they did. I thought this used to be bigger, but maybe not. And now they've thrown this stuff over here. They put Optimus in construction. Construction for more mega packs. Wait, Roadster design development. I mean, that's been in design development forever. Cybercab tooling out the equipment to do it. Same thing with the Tesla Semi. Yeah, those are Tesla Semi we've been waiting for a long time. Huh. AI training, Cortex, lithium refining. I'm not sure why they're getting into lithium refining personally. I mean, like, lithium prices have fallen so much. I think it's because they started getting into lithium refining. They feel like they have to stay in it. But, let's see here. Simpler, cheaper, more environmental process. Refining, we begin to produce Model Ys with 4680s. Not sure why you want to do that. It's more expensive. We've doubled our on-site compute in Texas in terms of H100 equivalents. Okay, so, but you could buy a Blackwell chip and one might represent 4, right? So I that's a funny way to word that. Megapack 3, 2026. Well, I wonder how their margins were on this. Let me see here. Oh, let me also write down some of the suit comments. So some of the comments from the suits are Tesla planned mega charger network for semis 2026. That's kind of cool. You know, semi trucks to be able to charge. And you need the charging infrastructure to sell these puppies, you know. Let's see here. Global vehicle inventories are up to 15 days. Okay, that's interesting. Inventories up to 15 days from 10. Yeah, not a huge surprise because of the expiring credits. Okay, there's a broader part of Master Plan Part 4 where Tesla and I entered into a framework builds upon the existing relationship for AI collaborations. Some form, okay. XAI 2 billion. So they're framing it as like a contract. XAI being framed as a contract rather than investment, a pact to trade AI services. Okay, that's an interesting way to try to get around the $2 billion. I really think Elon needs the money. I personally really think Elon needs the money to keep funding Grok, and that's why. You know, SpaceX invests in Grok. Now Tesla, Elon hinting at selling Tesla shares to pay taxes to be fair, which is stupid. He needs the money. And then, you know, SpaceX IPO. Okay. All right. So those are just some notes there. Okay. Interesting. So then we have let's see what we have here. We aim to maximize capital efficiency by scaling training compute judiciously. Okay. Scaling training compute judiciously. That's an interesting word. Lithium refining is in pilot production. I don't really care about that. I like that they grew the charging network 19%. That's good. I think we need more chargers. Continue to enhance FSD. FP14 offers unparalleled. Yeah, 14 is pretty good. We'll say in-house design chips, production plan for 2027, 28. They'll be old by then. You know, those will be old by then. So, you know, I'll pick a new name, I guess. Robotaxi app no longer waitlist. Over-the-air updates. Grok now supports navigation commands. Okay. Oh, they're taking after the NVIDIA. They're like, here, copy what NVIDIA's doing with how they make their chips and demonstrate their chips. That's funny. FSD supervised in Korea. Oh, that's great. That's great. In South Korea. I like hearing that. Let's see here. Expand insurance. Other updates. Here it is. $2 billion to acquire Series E preferreds. Let's see. Built upon the existing relationship for AI collaborations. Yeah. Alright, whatever. I mean, they got the cash, so whatever. It's not gonna make a difference. Pictures. Cute, whatever. We've gone through the financial statements. How are the energy margins? Energy and storage. Oh, I think it's that one. Yes. Those were the expenses. So that means we had... This margin should actually be pretty good. What, 28%? 2739 divided by 3837 equals... Wow! 28.6%. I just mental mathed that. That's cool. 28... Let's write that down. 28.6%. That's very good. Let's see here. I mean, yeah. Good for Tesla. You know? Definitely nowhere near as bad as feared. So, broadly, that's good. Microsoft's only down about 2, or, what's it called? 3.7 now? Meta, back to 700. Let's go. Let's go. And then ServiceNow tanking 6%. Wow. Let's go Meta. Very cool. Well, we got some earnings calls to listen to, huh? Anyway. So, I'll listen to the earnings calls, and I'll probably do some kind of recap or put together. But I got to take off. So thank you again to everybody who's been joining the Meet Kevin membership and the ReInvestAI that we're selling over at househack.com and meetkevin.com. Use that coupon code BDAY. If you have any questions for bundling up, remember you could always email us at staff@meetkevin.com. And appreciate y'all being here. So we'll see you in the next one. Goodbye, folks.